And there you go, legend into week 5. And what a journey, what an adventure it has been already. So you received majority of the knowledge so far, and at this week, it's most essential to reflect on everything you learned so far, because everything it can be a little bit overwhelming, as every week literally had something new to it. Like we started, of course, with week 1, normal introduction to the markets, the force behind the market, what is liquidity, how to use emotions, money, and all the other aspects against you, what's the retail traps. We walked through the whole basic master map, meaning like all the basics you should understand, like obviously the foundational knowledges. Then we digged into inducement trades, inducement basics. What is inducement? Like how do they create those? What's the purpose behind them? Like how you can use them as continuation and reversal. We digged into the power of timing, right? And then obviously gave you the normal starter kit variation for lit by itself. So again, you see week 1 already is a lot of stuff, and it's important for you to understand every single aspect of that already. So use week 5 as your full mastery week, like entering intraday mastery, right? To really see, okay, what's all the points where I may be a little bit struggling, and then go back through all the other weeks, go to the topic and rewatch that stuff, right? Same thing for week 2. What did we cover in week 2, right? We covered the lit cycle, like overall all the timing aspects, like what's the magic manipulation minutes, how to use London Open, how to use Frankfurt, how to use New York Open, how to use New York trap time, like what's the difference of New York Open, New York trap time, what's London close, what's the characteristics, can mitigate out of it, right? I want to close out of it, or it can do something if it's the extreme. Get used to all these basics, and again, nothing wrong with falling back into a previous week and rewatch videos. That's why you have all the recordings there, right? And also, again, the beginning of intraday mastery, the first examples, all the stuff. Again, even a little bit advanced inducement examples already in week 2, the daily cycle, again, how we use it. Overall, with the timing aspects, again, we learned the normal identify liquidity, build up, inducement mitigation cycles, right? Of course, in the timing cycles, also the simplicity approach, the first steps of the simplicity approach with kind of the extended lit cycle where we added the relevant break of structure, and that's how the only way we use market structure, right? But you should understand everything already in here. And if not, again, fall back to week 2 to refresh that knowledge. Week 3, probably one of the most important weeks overall, because we dig into cycle variations, right? To understand the bigger picture with the Asia whipsaw, all the different variations we have, like the London knockout, the retail heaven, right? To understand how to identify them, and also again use the master guide video to really understand how you can use that, right? The cycle variation of how many there are and how to identify them properly. Then also entry helper. Again, you should have the entry helper knowledge, like knowing it better than the inside of your pocket, right? So again, what's the let? When do we use that? When's the only time we are looking for an let? What's an idiom? How and when is the only time we use an idiom? All that stuff, all the additional confluences, right? For example, Asia high, low, day open price, yesterday high, weekly high, all that stuff, right? All the additional confluences, get to know them and know how to use them properly. And again, we completed the simplicity approach where we did everything but entering a trade yet, right? So just for understanding basis. Again, what's the simplicity approach, the full simplicity approach, right? What's the steps and how you should use them? Always get used to do that, because that's essential stuff, right? And of course, how to use the entry helper, like properly. You maybe have to refresh that as well. We don't know, right? But again, maybe fall back into week 3, rewatch the cycle variations, something like that, but get to know the stuff very, very good, because again, we're digging into repetition. But if there's a flaw in your knowledge base so far, it will not get fixed by itself. You have to go back, rewatch the topic until you really understand. And again, if the inducements give you some sort of little struggle so far, no problem. Go into week 1 or week 2 and rewatch the inducements, right? No problem. Again, if the cycle version is a little bit tricky, rewatch the master guide video of how to identify lit cycles, the daily cycle variations, for example, right? And then week 4, we covered cup trades. What is the approaches? How, first of all, what is cup trades? What's the cup trade approaches, right? We have obviously very different entry approaches of how you can use, right? So then figure out for yourself what's the best entry approach you want to use and practice it. Stick to it. Again, maybe rewatched all the different entry approaches, right? But then pick yours, your favorite, or multiples, right? Again, nothing wrong with taking all 4 of them. But again, if you want to be a specialist, not only focus on one specific one, then I would recommend you after break of structure the let, because that's the most confluences you can have, right? But again, sometimes you just don't have a break of structure for let. Maybe you sometimes have no break of structure and a let only, right? Or a break of structure but no let, something like that. That's multiple variations, but you have to decide for yourself what's your preferred entry. Like, we have people that only trade lets. We have people that only trade EDMs. We have people that only trade extreme mitigations. It's completely fine. But you have to obviously decide for yourself slowly but surely how you want to proceed and how you want to trade. So fall back also into week 4 and rewatch these entry methods, like these entry approaches, right? And we dig into inducement trades, right? A lot of examples about inducement trades. Rewatch, and again, I cannot say that more enough, rewatch the blueprint video in week 4. That's probably for theory basis the most important video there is, because again, it shows you the theory behind it and where to look for these entries, and only then. Again, no making shit up in between. Again, that's literally how you can trade everything, even with the fast and furious trade, right? Again, how you can trade into the inducement into Frankfurt. But there's an abundance of entry opportunities, an abundance of variation you can use, right? So just pick your style. Then again, we dig into a lot of special trainings, right? Like hot seats, like mini cycles, all that stuff, getting a feeling for the bigger picture. Like there's a lot of content you received so far. And again, everything is structured into topics and proper modules. So if you have any problems or nothing or something is not 100% clear so far, just use again week 5 also for a kind of refresher week for your own benefit. Okay, so what we will do in week 5 though, again, we will give you a little bit more cup trade solidification with more and more examples, repetition, right? You will find a lot of repetition in there, right? Then special training. We will do a lot more breaking stuff down on the edge, because now you have to train your eyes on the edge breakdowns. So we do a lot of on the edge breakdowns to get that really into your brain and really open the gates to into the wonder world for you, right? So a lot of on the edge training in week 5, and also simplicity approach, right? Because you completed the simplicity approach and now you want to enter the stuff with the simplicity approach as well. Okay, so it's a little bit different in cup trades. It's the simplicity approach, again, where you can enter literally whenever you want, right? At the moment you identify the proper simplicity approach, but we also show you that on the edge as well. So week 5 is a lot of on the edge work and really content solidification. And again, use it again to maybe revise old videos to really get to know the knowledge into your brain, and then train it on the edge. And then obviously we move into the more advanced weeks. Week 6 is trading plan, where we show you exactly how to plan your trading around everything, right? Also psychology. Week 7 and 8 is obviously advanced training, right? But now week 5, use everything for content solidification, enjoy, fall back, right? If there's something not 100% clear, rewatch videos of the other weeks, completely fine, and use week 5 for intense on the edge content solidification, knowledge and training. So another one, cup trade example with entry approaches, of course. What do we do? Same thing as always, what we're going to have here. First of all, we've probably seen that this is already like an inducement here, right? So guess what? We don't need an inducement high at this stage at all. So what do? Just waiting, build up, perfect. We identify where in the cycle, we identify liquidity. So we already see huge triple, bottom, whatever, Asia low, perfect. What should happen next? We identify the liquidity to the left. Next structure point which should be induced is in here, right? Awesome. So what do we expect? Of course, an inducement high, and then of course, be expecting the whole thing being induced to the low side. So if you're getting more experienced, there's your sell trade in here into the inducement, right? So guess what happens here? Now we're getting into the daily cycle a little, because now it makes a little bit more sense. We're having our inducement low, we're having a build up. The only thing which is missing, of course, like inducement, but no mitigation, right? And timing still early. Okay. So guess what? So now we're getting after our inducement, we're having now our reaction and timing perfect, and getting to Asia low. So guess what? We can expect Asia low bounce during London Open, right? So this is an inducement. So for short inducement traders, right? Of course. So a mitigation potential for the first inducement long trade, right? Guess what? We have our cycle. We're having our external inducement, grabbing liquidity to the left, build up, inducement into now mitigation. So what are we waiting for? Build up, proper mitigation area, limit order set, right? Waiting for lets for confluent informations or confluences. There you go. Just stay short of it. Not a problem. Do we cry about it? No, we wait, because if you're now chasing the market, that's wrong. Guess what? Right? So no panic hit. So target here. So it comes lower. And all of a sudden it's a let too. So that's why you should not chase the market here. Again, you're getting a little bit short on, but should you cry about it? No. Now it's confirmed with also the let and the mitigation properly. Perfect. Don't chase the market, let the market come to you. Guess what? Now you're having a let, confirmation. That's the valid trade. You should not chase the market like you did earlier, right? So you make it like this, confirmed with the mitigation and the let. And of course, cycle is completed in here. And then your target is, of course, at least a smart money trap in here, right? So guess what? We get the let confirmation. We get also another pullback with another let for another mitigation, right? Also, maybe an EDM. No, it's not an EDM. And then the market just choose. There's no point. We need to make anything up. We even let the market come to us and wait patiently. Then it hits to the pip in here, right? So again, then the day is over. Nothing in terms of reversal. We're looking into it, right? So guess what? Easy stuff. Should be drinking a couple of that. Easy. You did not make anything up. You did not force anything. You actually let the market come to you. It's not a very easy one. What do you see? Building up equal lows in here. Mitigations on to your left. Minor inducement already happened. Building up the channel low side, right? So guess what? You're expecting an inducement into mitigation as always. Identify where the liquidity is. Already did. Marking it up in here, right? So guess what? We can expect an inducement here. After here, build up before that, of course. Right, so now we're looking for Frankfurt Open trades. There we go into the mitigation. What do? Of course, we're marking out our targets already, waiting for timing to be confirmed. Frankfurt session, perfect. Our high target is all the way up there. We can enter this trade for sure as a London Cup, a Frankfurt Cup trade, all the way up here as we had our perfect cycle. And this stage is the final inducement against what we had before. Channels, build up, minor inducement, now medium inducement into mitigation to the left. Perfect. Okay, following the orders, following the rule sets. And guess what? Not a perfect break of structure, but equal highs into the mitigation. And what is that thing? What does confirm the trade? The let confirms the trade. So building up strong resistance, whatever, right? Getting a perfect let for confirmations. So that's your valid trade in here. And of course, what will happen next? You all guessed it, a tube. Easy stuff. There's no making up stuff. There's only waiting for either break of structures or build-ups in here after the cycle is completed, after you have a medium inducement, after mitigation, and you're waiting for the let to lock everything in, and you trade it from that, aiming for the next liquidity area. Okay, easy stuff. You don't forcing shit here. You don't force anything in here. Another one. We have a medium inducement to the left. So what do we expect? Advanced one, by the way. Okay, so now we're building up equal lows. We know this is a medium inducement to the left. Okay, so we identify our liquidity first, and we already see, okay, we have liquidity here and here. If this is a medium inducement, you want to trade away from the inducement. Okay, so guess what? We identify the cycle. So first of all, the liquidity, right, is here building up double bottoms. So again, what can we expect? Identify the cycle, and we are in the build-up stage. We not even have an inducement. We have nothing. We have build-up stage. If this is our inducement areas, guess what? It should come into inducement mitigation. It's always the same, and then obviously go higher and then go lower. Right? Again, always the same thing because you're trading away from the medium inducement in this stage, right? For this day. So now what we do, we have our minor inducement, right? Nothing induced to the left. So guess what? Market still wants to go lower. So what we have now, we have this Asia midline short setup for only this scenario because we never had a medium inducement ever here, right? So guess what? This is your your Asia midline trade in here. But guess what? Now you're talking about this low, and timing gets a little bit tricky in here. So again, if they want to go lower, they can induce higher and then go lower and then into the mitigation. So now you need to start thinking properly and thinking a few steps ahead, right? So all for a let on the 1 minute, that's not valid, is it? Because again, you never had indications in here. So you're waiting for inducement high, perfect, and then this becomes already into a New York trade. You already know that because now you're turning into the stages of inducement areas. After the inducement, after the channel, after the inducement high comes the mitigation, right? So guess what? You're having your build up now before, and now inducement with speed vector candles into perfect timing to the minute, right? So guess what you do? Switching to the 1 minute in here, right? And guess what? Finding your imbalance area. It's a little bit too big. So what do? You wait until your let confirms it, right? The let confirms it now. So now you can place the trade easily deep into the mitigation. Perfect. You waited for what? Internal breakout structures after the perfect mitigation, after the perfect cycle, induced high into the liquidity, into the mitigation, breakout structure, mitigation into the let. Perfect scenario. Now this time it's becoming a New York trap, a New York cup trade to the minute as well. Look at it, to the absolute minute in here, right? And guess what? You're aiming for the next liquidity, right? And of course, what we're waiting for afterwards, we're waiting for another confluences like 1 minute buildup. Looking at, right? Guess what? 1 minute let. So now we can have a 5 minute let as well. 1 minute entry was all the way down here. If you're waiting for more confirmations, break of structure on the 5 minute, imbalance areas, that's your inducement, confirm with the cycle, build up, inducement into the mitigation area, right? And now your only thing which is left is waiting for what? Waiting for the tube into what? Into perfect lets, into the imbalance area, after the break of structure, perfect. New York cup trade, like to the tick, perfect let, pending hits. All right, there you go. And then the day is over. Usually would aim for here, but as the day is over, just close it out. Now, easy stuff. You did not make anything up once again. Okay. So getting late, either close it, chug out. Easy stuff. Right? Right, so what we have here, same thing. We identify liquidity. We see what they're trying to do here. Again, building up equal lows in Asia. Now building channels upwards, inducing higher. What do they bounce off? They open price. Right, so guess what? What we're expecting, smart money trap into inducement into mitigation areas. So there's your tube. Right, so guess what? You what you do afterwards, you're just changing the whole thing. Timing, perfection as always. On an open, you're switching to the 1 minute. Right? So what do you do afterwards? Switching over. Same thing all over again. This is your inducement with timing, right? So guess where's your potential areas? It's like this areas in here, right? So you're waiting. It's the same thing all over again, guys. You're waiting for the let too big and for mitigation, just waiting for the let to hit. Marks are executing it. Stop goes right below it. Just doing the London Cup trade like perfection all over again, right? And what do you do after? Picking the target, and there's your tube, right? So there you go. Perfect cycle once again. It's always the same. So guess what we have now? We're having our Asia high. Should that be induced or should that hold? Right? Guess what? Of course, What does it do? It becomes a smart money trap for sure. You know that. So guess what? They will react wrongfully from it, giving a false reaction, and then finally they chup it in here. So guess what? Now there's the timing confirmed inducement of the smart money trap after the false reaction. Timing confirmed inducement. Perfect. What should the cycle do? Do the same thing all over again. Perfect timings, cycle, right? So guess what? We waiting for a reaction. We marking up our imbalance areas after the break of structure, right? So guess what? Making mitigation areas. We refine it to the 1 minute, right? Obviously the 5 minutes is too big, so we're just waiting for mitigation to get hit, placing our limit orders, getting hit. What are we waiting for? Our let. All over again, guys. It's the same shit all over again. Same stuff all over again. Perfect let confirmed after the inducement with timing, after smart money trap, after break of structure into the mitigation. Let entry confirms it. Same shit. Same stuff. Chup. Right? So chup trades time 2. Same shit. Same timings. Same setups. Same confirmations. Always the same, guys, okay? Now look at what I found in my pocket. It's a retail cup, right? So another one here. So build up. Again, same thing. What do? Identifying the build up, identifying the inducement. What do we wait for afterwards? Right? We're just waiting for confirmations. So 5-minute potential pullback. Okay. So what do? We look at this and see a huge build up. So are you kidding me? Like, how can it be more easy? We have an inducement low. Now we have a huge build up in here. So guess what should happen? Right? So we're waiting for mitigation after our minor medium inducement. Same shit all over again. It's the same shit that they can't be more obvious. So guess what? We're getting the mitigation into a let. How can it be more obvious? It cannot be more obvious. Let confirmation of mitigation. Target is set. Chup. Right? So what's going on here? Back to the M5. Right? So what do we see? We still have so much potential. Again, we cut it out a little bit here so we don't see it properly. But guess what? Now we have just more upside movement. But what do we have in here? We're having our huge EDM confirmation for even more upside. Because again, the next thing we're looking for is, guess what? Inducement low. Either break of structure equal highs. Into mitigation. Into what? Into a let. What's the thing that comes after? Is EDMs. In that order. It's always the same shit. We're having our inducement, we're having our let, now we're having our EDM. Always the same order, ladies and gentlemen. Chup. Alright, so now we're entering a mitigation area. Now we are obviously done with the cycle. So mitigation area gets hit. When does it get hit? London open. Perfectly to the minute. Then again, it just chups reversal. Right? We don't need to take the reversal even, but it just makes sense as the cycle is completed anyways. You have your let, EDM, cycle, channel building, speed, timing, confirms this cell as well, and then it's just the day is over. Right? At some point it's like shower. Right? So last one. That's the last one in here. Right? So what do we have? High time from liquidity, being in Asia this time, right? So what do we do in here? So we're marking up this liquidity in here as Asia is being an inducement itself. Can happen too. Maybe it's a Chiche or something, or AUD. Sometimes they can have inducements in Asia himself because they're running their sessions in Asia a little bit more, right? But guess what? What we will do in here? Nothing. We just wait until they show us some plays, right? So you do put it away. Okay. That can be definitely some sort of Asia range in here, but that's not too early. So we wait. Right, so wait until they show us, and if they come back in here, giving us even more confluence, like for example a let of the Asia midline, confirming obviously to trade away from the higher time frame inducement into the liquidity, into the mitigation. Now we're interested, so we can take the short into the inducement, confirm with the let. But guess what? It's ranging like crazy. We never hit this zone. We never had an inducement left, never ever. So we're freaking out? No. It's a ranging day. So can we trade ranging days as well? We can. So we expect an EDM after that again. Huge EDM. We never had an inducement left. We never had a mitigation. So it's still valid. Still valid. We take another EDM. Perfect. And now finally looking good. So the timing confirms, right? So now we're having an inducement into a mitigation of a rangy day. So guess what? There's your trade. There's your limit order hit right there. right? That's a rangy freaking day. You still can trade it. If you want to wait for mitigation here, that's your trade in here. But look at this rangy fucking shit in here. You technically can still perfectly trade it.
Okay, so this is actually a 4H chart. What I want to talk about is just just a little more of a tip, should I say, on how I apply it to like daily trading. The one thing that I like observed the most was like we have the build-up type of liquidity. Let's just use the 4H just as a random example. We have the 4H, for example, build up, whatever, inducements, and then we go higher. And the one thing that I've like tried to figure out, I guess, again, it came with time in terms of every single day, literally looking at the charts, watching price action, is with the intraday and how, like, for example, a higher time frame, we get these higher highs and higher lows, but then of course we don't get like a high retracement type of thing where you look for a sell and then it just like flies at that point, not flies, goes down. In that sense, and how can we essentially trade with that? And of course, intraday really helps you understand where the liquidity lies and how we can essentially see direction. And one of the biggest things is for me is, I don't know if I made up this name, but it's like internal structural inducements. And what I mean by that is actually, you can see it perfectly actually on the 4H in this example. So if I just get the marker thing out, is why did price react here? Can't do straight. Not there actually, sorry. 1H. The reason why, so actually I'll actually keep that there just for reference. So we can see daily, and you can see I put it under the wick for a reason. And the reason why I do this or see this happen so much is the understanding that we're in structural points, right? So we have a high and we have a low. Of course, that's like a random long wick, and it even induced this point here. And what this essentially means is like you'd probably not look for a buy, maybe you might do for like a demand type of thing, but I like to see it as actually liquidity and not necessarily demand, because when you see it as liquidity, you can understand that the direction is likely to go up just like demand would, but then you start getting confused with the supply to demand type of thing. And to me, I don't personally like using it so heavily, especially on higher time frame. I don't use it at all. But I see it in this scenario. So what this essentially means is all these buyers now are induced, and it could be just by a couple of pips. And I will refine that down to exactly why it was so low. But on the daily, of course, it looks like this. And you just have to be fractal with it. So of course, We can go lower. So essentially what's happening, all these buyers are induced. And what that means is we can likely expect a sharper pullback as opposed to, say, if price was to react anywhere here, just like in these scenarios. And you even see it happen in these scenarios just by like a couple of pips usually. Can't really see it there, but like even in these scenarios. So you get the inducements of structure and you get these pullbacks. But it's obviously better if we induce most of the structural points or where the main impulses come from. And I think it's 1H. Yeah, so do you see why we can now refine it further? This is an Asia low, so of course we can refine it more lower at this point. I mean, I would put it actually more so there. I think it was just a couple of pips or something like that. Yeah, it was ever so slight. I know it's me being specific, but this is how we can just understand that the low will be taken anyway, so somewhere between in this zone. So to me, that's quite a high confluence that we can likely reverse the market to a certain extent. Of course, we need to watch how intraday plays in that scenario and play essentially in the cycles. I will actually do this one a little bit in replay mode. What date is this? 29th. Just so you can see my thought process of what I did. My timing's not showing. Oh, no, they are. Let me just forward it for the Asia. When does Asia end? Oh, we went back to London. No. So in this scenario, we've had our little inducement. It looks very minor, I know, but this is a very important example of how, again, I'll go and hide just 1H just as an example of where you might consider this as like a continuation, not this, sorry, but like the overall leg as a continuation. And then you see points like such as your like main impulses, and you can really see them like mainly in these zones where we've had like a lower low type of thing. And you're likely to maybe go for this one first, and then this one, and then this one. But in this scenario, because we just had that slight inducement, we can actually expect price to go higher. Remember, it's like major liquidity, essentially. It's not a major inducement in that sense. It's more like, in my opinion, significant liquidity, because we didn't break like a high or a low, essentially, to the left. This is why I like to use internal structures of how you can use it intraday. Of course, this is higher time frame, but you see this type of scenario play out all the time on different time frames as well. So if I just go lower time frame, I'll go to 5M. So already in Asia, what we can see, we're building a buy trend. Let me just use, actually I'll use the cursor. I don't know if you guys can see it properly. I'm not that good with drawing. So what happens is we're building a buy trend at this point, and we get this like internal type of break of structure. I know it happens in Asia, but that can give it a good indication we might expect a reversal to lower areas. And in this scenario, where can we like target for a buy? Remember, we should be looking for buys. And you can see even here, it happened just about a couple of pips or whatever that was. So already we have a build-up essentially. Starting from there, not just Asia, you can see it started very slow and choppy. We even get the liquidity here that gets taken out, so we're having all these fractal plays. We do have a zone here. Okay, so that can be a possible zone, right? 1M, and we can go down to the 1M to refine further. Now, because I've seen the 1M right now as a potential extreme mitigation, now this one's a bit more, I would say, risky in the sense it's not very confirmed, but it's just an extreme mitigation. So if price was to come here, again, it's a riskier one, but you can wait. So just label it 1M. And at this point, it gives more of a better cycle understanding in the sense that this could then be our smart money trap. I'm not sure if that was picking up 5M or whatever, but we can see this as a smart money trap type of cycle thing, as well as another structural inducement at our POI. At our POI over there. So essentially what we have a cycle play here, and this is of course prepared beforehand. We're waiting for after Asia what's going to happen, but we want to trade higher at this point. We don't want to get confused. We want to essentially induce as much liquidity as possible. We have a smart money trap. We even have another structural point to be induced as well as the extreme. So, always do that, press the shift key. So in this scenario, we just wait and we see what London tells us. So I would mark that like whatever SMT or FFS. Oh. We don't know what it is at this. I don't know why it's doing that. We're just going to leave it as this. Okay, it's not. Okay, I don't know if it's just my autocorrect or whatever it's doing. But I hope everyone understands that in general, that this is overall a cycle play that can occur. And if price was to come here, we can potentially look for buys at that point. So we just speed things up a little bit. Okay, now it's Frankfurt, I think. Yeah. Okay, so price is still continuing to induce. Now we get London open, we get a minor inducement. Now this doesn't mean that we, of course, take the buys at this point, because we have more liquidity below. We even have a smart money trap potential. We have a structural point that can be induced as well as a 1M as an extreme. So we just wait for the market to do what it needs to do, and we don't get caught up early just by taking it here. Now, the one thing I like to also look at is where the main impulses occurred. In this scenario, it's a bit tricky because we have these other points of reference, but I will show you a bit later of what I look at as well. So, of course, London shows us. Okay. So in this scenario, I'd actually expect probably an inducement of that high to continue lower. Remember, we're continuing lower, so we can expect an inducement high to continue lower and then induce low, go high again. And why do I expect that? It's a bit random. Maybe we can even tap in there as a smart money trap in the future. We'll just see what happens there. Okay. So price doesn't tap so high. And this is a scenario, again, just by looking at this, we can see this as an impulse, right? That's going bearish, and why price actually reacted here and not necessarily in mitigation. Right from this wick exactly, or the open of this wick, we can see that's where the pressure was introduced into the market. And that's where now price has taken out these sellers. Hence, we can understand that price can now continue lower. And that gives us better understanding that this could be a smart money trap as well, or FSS, we don't know at this point, just by knowing these little plays of like an inducement, of course. That's just going into a bit more detail for understanding the impulses that cause that from like a whatever high, low thing. Like the structure, of course, we're just breaking it down at this point. This scenario could probably take a sell from this imbalance, because now we've had our inducement, so I hope everyone understands that. This is a build-up as well. This whole structure is a build-up. So sellers, we induced them with the vectors, then we had an inducement of the structure, and now we can possibly have a mitigation. This is, of course, trading into the inducement, so of course it's important that we close around these areas, around here possibly, but of course we can expect likelihood of this cycle to play out at this point. Okay, that was kind of like an imbalance. It shows a mitigation. It was kind of tricky to choose a mitigation from this, but of course we get like a mitigation of this IFC right there. Okay, at this point you should be break even. Let's see. Okay, that's like an FFS then. Okay. Yeah, that one's more of a smart money trap. I won't label it. I think we can see that. You can see it gives a slight reaction, and then we just wait. Oh, okay, what's that? Yeah, that was perfect. And again, in this scenario, it is a bit more like an aggressive entry, so we can essentially wait. We'll just go back one. Don't want to predict things. I want to see. Not predict, sorry. Don't want things to play out. So in this scenario, of course, we should, of course, understand at this point now we've hit a mitigation. Of course, it's better to wait for a reaction. And then, of course, we have our target. So we even have like this equal high type of thing. Of course, we already know that would be induced. So we can just take it to Asia at this point. We should close out this position. And now at this point, we can see if there's a possible re-entry. Okay. So that could be a possible mitigation. I see it. Of course, it's better confirmed if there's a break of structure. But at this point, it's a bit tricky to see where your break of structure will be unless it is, of course, above this high. Sometimes that doesn't always happen. I don't always wait for a break of structure, internal structure, sorry, just because it doesn't always work out, and it doesn't need to essentially break structure, but it's more confirmed, hence why you're given the checklists for more confirmed entries. And this isn't even in timing, so that's another reason you don't want to just take random trades. But of course, this is just understanding the overall picture of what happened to the left, and we come to the extreme, and now we can potentially mitigate the vector. Oh wait, I haven't got my EH. Oh, forgot about that. Almost. Okay, perfect. So now that's our 1M. So just remember, I think this was approach 1 on the checklist type of thing, where we have an extreme limit type of order play. Again, I don't know if you'd want to put a limit on that, but still, it's the whole idea of it being the absolute extreme of the leg. Then we have approach 2, the reaction after the initial mitigation or reaction in the POI to the left. And then, of course, we should be at break even at this point after we've broken the structural points or again induce these highs. Was there a let for which cell? Sorry, this one. Yeah, it was kind of a let. It's kind of a messy. Which? Oh wait, I moved it. Where did I move it now? Wait, I think I'm getting lost myself. Hold up. Oh yeah, I did move it, didn't I? No, I didn't. Oh wait, I'm actually lost. Let's just move this. Let me go back a bit. Sorry, I'm just actually lost where if I move this thing a bit. Was it that one in particular? Oh, maybe it was on 5M. Let me just go back on 5M. Yeah, okay, that's probably why I struggled. I did move this thing a bit. Was there a let? Not necessarily. I mean, it was kind of, yeah, the let was kind of afterwards. It's kind of a funny one. 1M, I don't know if you're talking about 1M. Yeah, it was kind of a let. Again, I missed that, but again, that's even better confirmation for that. In a scenario like such, I would actually probably wait and then take the mitigation. I really like doing that when you wait for the let reaction and then take the mitigation, especially if it's not clear. But this is just a general whole cycle play of the build-up, the inducement, the mitigation. Just with understanding, you can, of course, take that. Of course, you have to read the story, though. That's the most important thing because you need to exit your trade too. Otherwise, it's just a break even. In this scenario, there was no let, though. But we can continue to see. Now, we'll just fold it up a bit because, of course, we should really expect the highs at minimum to be taken. But in this scenario, of course, I actually want to go a bit on the higher time frame of why we can expect all of this liquidity to be induced, because this is one big build up. Now, firstly, we can see from this middle one, it's Asia high, and so is that one Asia high too, and it's kind of like an equal highs type of situation. Maybe some resistance traders, resistance traders may take another sell there type of thing. And even here, so this looks like a likely impulse where you might want to sell essentially at this point because we have your decisional and you have like your extremes and there is like imbalance zones here. But in this scenario, just by knowing this one move here on the left, and then we have this whole cycle play now reversing. So we have the cycle going into the inducement. Now we can have a cycle going out, and we have liquidity targets as well. So just keeping it brief because we can, of course, refine this to 5Ms and stuff, but it gets messy sometimes, different time frames. But we can, of course, expect these to be induced. Let's change color. And like that one there as well. So these are just likely points where people probably would sell as like mitigation type of things. Sorry. Let's move back a bit, it's going too far. So now in this scenario, of course, we can just likely wait for New York Open. Is it New York Open soon? Almost New York Open, but already we can see that price has tapped into essentially our smart money trap. We should not just take the sell here thinking, okay, and this one up Asia high, take the sell. Might look like equal lows, but already just with a bigger picture of understanding, we can see this was a whole cycle play and we can actually expect to induce greater levels of liquidity even above this point. If I just draw like an inducement type of line here as well as here, should not be looking to sell anywhere in these zones. And imagine if you took sells just consecutively off these zones, and likelihood you take a lot of losses just by that. If we just go to 5M. Okay. Okay, so now we get New York Open. We get a smart money trap type of reaction over here. So of course we want to trade with the inducement at this point. and continue the inducement, sorry, like a continuation trade. And this is why you shouldn't always expect New York to be a reversal. And it gives the impression here as a reversal, but this is so easy to get trapped then just with that understanding of always expecting a reversal, when the reality is we should expect a continuation, and you just wait for that. If it's not clear, you of course just wait. In this scenario, we wait, there's nothing really presenting. Okay, let's see, just extend the box. Okay, so at this point, we already have a potential POI here for continuation. So we get our smart money trap reaction, we get our vectors lower, a build-up lower, sorry, and then we have a mitigation potential just for continuation. Change that box to purple. And at this point, this already is like a let in itself. That doesn't mean we take it because it's random. There's nothing there to the left, but it can be a potential POI for taking the mitigation after the let. So we, of course, wait. Now we have a break of this structural point. So we already have induced this first zone here. And this is all just messy anyways, so you shouldn't really be looking at that. It's always better to wait for the confirmations and not just random limits or whatever. Okay. Kind of almost tap into the next one. Okay, just trying to speed things up a bit. Oh no, my screen's frozen. Oh, I hate when this happens. Okay, it's fine. Sometimes it like refreshes everything and that really annoys me. Okay. At this point, it's almost an EDM, if you can see. So the let, it already is like pointing as an EDM. It's already lower, so we can consider that as an EDM trade, maybe on the 5M. Oh, 5M. Okay, makes sense. So this scenario is actually an interesting one. So this is why, as well, marking up the 1M isn't always the case of it being a a mitigation, and why you should look at multi-time frame. I don't really look at 2-3M. I know I have it there, but I don't really look at it much anymore, because it's always important to have your time frame set and not be random. Like if you always look at like say 7-8 minute whatever in general and apply that to everything, then that makes sense because that's part of your own rule set. But if you're doing it randomly to think, okay, it marked it mitigated whatever 2M, then you're going to kind of like be subjective in that sense that, okay, sometimes it works, sometimes it doesn't. But if you don't always apply it, then that's when you kind of get that thought process in your head where it's like, how do you know which POI type of thing? So you should always stick to like your own POIs, whatever it is. It could be a range, but always stick to them in all of your trades, essentially. And this scenario will actually probably show it because we saw it on the 5M, where it just missed the mitigation point of 1M. However, we can already understand with these vectors bearish, it can really tap into any of that, but that wick already tapped there. So 2M, that was probably a 2M, but 5M, it actually makes more sense. It's a mitigation of the 5M. It's not an imbalance fill, but the mitigation of the open itself. And yeah, from here, we can expect a continuation. We of course have our POIs to the left. Now, if we just look at higher time frame, just so we can see potential target, because this is New York open, soon we'll be heading into London close. And of course, we can potentially expect, okay, there's a 1H there, might not reach that high with one impulse. Okay, 4H, we can already see what happened. Replay mode is not really helping in this scenario. I'll just draw it like that, so it's not like a one huge pink box, where we can already see, I was trying to look for like a higher time frame that kind of fit perfectly anyways, but it can be 1H, but in this scenario, it's okay, it's fine. So we already expect that to happen. Okay, perfect. And this happened at, yeah, London close. So we can expect a reversal. We probably want to close your positions. However, with a higher time frame target in mind, expecting this supply zone to be induced, you can essentially hold. But it makes more sense to actually close your positions and scale in at this point. But if you're like swinging, you can hold from the very bottom and maybe close your New York or whatever and just compound at that point. So just delete that. So we know it reacted at 4H, but overall we're expecting this whole zone, which looks really nice on the 1H, to be induced because that looks really clear. It's like a supply zone, nice bearish vectors, break of structure type of thing. But of course, just with the understanding we should trade higher and not expect this. You can avoid losses essentially in that scenario. Just need water. Yes, sir. Does that make sense at the moment to everyone? I don't want to be rambling and not making sense to anyone else. Okay, perfect. Amazing. So now we can actually mock up this zone as a potential reaction. Now, the thing is, of course, we can expect these zones to be induced, but they always usually give reactions. So essentially, you can kind of call this as a higher time frame type of smart money trap, which is usually why you say, let me just see if there's an example just here. Yeah, like here. You get a mitigation of this demand and you think, okay, inducement low, whatever, and it doesn't hold. So it does give a reaction, but it doesn't hold and we vector bearish. So it's like those scenarios where your zones might give nice reactions, but they don't hold. And these are scenarios of the same thing. It's just all fractal at this point. So in this scenario, we have a 1H. Let's just wait for the day to close. Let me wait for Asia actually at this point. So at this point, we don't care anyways because it's, of course, London close. Oh, that's choppy. You know what, at this point, I do actually have my trading view, what do you call it, drawings, because I don't want to go ramble on for too long. And like, oh no, what's happening? I don't want to like run on for too long. So that was just like a singular replay mode thing. I can do it for the rest, but it will go for long, especially it'll be up to date till Friday. And this is only, I don't know what day it was from. I don't actually know the day. I think that was a Friday last week. So at this point, I will actually pull up the drawing because I actually want you guys to see this in hindsight, specifically because this was a messy week, sorry. And I chose this messy week in particular because how can you make sense of this? It's basically a range in every time frame, even the 1H, it just looks like whatever the hell that looks like. So that's why I chose this as an example. And every day I was monitoring this with the expectation to break the high and how you can trade the intraday. I won't go too much actually into the 1M again or like the, not the 1M, but like entries because Reem and everyone else did a really, really good job in explaining that. So you should already have a solid understanding. But the main thing I want to implement is those internal structural inducements. So let me just get the drawings. Where are they? Okay, perfect. Apologies if this is messy. I'm not usually that clean. This is actually clean for me. So basically you see the extremes as liquidity. Essentially, yeah, and I'll show you a couple of examples. You can apply this yourself as well, like as a little homework, I guess. Because this happens every day on every time frame. So you will actually, I think it's like a game changer. It is a game changer for me in particular. Just this one thing to add, essentially, I guess, to your trading. That's the biggest thing I want everyone to take away. So in this scenario of this day, so remember, let's draw 1H again. I need to go actually on the 1H to know where that zone starts. So it's obviously the mitigation, not necessarily imbalance. That's why I mark up the whole zone just for the sake of it, because it can react anywhere really. But we always remember at this point where the expectation is to induce higher and induce the zone that caused part of this liquidity. If you break it down to like a daily, that would look like kind of like a one leg type of thing, like one bearish type of leg, maybe a couple of bullish candles, whatever. So these are the scenarios. This is why I personally, I'll be honest, I don't really like trading higher time frame at all with the expectation of mitigation POIs in those higher time frames. And you'll see these things happen by like minute pips, a bit like that, which it might look silly, but look what happens in the end anyways. You probably get induced back like a million times to the left. And you'll see this happen a lot as well. More lower time frames because higher time frame stuff doesn't appear. You have to actually wait for the it does appear, sorry. You have to actually wait for price action to develop essentially. So in this scenario we have a daily intraday play. So overall I actually marked up this point as a mitigation. Forget this day for now, but the reason I marked up this mitigation in particular, this 5M, I don't think it's present on the 15M. Just check anyways. Where am I? I hate flicking through timeframes because I actually get pretty lost. Okay, so I chose 5M in particular because how can we expect a continuation to induce the high of this 1H supply zone with this whole bullish leg, right? You'd more likely, let's go on higher time frame just to see where your main like demands and like supply zones, demands, not supply zones are. You'd probably expect price to go there, but then at that point you think, okay, liquidity, this does give the impression of liquidity for after when price is ready to induce low. But in the lower time frame understanding and intraday, it makes so much sense of why you can take these trades for the continuation. 50% imbalance. What do you mean by 50% imbalance? Like where? Are you talking about like somewhere in between this leg? Looks like a 50%. I'm not entirely sure what you mean by 50%. Where I have marked. Are you talking about here? The 5M?
Yeah, that looks around like the 50% inefficiency area, more or less, where you have marked.
Are you talking about the candle itself or the whole
Yeah,
leg?
the candle itself.
Oh, I see.
Yeah, that's why maybe the 5M gave a reaction of that.
Yeah. I have a slightly different understanding of why that is, but you can add that as an additional understanding. But the reason why I chose that was not to do with the 50% type of thing. But if you use that, that's of course amazing because it lines up with my understanding of the fact. Actually, sorry, let me go back on 15M just to see the bigger picture. So what happens is, this is the point. If you saw on 5M, it was like a bearish demand zone type of thing. Sorry. It was like the bearish candle before price induced later, and you're going to see them everywhere. But of course, New York already gave us our opportunity to continue. So this is why we won't look low here, but we can look here because what happened here was from this vector candle, you can see even on just the 15M, and you can already see that's like a supply, demand to supply type of thing. The price came lower, it created that candle on the 5M. Just from this impulse alone, which formulated these few impulses, so you can consider that one structural leg within structure, if that makes sense. You don't always need a crazy retracement, but that's of course, it gave like 1 or 2 candles. You can see that just that alone from here, you can already see it induced all of this liquidity to the left. So it had a major impact essentially just by breaking down the leg, where it's pretty hard to essentially see it at this point. Yeah, like a Wiley block if you want to call it, but I don't know if you would call this one a Wiley block as well. I'm not entirely sure. But this is not me picking and choosing randomly. It makes sense why from this point price impulsed higher, and the impact it essentially had is the most important part. It created a new high, it induced 2 days worth of liquidity, and of course it did react like a 4H. So of course that was like low no close anyways. So this is a point where we can potentially expect continuation into a 1H demand. Now, remember, we're not using our demand as continuation lower, just possibly expecting a reaction, which is likely. We have to be quite fluid in the market like that and expect reactions, especially if it's a higher time frame. We can expect it to be essentially like a smart money trap on that type of time frame. Questions? What about for intraday player, the 50 tenor? I'm not entirely sure about that, Sahil. Because I don't really, I'll be honest, I don't really care about daily or higher time frame stuff, because in my opinion it's quite subjective. You look on a higher time frame, it makes sense sometimes, but like you have to wait like a whole year for the liquidity to develop. So I don't really look at it like that. I like intraday for actually building the picture, and you can even take them as swings. So I didn't mark up the risk to reward, otherwise the whole screen will be green. So at this point, of course, you could definitely swing that one at least to your supply, your inducement of this high. But yeah, in this example, if you just go back to 5M, intraday, just on this day alone. Now, this is actually like something you can expect. We've had such a bullish impulse. We can likely expect a choppy day or choppy Asia, or whatever you want to call it. You can see it's so choppy, there's like no mitigation. But remember, this is a point you should already have marked out. You're not marking out on the day type of thing. You should already know this. So these aren't picked on the day. I mean, you can, of course, before Asia or whatever, before sessions open. But of course, it's not just made up. You have these zones marked up. In this scenario, of course, the next day that didn't happen, and price can do that. It can, of course, create intraday plays, and it does give it opportunities here, but it may not necessarily hit the zone for price to then continue at this point. But in this scenario, we can already see London slightly induced high. Again, it didn't really do anything. You can just make that up as a mitigation, but then that's a bit random at that point. So we should expect to at least induce low, because we have like perfect equal lows at this point. And then we have inducement low. We, of course, have a break of structure, whatever you want to call it, mitigation type of thing. I won't go too much into detail because it'll go very long, but I can show you in particular this scenario of the same thing as the internal liquidity. Not in this example, actually, that was a mitigation there, but where am I? Oh, maybe I'm lost actually myself. Okay, it's not in this example, so I think it's the next day. I'm getting confused myself. But in this scenario, you can already see there was a mitigation of this point. It was also, I think that was a 5M or 1M let on the time frame. And then we take the mitigation, if you saw on the 1M build up, of course, and we induce the buildups, we take the mitigation to go higher. Now, expectation, of course, is the 1H. Price, however, makes equal highs. At this point, London close is a bit down here. You should probably consider closing this as an intraday, because you should already know that price should ideally attract to this point. So just intraday play, you get like a buy essentially. Now the next day, what happens? We actually get an inducement in Asia in this example, and we even get a fractal one where we get equal highs, we get a inducement, sorry, and now we start trending lower. And this is how we can understand London will be a continuation and not necessarily go low, go high type of thing, whatever, and expect it to hit the point, because we want to use essentially the demand points to lead us to the supply. So in this scenario, it's a fractal play as well, where we get equal highs, inducement high, and then of course we can start inducing these structures here lower. And what happens is price mitigates right here at this point. And we even get like a fake reaction, and then we get a mitigation. At this point, we should wait. We even get like a nice, not so nice, should I say, build up as a target essentially. And we even get a mitigation. Of course, it's better to wait for the timing session. And this is why the next day gives a perfect picture play. Whereas if the day didn't make sense before in terms of POIs, you get your whole lit cycle in the next day with the timing as well. And we get the mitigation. We get, of course, the breaks of these internal structures here. London should have been closed with this Asia high type of bounce entry to the left over here. I think that might have been like a 1M type of play. If I look, no, so it's a 5M, but I think it might have been like a kind of like a let, but of course you get the understanding trading into the inducement. If it's not clear, just don't take it. It's of course better to wait for like inducement high. We even get that actually here in the midline. But in this scenario, what happens? We wait, we get these structural breaks, and then we get price even build up liquidity. Of course, this one was taken about out here. We still get liquidity lower. We even get this as a smart money trap. So we get a whole cycle even leading into our POI over here to the left. How did I enter that trade? This one was more of like a mitigation play with just the whole understanding trading into it. It's a bit more of a like an aggressive one, I would say, in the sense that it's not the clearest, but it is, of course, just a mitigation. It's kind of a let as well. I wouldn't recommend it. You could say it's a break of this structural point here. You're just trading into the inducement. But this is more of your picture play in that sense, because you actually get a let on the 1M and you take the mitigation because price did not necessarily come back. You can take it as like an order flow type of thing. However, it's not the clearest. You can say, yes, break of structure, take this. But of course, your session actually gives the more impulsive play, which is why the session timings are so important. Now, in this scenario, we take the mitigation. Now, this is where I go personally into a little bit more detail, just by understanding I see these as inducements, not necessarily clear mitigations. Now, this is the biggest thing that's actually changed my kind of game in that sense of not getting induced by like a pip or two or whatever, is why does price necessarily come this low? Why doesn't it mitigate? Because if it was a mitigation, it should really come here. But price actually induces what? All of this buy liquidity. So all these buys actually induce. So does that make sense from a structural perspective? Everything is quite literally liquidity. So we induce all the buyers now. And this way, this is how we get all these buyers out of the market. And we can actually add that as an additional like complement essentially of knowing that price will go higher. So we induce low to go higher. Now price does that again consecutively. So here it is a bit messy in that sense. It's not the cleanest, but it is a little bit messy where we get it happen again just by like a pip or two. So now this high is induced. And this is how it helps a lot in smart money traps. Because we've had that minor inducement low, these minor structural inducements, we can understand because it's an inducement, we can expect the leg to actually be broken and these smart money traps to like be better identified and not taking the sell. So I hope that generally helps in general. But overall, of course, we can expect to induce our supply. We get to our supply, so that in itself does whatever at this time. And then we get Asia continuation. It's not really wise to look for sells this late anyways. So the next day, this is a bit messy, so I won't even recommend that. But the next day is more choppy, should I say. So I won't even recommend that. But you can, of course, everything is cycle played, literally everything, where it's like a build up, inducement, and a mitigation. So this is, of course, a mitigation. It was a 1M let as well. Of course, we're kind of running low on time, so I'm kind of trying to be a bit quick. But we can, of course, just look at it even from a picture like this. So this day was a bit messy. We get like continuous inducements of the lows and the highs. But what happens here is we actually get equal lows again. And then price induces high. All of this day's sessions worth of liquidity is now induced. Now the target, of course, as we've induced our, reacted from our 1H supply, because we're our intention is to induce the whole zone, is what can we expect to induce low to continue? Well, we can expect overall, not only our mitigation, but the whole demand that led to that. So this mitigation led to the reaction at our supply zone. So of course, we can then expect the inducement low. Now this kind of happened perfectly to like a couple of pips, and this is why we can not see this as a break of structure. It's so important because you can easily see this as a structure break and then possibly take whatever continuation from here, whatever, but that's not the case, because the bigger picture understanding is now we've induced all the liquidity that led to our supply zone. And then we start trending bullish and we have all these opportunities in the day as well. And then of course we break our supply perfectly and we actually mitigate a 1M over here. I did mark up 15M because it's so easy to get induced, should I say? Not induced, what am I saying? Miss the opportunity because you expect the higher time frame, whatever. But if you just go to 1M even, we can easily see that the last buyers were actually mitigated by this one candle. So this essentially becomes our POI. So this is actually our POI of interest. And NFP, of course, catalyzed the move of this. And of course, in this scenario, what I did was, again, wait, because you don't want to just take it randomly. And you wait for the internal breaks of structure, you take the mitigation. Not really a let, maybe the let was the inducement itself, but of course you wait for your lower time frame and we can start to induce low. And of course, smart money trap, very obvious. But overall, of course, that was just a little overview. It's a bit tricky to do it with timing right now. But just understanding those internal structural plays, even just here, just looking at that, all of these sellers are now induced. So this is not like a break of structure type of thing. Of course, you can even see it's an inducement of the highs, but just understanding sellers' liquidity is induced. We can expect to induce more lower, but why don't we induce the absolute low? Because we already mitigated at that point. This New York continuation. This was the Asia whipsaw day, but it was more clear on like GU, like Reem perfectly mentioned. So in that scenario, of course, it's important to look at other pairs as well and not just take it for the sake of it, especially if the entry is not clear. Like in London Open here, it was just not clear. It looked like equal highs. But of course, bigger picture understanding, we hit our target perfectly. And of course, and expect to induce these lows that led to that as well. I did deliberately choose a messy day where it's literally not a day, sorry, like a week where it's ranging, but just by understanding like these minor pip type of inducements of basically demand leading into the supply and then supply actually being the catalyst for the inducement of the whole thing, both the mitigation and the demand, and then price vectors bullish. And of course, you get those choppy days in between. Usually they're intraday. Like sometimes it can be here, like a perfect example of Asia whipsaws. I can do this for like a lot of pairs. I'll just give like one or two very brief specific examples, not like going through the whole days, because Reem mentioned GU perfectly. But just these alone are like inducement trades in the sense of just understanding the internal plays.
example, as we digged in, this is the Asia range whipshots we taught you actually last weekend, didn't we? Right? So guess what? That's all they got. So if you look at this is GU on this first day, right? So guess what? That's the illustration we gave you like last weekend, and that's what they did. Like it's so scary sometimes. The only difference is that they induced in Frankfurt low here, and then London open. But guess what? Minor inducement, perfect inducement, London open. Minor inducement, perfect inducement, London open. Awesome. So what do you expect? A quick whip of Asia range. There you go. But in this scenario, it's even easier because Frankfurt already confirmed the Asia whipsaw, right? Because guess what? They induce low and they just smoke it with one push without any pullbacks. So that's already confirming the Asia whipsaw. At this point, you should understand already, oh, that's an Asia whipsaw. So guess what? Your next target should be the first whip, right? But guess what? If it's a whipsaw, they will whip it again, right? So guess what? If you understand this and then perfect timing confirmation, you can definitely take the short in here. You only need to understand that your target is lower here. I think it happens to Josh where he took the sell in here, but then didn't look for the whipsaw and then he got a break even. So that should never happen. That's why we give you the rules and the overall daily overviews so you understand where you get out. Guess what? When should the reversal happen? We even showed you to the minute. Magic manipulation minutes. So if you look at it, almost to the minute, 5 minutes off. Okay. That's almost what we gave you, right? So guess what? Here's the next entry opportunity, magic manipulation minutes. So this is a 5-minute EDM in here. This was a 1-minute EDM, right? But it's a 5-minute EDM. Where does it happen? To the absolute minute. Okay, so what's the next trap you should watch for? New York trap. So they're inducing high first. Awesome. We just make a illustration with equal highs. Same exact shit, isn't it? And guess what? They're inducing Asia range. When does it happen? New York trap time to the absolute minute, right? Then guess what? You're expecting the continuation and the reversal at one New York close. London close, sorry. And you see, the whole thing is light there for you. It's just a little bit of variations to the theme. Oh, of course, we show you that this is an equal high. This wasn't an equal high. Guess what? Should you be confused about this little difference in here? No. This is Asia midline. Guess what? This is Asia midline. Look at the timing and just look and trade in here. Wait for the break of structure in here. Trade the mitigation. Go in line with what we show you. We even give you the timing, the whole overview. At some point, it's just, again, you need to just see the little variances they play. Again, don't be confused if they induce in Frankfurt here, just because we said it's London. But guess what? The whole thing afterwards, it's like so perfectly the same, right? And again, I can show you how we can trade it. So if you take this day, again, that's first day on GU. That's literally like 2 days ago. And we taught you this last weekend, right? We cannot make that shit up. It's impossible. So guess what? How bizarre. There you go. Right. So if you dig into that, into the 1 minute, the GU one, right? The G1 on first on the 1 minute. So just understanding of a little bit of clearer picture. So we understand, okay, we have our Asia range. And you see, we don't even need to look to the left for displays. Again, sometimes the left will help us a lot, but then there's days where the left or the higher time frames don't help us check shit. Right? So that's why you need to understand the daily cycles. And that's why we always show you these variations in general. Right? Because again, it's all about the individual day. Because guess what? In these scenarios, of course, the left helps you, but then the whole day looks like this. You just need to understand when this will happen. But the whole day is always looking like this. Right? So use it always for your reference because it will help you so much. Same thing with Asia whipsaw. It's not so important what is going on to the left because the day will look like this anyways. You're just lining it up with proper mitigation zones here, smart mind trap here, mitigation here. And then again, the rest is lined up for you. All right. So guess what? If you dig into that again, all right. So in here, you see, we don't even need to look to the left. Guess what? Okay. So what we will do, Asia range. You see, there's nothing to the left. I have not marked any mitigation zone to the left whatsoever. Nothing. Guess why? We have our structure, we have our timing, and we already know on a bigger picture of what the day should look like. Okay. So guess what? We do nothing until we see the channel, right? So now we have our first idea of what we should look like. What did we teach you for like 3 weeks straight? Asia range, channel, building, inducement. Of course, the ideal scenario is London Open. But guess what? Frankfurt Open is a trap as well, isn't it? A session opens, they're getting the information of Asia. The liquidity is obviously built up short side. Guess what? Here's the information, do something with it. Usually what they do, they're handing over and wait for the big guys, which is London. Sometimes they're doing the push themselves. So guess what? If the play is done, as in this scenario in here, you're having your perfect channel and your minor inducement, you see? And then another inducement, as we always teach you. When does this happen? To the absolute minute in Frankfurt Open. So that's the time confluence combined with the whole Asia range inducement cycle build-up inducement. So guess what? The only thing this is missing is the mitigation. We don't need something to the left if we have our perfect daily cycle, right? So guess what? Now you're waiting for what? Break of structure into the mitigation. That's the buy. Awesome. So where is the target? Asia high. That's the first day, and you did not even include anything to the left. You just traded exactly what we preach you, right? So we have a Frankfurt Open. Yeah, that's a good question, Luis, but always combine it with what they show you. Again, the ideal scenario is on an open for sure, but Frankfurt Open sometimes can complete the picture. And guess what? You don't trade anywhere until you have cycle and build up, inducement, and guess what? There's no bar opportunity here or here or here, never. Because what? You're waiting for the break of structure. The first time they broke the structure here is after Asia is being induced with the build-up, inducement into timing. Now you're waiting for break of structure, and now you're trading the mitigation. Obviously, the next better thing would be this being a let, but it wasn't. It's completely fine. It's just one confluence less. But the rest is perfect. You have timing, you have the cycle, you have build-up, inducement, and now you have mitigation into the inducement area in here, into the imbalance. Perfect. So guess what? Your target is Asia high. So now what? Next time window is London Open. To the absolute minute, they're making the inducement with what? Vector candle. Vector candle to induce everyone now, buy side. And guess what? Now you understand this is an Asia whipsaw because it just whips it without pullbacks on the 5 minute. So guess what? You should understand, oh, this is London Open, my next time trap. My next time trap, okay. First time trap, checked. I traded the long. Second time trap, okay, what do I look for? I know it's Asia whip, so I know they should take this out in here. Perfect. So what do I wait for? Break of structure. No break of structure. That's the advanced trade in here, because that's the 1 minute let. Okay, that's the advanced trade. So obviously that's my trade, whatever, for the advanced people. You're taking the sell in here, top goes above here. But guess what? If you don't familiar with it so far, not a problem. Wait for what? Break of structure happens in here. Inducement into imbalance area, mitigation. It's the same shit, isn't it? You cannot even make a mistake here. You see that? If you're just waiting for the break of structure here, there's no mistake you can make. If you're just waiting for the break of structure here, there's no mistake you can take. The break of structure happened after this push. So you're waiting, you're finding your imbalance area. Perfect. Comes back, mitigates it. There's your limit order triggered. And then the next target is the whipsaw of here. Perfect. Right, so guess what? The next thing in line, this here Asia whipsaw target, that's done. Asia whipsaw is done. The next thing you're looking for, time confluence. What is it? Magic manipulation minutes 1. When does it happen? 10:30. Look at the fucking clock. To the minute, but guess what? Timing confirmed. You cannot make a mistake. There's no break of structure. There's no break of structure. When is the first break of structure? It is here. And what are you doing? Timing confirms to the minute the mitigation of the inducement of the completion of the Asia whipsaw. Asia whipsaw is lit heaven. Yeah, it is. But you see, you cannot even make a mistake here, can you? You're just waiting for the break of structure and then trade the mitigation, and you're having yeah, almost let. But guess what? Perfect timing, perfect inducement, perfect cycle, break of structure, mitigation. It's perfect. Incredible. Guess what? Your next target is a new higher high in here. Awesome. So you get that. What's the next thing? TP hit again. Right? So guess what? What's the next things in line? Now you know the Asia whipsaw is completed anyways. You're looking for a buy side. Because whip, whip, whip. Awesome. Asia whipsaw. Perfect. Done. Right? So guess what? Trading EDMs. 1 minute EDM. There's your imbalance. That's the push that led to the new break in here. Liquidity happens in here, imbalance area. You're trading the confirmed mitigation with an EDM setup. Trading the mitigation. Then you have another EDM on the 5 minute. When does this happen? Perfect. Magic manipulation minutes to the minute. So what the fuck is going on here? That's first day. You have a first time perfect. Break of structure, mitigation, perfection. Cycle, perfection. Second thing, timing to the fucking minute. Break of structure to the perfection. Mitigation to the perfection. Completes the daily cycle with the Asia whipsaw, perfection. Next thing, timing. Break of structure. Mitigation, perfection. What the hell? The next thing, EDM. And the next thing on a 5 minute EDM confirmed with what? Timing. Trading a line now with the structure. Right? Because the whipsaw is done. You're trading more buy side now. You're having M1 EDM, 5M EDM to the absolute minute. Okay. So guess what? They want to go higher, then do slow. When do they induce? New York trap time. New York trap time is called trap time for a reason. Because it traps. So what's a trap? Asia midline in this case. They're building the channel. Guess what they do before that? They're building build up, minor inducement high. So do what? Push the market lower, channeling, 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 channeling. What's the next trap? Asia midline. So the channel, inducing. And guess what? You don't even need to trade it. It just happens to the minute, as always. But guess what you do? You wait for what? Break of structure. After timing confirmed, after cycle confirmed, after build up, inducement, break of structure, mitigation. It's the same shit confirmed with timing. What in the hell? What? And guess what? Target new high highs. What's the next thing in line? EDM. When does it happen? What? To the minute, London close. What should London close do? They want to get the mitigations. But there's your mitigation. That's your demand. What? EDM. To the absolute minute. Are you kidding me, guys? What in the hell can we do? Perfect. 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 What in the hell, guys? Yeah, this one in here, after the Asia whipsaw is done, that's your break of structure. Right? That confirms the EDMs. Right? So this is the final trap with the Asia whipsaw. Now you have a break of structure, major one, whatever, main one. And then again, you train the EDMs on the 1 and 5, and then goes high highs. Then you need the inducement low. When does it happen? Perfect cycle, perfect timing, trading the break of structure again. And then the next thing is EDM. And when what does it happen? Timing. Okay. It's just insane, guys. So let's look how we could trade it. Guess what? You could trade it like this. Perfect. Again, cycle, Asia range, channel, inducement, minor, then perfect one into perfect timing. Frankfurt confirms it. You're waiting for what? Break of structure into the mitigation. Your limits, it's right there. Target, Asia high. Done. First trade of the day. Perfect. What's the second trade? London open. Vector candle. Guess what? Asia whipsaw. We're expecting this to be whipped. Okay. So what do? You're just waiting for break of structure into mitigation, confirm with timing, confirm with the cycle, perfect, into limit order, mitigation, target is Asia Whipsaw target. Perfection. Close it. What's the next trade? Magic manipulation minutes to complete the Asia Whipsaw pattern. Right? Asia Whipsaw. Whatever. Channel. Whip. 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 Higher. Asia Whipsaw. Okay. Get that in your head. Guess what? Happens to the minute. Magic manipulation minutes. You wait what? Break of structure into the mitigation. Choop. Next target. Higher high. Awesome. Done. Close it. Guess what? Here's your M1 EDM for next higher highs. That's your 5 M1 EDM for higher highs. Done. Confirmed with timing, 5-minute EDM. Right, perfect. With mitigations. So guess what? Next thing, trading. Again, that's an advanced one. You don't need to focus on them, but of course, we took it as well here. Right, so guess what? Build up after vector candles. Right, so when does it happen? New York Open. What is it also? I love it. I told you this, guys. I love it when the inducement itself, which is here, isn't let. That is so powerful. It is crazy powerful. If the inducement itself, which is here, isn't let, that is insanely powerful. And we got that here. Again, we have our build-up after vector candles, inducement being a let. I take the trade in here, market execution, stop goes above the inducement. You're aiming for at least these areas in here. But guess what? What do? They're building up the channel. The inducement happens when? Perfect timing. You expect the inducement. There's no mitigation here. No, you're waiting for an inducement. So guess what? The only thing you need to do, you wait for break of structure. Take the extreme. Track the mitigation. Limit order. Choop. Done. Done for the day. And it's up like this. Again, if you really wanted to, you can check this EDM as well, but that's kind of big in terms of stop loss area. That only would be a 1 to 3, so that's why not take it. All right. So guess what? 1 to 10, 1 to 6, 1 to 12, 1 to 10, 1 to 12, 1 to 8, 1 to 11. Like what in the hell, guys? Like what in the hell? That is 1 day of GU, literally 2 days ago, with a perfect schematic we showed you like last week. To the minute. Like, oh my fucking god. Are you kidding? But guess what? You only need one of those. You don't even need to trade every single one of those. You don't need to catch all of them. Right? So guess what? That's exactly the one we showed you like last weekend. And that's what happened today. And that's all the freaking trades you can get out of this one single day. So guess what? We show you the way, man. Like, how can we make that up? Like, it's crazy. We give you even the minutes, to the absolute minutes. Perfect, 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 perfect. Advanced. So 1, 2, 3, 4, 5, 6. 6 Mona Lisa setups of one schematic. We even give you the whole overview of the day to the pip and to the minute. Just think about that. So at this point, it's all about you. It's learn, practice, and support. Getting support, but also giving support. So that's why we're having our learn groups. That's why we're having our study groups, because everything is there, ladies and gentlemen. Everything you need. Again, it's learn, practice, support. Getting support and giving support. Engage, practice, 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 learn, study, revise, all the stuff. Figure out, again, we talked about it on day 4, figure out your own strengths, your own weaknesses, your own threats, and your own opportunities. Figure that out. Everything is lined up for you. You can do it. Right? Oh, let me ask you this. Did I make up any trade in here? Seriously. Does any trade in here does not make sense to anyone here? It's like, seriously, let me know, please. What's going on here? Perfect sense. Only one though. The advanced. Yeah, guess what? If that's advanced, okay, don't trade it. guess what? There's 6 other perfect Mona Lisa trades, which should make sense, right? So even let's say like there's 2. That's 2 that's not clean. Guess what? There's still 4, which make perfect sense. Even if it's 3, okay. Then there's still 3 perfect scenarios left. Okay. So even if it's 4, okay. There's still 2 perfect scenarios left for the day. Like, oh my god, guys. Right? So not every single trade of those you need to understand or you need to trade. Focus on what's clean for you because it's the same shit all over again. But every trade in here made sense. And again, for example, this one is just an advanced one. If that's too advanced for you right now, don't bother about it. You don't need to trade it. And again, that's just a let on the 1 minute perfectly after build-up inducement into timing, which is New York Open. And you expect obviously a trap in New York trap time. You trade away from that. But every single other trade in here was even confirmed with a break of structure, which makes it even easier. And with perfect mitigations all the freaking time. Let me just look at the chat quick. Awesome. Yeah, a few guys even saw this, which I love. And a few people even caught a few trades in here, which is just amazing. And again, the plan, of course, is to get you all there, right? But then the queue, yeah, no worries, man. You get there. Missed, oh, which one? Which one was it? Which one was it you missed? To try ice. Yeah, Dan, very good point. It's just repetition. Get these schematics into your head again. Get used of all the variations there is, like even the London knockout, the retail haven, like all the daily cycle variations, like higher time frames, the complex pullbacks, like also the efficiency of the pullback, the cycles. For example, here, there's no other way of trading this as advanced because again, it's just a build up of the vector candle and timing with the inducement being a let. That's advanced. There's no more confirmations you can get, but guess what? You 100% can trade it. 100% you can trade it. Again, if you're not there yet, don't bother. Like trade the clean shit like the EDM in here. Or like with the imbalance after the break of structure, like after the inducement, after the visual whipsaw. Yeah, just need to understand, like again, it's so important to understand that this is an Asia whipsaw, because otherwise you would look for short in here, or maybe buy in here, and then you're getting, oh my god. But that's exactly what they're doing. They make this kind of confusing. But again, guess what? If you understand the schematics in here, it's so clean. Same thing for retail havens, London knockouts, and so on and so forth. Daily cycles, of course, as well. And then guess what? You just combine it with to the left, and you will see even like the mitigation areas in here, which make sense. First in here, maybe inducement here, even inducement and mitigation here. Again, we can walk about through it tomorrow on TradingView. I show you on the edge as well, so you will see how we do it properly, right? But again, this and on here should make sense to you, right? What doesn't make sense is how to manage to find all this out. Yeah, it took a while to find that shit out. Trust me on that one. Years. But guess what? You guys having the best situation ever. I mean, guess what? If I had the opportunity to learn that from scratch like you guys did, what the fuck? I had to learn that shit like years and years myself. Like, there was no one showed me that shit. Right? So, I'm blown him. Okay. Okay. Yeah, we can think about this specific tomorrow when we go into TradingView, so it should get even clearer. But again, Jamal, for example, if it's just one confuses you, focus on the one which is clean for you. You don't need to trade the stuff which confuses you. And again, we talked about make it easy for yourself. And if you don't understand for whatever reason, let's say, again, advanced trades. Why would you trade advanced trades? And then just don't bother about them. Focus on what's clean. Focus on the timing. And again, timing is so incredible. Look, just look at it. To the minute, almost to the minute, to the absolute minute. 1, 2, 3. 3 in a row to the absolute minute. Like, how much more clearer can we make it for you? Like, it's not possible. And we give you the whole day. The whole day of how it should look like. And it looks like that. Okay. And then again, we combine with the build-up, inducement, mitigation, and you're waiting for the break of structure, and then you have the entry helper for confirmations also. Like, how much more? What can we do? Okay, so easy peasy. There you go, camera. I know you smashed that one. I know. Yeah, that's Gio. You can see it also. Let me just go back here. That's Gio in the 1 minute on Thursday. We will dig into it tomorrow as well on TradingView. I did not take all of those, but yeah, I missed a few, but just I didn't spot it charts all day long. That would be a nice reel, by the way. Yeah, it will be fun when we do reels of that shit. Is the EDM the only valid if there's... Okay, so the EDM, technically, it's always the same cycle you should always be aware of. So it's always the same order and always the same cycle. Best... Oh, fuck, where's my pen? So it's always the same thing as you see here. For example, let's even make it this one. You have an inducement. Then best case scenario is always you have a break of structure into mitigation, and that should become your let. That's one. So you have a limit order, which is 0. Then you have a let, which is the confirmed one, which is 1. And then after that, you should always look for EDMs after, right? And that's second. But in this case, as you can see in here, like you have inducement, you have your break of structure into mitigation, not a let. Okay, fine. So the next thing would be an EDM. But as you can see, there is no EDM. But then the cycle is completed here after the vector candle. So there just was no EDM. Fine. Same thing here. You have your inducement. You wait for break of structure. You wait for... Here's your let, by the way. Right? That's your let advanced entry on the edge. But again, you're waiting for the break of structure. Trading a mitigation, which also almost was a let, right? But then the next thing would be an EDM. But guess what? That's not an EDM. That's not an EDM either. So there's no EDM. Same thing. But you're just waiting for an EDM, but there's no one. Okay, no problem. But then the cycle is completed here. If the Asia whips are being completed. So there's no EDM. So guess what? It's the same thing all over again. Inducement, break of structure, into the mitigation, into a let. Perfect. So let. Now the next thing is EDM. So there you go. There's your build up. There's your inducement into the whatever. Makes an imbalance. Makes this push made the new break of structure. Create imbalances. Awesome. So it comes back into what? Look at that. It's the same shit all over again. Build up. Vector candle into imbalance, mitigation, into 1 minute EDM. Take it. There's your EDM finally. Then you switch time frames, you see the same thing. Imbalance on a 1 minute. And you switch time frames. This is also an EDM on the 5 minute, which was even clearer on the 5. When does it happen? To the absolute minute. You trade this too. Same thing here. What is it? You're waiting for inducement, right? Technically, break a structure here, and then whatever, mitigation, but there's no mitigation, so not a problem. So next thing in line, build up. Guess what? Here and here, that's your EDM, but it's not clean, is it? It's not clean. Technically, if you really wanted to, there's your imbalance, and there's your mitigation in the EDM. It's the same shit all over, isn't it? Same shit. But again, that's not clean and you should not take it because what is it? Like a 1 to 2? Who cares about a 1 to 2? You don't trade that shit. Just do what? Wait for the inducement, Asia midline. Wait for break of structure into mitigation. The first let was here. Okay, but it missed the mitigation, no problem. So guess what? You trade the mitigation. Same thing. And you're waiting for what? The first EDM. Happens here. Right? This point. This point. EDM with the mitigation. In timing. You see, guys, it's the same shit all over again. You cannot make that up. You cannot even make a mistake in this specific day. Where's the mistake? Show me. Show me. Like, where's the false break of structure where you could get confused at? You're just waiting for timing, build-up, inducement, mitigation, break of structure, and then follow the steps. Right? You see, you need to make something up in order to make a mistake here. The only question is like, what would you make up? And then we dig into it and show you like why you should not make that up. So it's very, very important as you understand the overall concept and see more variations to the whole theme as well. And hopefully that even gets clear for you. So if we don't even show you like one approach, we show you multiple approach, and then hopefully one approach is getting very clean for you. For example, this, like, I could sleep and trade that shit. So, but again, like it's not about me. It's about what is clear for you. That's why we show you multiple approaches and multiple confluences and multiple styles and also structure and maybe whatever other confluences there's so much variations to the whole field. It's all about what is clear for you, because not everyone sees the market the same way. For example, also Sakba. I mean, she took it, I think, you can confirm that Sakba if you want. I think you took it here or something, right? Which is of course like advanced trade. Oh no, sorry, it was Friday. I think you took GU and EU, like in the inducement.
Yeah, that
Yeah,
one
there you
was
go.
different. It was tricky. It was an inducement trade, but I think it was GU or EU. I forgot now. It did give like a mitigation approach as well, but I think it was EU that didn't give that approach. But it was an inducement trade anyway, so a bit more tricky.
Yeah, but I mean that's amazing stuff, right? And that's an advanced way of trading, and she knows it. But guess what? If you ask her, and she can tell about, for example, she can trade like that because she's obviously very advanced with the techniques. And guess what? She put in the work. She can tell about it more, a little bit more about what she did. She printed out like examples, did the back testing, like really printed out markups like over and over again. And she did exactly what we pretty much recommended her. And that's why she is where she is. Of course, she's putting in the work, and she did it always. Like she did this for years. Right, so guess what? Her success doesn't come from nothing.
Just the thing as well, even the inducement trades, everything is literally based just on the build-up inducement. Sometimes it's not a mitigation, but it's based purely just on the cycle. Like that's how powerful just understanding the cycle, whether it's the bigger picture or the fractal cycles that build up the picture to like a direction. It's just that one thing that you need to really like stress on that part, and then you can easily like go up and down and stuff. Just understanding the trend as well.
If you don't close out this trade, guess what? Getting a break even. If you don't close this trade out, guess what? Getting a break even. Alright, so guess what? Then the Asia whipsaw is done. But yeah, you can technically hold that one. But I personally closed that out here because again, like I know there's multiple trading opportunities afterwards. Same thing for the EDMs. I would love to close them out here because I don't want to risk a break even on here. Like why? Why would I risk a break even on this trade in here if I can close it out fully for 1 to 10 in here? I know the market will come back here anyways to make New York trap time. So why not closing out 1 to 10 here and enter it here again and get another 1 to 10? Right? So that's not hatching, by the way. It's not hatching. Hatching it would be if I hold this trade and make the sell in here. That's hatching, but that's not what I do. I rather would close that out and make a new position here and close that out and make a new position here. Not hatching. It's just string up and down, right? But again, don't try even to think about that right now. Catch one, whatever. Catch 1 to 10 and be good. Be good. Just clap in your hands and say awesome and move away. Like everything will come with time. You're 3 weeks in. You obviously will not trade every one of those, and you should not think about like hatching and I close it out here, open up here. Oh my god. No, catch one. Catch one. Start with 1, get consistent with it, and catch 1. Not 15. Alright, catch 1. Alright, and don't try to trade like that at the beginning. I just need to show you every trade there is so you pick your one. But don't try to pick everyone. No. Trade 1. Right, which is the cleanest for you. But again, focus only on the edges. Only on the edges, and then the next thing you should look for again is EDMs. But only use the let after the inducement, break of structure, mitigation. That's the only lets you should focus on. And then the only EDMs you should focus on is after exactly that. Right? So let's assume that an EDM would be up here. Like you don't care shit. Like why the fuck you would care about this EDM in here? Like you're trading into the wrong side. That's why it's always only inducement, timing confirmed best case, break of structure, mitigation, let right after EDM. And then you don't care. Then the cycle should be over anyways, right?
All right, so let's get into some really nice stuff. Now we're really going to dig into it, going to put it all together, everything that we've learned, and we're going to go over a couple of days of price action, show you the entry approaches, the higher time frame stuff, the lower time frame stuff, type of daily cycles that we can expect, knowing if you're trading away from a higher time frame inducement, that obviously one side is going to be pullbacks and the other side is going to be continuations, using that to our advantage regarding TPs and stuff like this, just really putting it all together. So let's get it. All right, so we're going to be looking at EG on the 12th to the 14th of July. So that's 3 days. This is our higher time frame. Here, I don't know why it says H1, it's actually H4. This is our H4 time frame. So first, before I even show anything, let's just sort of go through it and let's look at where our liquidity builds up and let's just sort of see how it all comes together. So obviously we have our equal lows here, and excuse the non-perfect straight lines, equal lows here. Okay, perfect. Next, I don't think that's straight actually, sorry, these are, can't draw a perfect straight line, but like that. So equal lows, equal highs, inducement high, and then obviously another set of equal lows, then we induce low, build another set of equal highs, induce high, induce low, into mitigation. This is our higher time frame lit cycle. So now we know, okay, we're trading away from this, and then we come down into these equal lows, take these out, and then currently we're sitting here giving another false reaction. Again, let's just go over the false reactions here as well. So here, again, you've got to remember this is the higher time frame, it's the H4 time frame. So these are obviously quite sustained reactions. So we build these equal lows and then we give this reaction up, saying, oh yeah, it holds. So now everyone's going to think when we come back to this, oh, this is going to be the perfect support level. We're going to bounce off it and fly to the moon, right? That's obviously not what happens. And then again, same over here, smaller liquidity, smaller reaction. So we give a little reaction. Oh yeah, it's going to hold. This candle's fully bullish candle. And then vector down, take that out. Okay, interesting. And then again, we build more liquidity here, multiple rejections off of this zone, this support level. Okay, people are getting tricked, especially here where we come and take out this high. Oh, it's in this, oh yeah, shift of market structure, we go higher. In actuality, we have lit cycle into that, lit cycle to the top side to trade away from. So let's now jump into the markup. This should all make sense. We've just gone through it, right? We had our liquidity build up here, and then obviously we also have all of our intraday stuff as well. You can see build up, inducement high, mitigation of the inducement to come lower, and then again build more liquidity, come lower, build more liquidity here. Then we see our vector candles. Okay, now we know that we should be trading away from this, but we've left all of this in balance. Obviously we don't have to come fill it immediately, but we come back up. This is now our lit cycle, our higher time frame one to trade away from, and then we trade down. Again, even at this point here, come back down into these levels, pretending that it holds. Same thing, and now we are right here where we have 1, 2, and now we're giving a reaction off of this. So what is this likely going to be? A false reaction, right? And then what you see is on the smaller time frame we have build up, like that, induce high, and then potentially mitigation. And underneath this, we have a potential mitigation to complete our lit cycle to the downside. Okay, so there you go. Obviously, with our higher time frame SMTs, it will still give a decent move on the intraday. So this is an example where you can absolutely trade. Like if you expect that you have a higher time frame SMT, you can absolutely trade it, but you just have to know, like, okay, I am like in SMT, so like overall I'm trading the pullback. So you just do have to just keep that in mind if you want to, I don't know, turn it into a swing position or whatever. All right. Then obviously the reason why this is a false reaction is because we are faking the reaction from liquidity, making it seem like, oh yeah, it's super strong, it holds, it holds, it holds. Okay, so now let's jump down. There you go, sorry. We've got our medium inducement with higher time frame liquidity above, so that's just this, but zoomed in. So what's next? It's a very good question. Let's jump down into the day itself. So coming into this day, we have build up, inducement low, into another build up, into inducement low, reacting off higher time frame, equal lows, right? Now, what are the possible scenarios that can come from this? Either we give like a little pissy reaction and then just smoke down, or we can just induce high and come down, or again, we can come all the way up to this mitigation, complete the cycle, and come to the downside. So obviously we don't want to predict, but we want to have what can happen in our mind, the different scenarios, and then when it comes to actually playing them, we obviously react to what we see. We don't want to predict anything. Okay, so this is our potential mitigation. You don't want to really make things up and go like, oh yeah, this one or this one or this one, unless you've got like lit cycles coming into them and timing and stuff like that. But realistically, with POIs, you want to choose the POIs that make sense. You don't really want to just be pulling random ones, right? So why does it make sense for this to be a potential mitigation? Because this lies on the previous day high. Absolutely, it does. So it's not something that we're going to take a limit from, but if we come into it in a certain way, we can look to trade away from it because we had a very nice build up with an inducement high. Obviously, this is previous day high now, but this POI is an inducement POI, right? It's an M5 inducement POI. So it does have some nice potential. That doesn't mean that we're going to set a limit on it and hope for the best. Absolutely not. We're still going to look to use all our confluences, our entry approaches, the lit cycle, everything, right? We're not just going to randomly apply it. Okay. So from here, like I said, we can either induce high to continue lower, or we can induce low to continue higher. It's just about how far do we induce high or how far do we induce low. So coming out of this day, we have this, right? We can see, okay, we have our first, we identified this liquidity, little FU into continue higher, obviously nothing that you would trade right here. Ideally, you don't really want to be trading until our first timing window, which is of course Frankfurt. And then again, we give the false reaction off of this liquidity. Okay, makes a lot of sense. Showing it. And then we induce high out of the channel, right? And then we come back to Asia high. We give our Asia high bounce, continuing higher. Now, right here, is this a mitigation that we would want to take? Likely not, right? Because it lies on liquidity right here. So what could we maybe expect? We could maybe expect this to be a false reaction, right? And then again, we induce this to the downside. You could potentially take this, but realistically, this zone's been tested 1, 2, 3 times. So coming back here, this would not be a trade that I'd recommend taking because it could very well easily just continue lower. So let's only look to take the really, really clean trades. Yeah, that's going to be our objective with this. Okay, so we're still within this overall SMT, and look at what we're doing. Building equal highs, faking the reaction. Again, it's looking very nice for a potential sell, right? But we don't want to pick out a random POI unless the lit cycle is very, very clean going into it. You've got your clean vectors coming up, you know, clean build up, which we do have, and then vectors going up, right? You know, maybe into something like this. Only in that scenario. If it just kind of prats up like this, we're not too interested. Okay, so that is a really big vector candle, right? Everyone who was selling from this little fake reaction and right here, now they've been smoked, taken out, and now people are potentially looking for buys, especially with this huge vector candle, huge momentum. The only thing we do have to consider is now we're going to sort of look for sells, but there's no clean POI on the left. There's nothing there's no inducement POI or like, you know, the Asia midline POI or something like that. No, nothing stands out, right? So we don't want to go and just pick a random one. So we're going to have, if we are to take this trade, it's likely going to be without the mitigation on the left. And our mitigation will actually be mitigation of the inducement. Okay, so let's go and check that out. All right. So at first glance, this looks great, right? If you cut it off here, this looks great. We've got our build up underneath the potential mitigation right here. That's our demand candle. You can also take it from obviously the imbalance zone. So this looks really nice, but let's just because we're looking for sells does not mean that we should not consider buys and think about the buys. So look at what we've actually got for the buy side as well. Build up, inducement low, what timing? Okay, interesting. You know, maybe we should start scratching our heads. So obviously we have our equal lows right here. We have our build up into our inducement, which is also within timing. And then looks like we're coming back. Only thing that would have been nicer, you know, potential like M1 relevant break of structure right after our inducement. So we also have to consider that we have that POI that we marked from the beginning of the day, right? If we just go back, sorry, this would be the nicest one by far, the nicest one, right? This would be absolutely ideal mitigation. The only thing we don't like about this is that it lies on previous day high, and that's exactly why we're not going to use approach 1 in this case, because of that exact reason. So that is our ideal POI. We also know that the inducement that happened after LO has happened in the middle of nowhere. If we just go back again, hasn't come into anything on the left. That doesn't mean that it can't work, of course. That just means we have to be a little bit more wary of it. It's not the ideal scenario, right? Doesn't mean it can't work, but it's just not the ideal scenario. And then when you also look at it overall, let's say that this right here is our mitigation, right? Well, all of this could just be the build-up phase for that overall inducement plus mitigation high. So obviously we have a lot of questions. So let's provide some answers. As we can see, we had our build-up, our inducement. Within timing, we came back down, mitigated the inducement, and now we're trading up. Now we need to ask ourselves, is this still a valid mitigation, or do we need to be a bit more careful? Well, the answer is we should likely be more careful, especially now as we've had as we've had a clean inducement to the downside within timing. We can see the equal lows being built. We can see the inducement all within MM2. We know that we've got a POI higher. So now we should sort of be thinking, okay, is this the best thing to take? If you're maybe, feeling, if maybe you have a bigger risk appetite and you want to take less confirmed trades, then absolutely go for this. But at the beginning, where you're looking to take your Mona Lisa trades, this is not something that you should take, especially when you see, okay, we've had an inducement to the downside. What would be the ideal scenario here? The ideal scenario is, if imagine we left these equal lows. So let's say like this price action doesn't exist. We left these equal lows. We then trade higher into this mitigation. Then this mitigation is good. But in our case, we have induced to the downside, taken liquidity. So this mitigation is not the best. Okay, makes sense. This is our overall. This is again back to the 5 minute. So what is our next timing? We've had Frankfurt, London Open, MMM 1 and 2. So our next timing is New York Open. Right? So let's do a little projection. Where do we think New York Open could be headed? Damn. What a surprise, right? Again, I know we said let's do a little projection, but when you're trading live, you're not going to be sitting there like, oh yeah, I need to, it has to do this and it has to do this. No, we're just reacting to what we see, right? So initially we were looking for sells here. Then we realized, and you can see it on the M5, built perfect equal lows, gave the reaction away. Again, look at this. We had our equal highs, equal lows. So our resistance now turned support. So, oh yeah, of course, I was wrong. It was resist. It's actually support now. How could I not have seen this? Blah, blah, blah. We induced that during MM2. Lovely vectors into our POI. We spoke about why this becomes an SMT. Should all make lots of sense. And then what do we have? So realistically, this is not an approach one that you're going to take. Completely understandable to avoid the limit. Why is that? This lies on previous day high. But just because it lies on previous day high does not mean that if we have other confirmations, we cannot take this trade. So let's head into M1. All right, so looking on M1, what do we see? Well, we have mitigation of the inducement. This would be an aggressive approach too. Obviously, we can see also this stop is quite big, so maybe you don't want to take that, right? Then following that, we have our M1 let right here, as you can see, perfect tap, mitigates this. So you can take this trade, put your stop loss above here, trade to the downside. That's our approach 3. Perfect. That will make sense. That is definitely worth the attempt. Okay, so now we have had approach 1, 2. Obviously, we didn't trade approach 1 or 2, and 3. In the ideal scenario, what would be next? What would be next? Exactly. It's going to be our approach 4. Okay? So, but before all of that, let's look at this. So we have now completed lit cycle here. You close this buy likely here, or at least partial it here and hold it all the way up to here. Now we're in this sell. So where should we be targeting? Well, on an intraday basis, we need to see where price gets to near the end of the day. So at this time here, it's a little bit after London close. So we know, okay, we don't expect huge movement for the end of the day. So potentially this gets saved for tomorrow. In that case, what you do is you target your equal lows right here. This is your intraday target, and this is your overall target, right? And that is how you would play this. If you're comfortable holding outside of intraday, then you can target here overall, but it would definitely make sense to at least partial right here. Okay, so as we can see, there's our M1 EDM here and here. That completes approach 1, 2, 3, and 4. And now we know, okay, we can expect price to smash these targets. There you go. There's your intraday target, but look at what we're doing. It's end of day consolidation. I guess in this case, we're more channeling downwards, but still, this is end of the day. So we haven't met our overall target by the end of the day. That's absolutely fine. Happens. So there we go. This is your 1 to 5, 1 to 15, approach 2. Again, you could even take your, that's not approach 2, approach 3, sorry. Let's go back to here. Realistically, you can take this because we've got targets much lower. But if you're maybe uncomfortable taking it just off the inducement, absolutely, you can wait for the mitigation with the let. That's your approach 3. Take the trade all the way down, hold it to at least your next liquidity point. We know that that's this, but obviously we're getting towards the end of the day. So the next best target is right here. And there you go. Smacks down. Okay. All of that should make sense. We've just followed basically just trading away from the inducement, right? Here, we know that, okay, we can get a false reaction. We know that we have 2 scenarios from this point. Either we go right down, induce low, and then we have a bullish day, or we come back up, induce high. We don't necessarily have to come to this POI, but that is the ideal scenario, and that's what we get. We come back to this POI, which was also our M15 inducement. That's our medium one, to trade into our major inducement. That's what these trades are. Trading away from our medium one into our major one. All right, perfect. So there's the RR. Let's go on to the next. So now we need to look at a couple things again. We need to reanalyze the situation. Realistically, not that much has changed. So we're still overall trading away from this inducement, right? Overall, we're trading away from it. We're now, this is Asia low of the next day. We now have a potential mitigation right below. Okay, so this is really, really interesting. We've got our potential mitigation right below, and you can see you need to make it out on the H4 time frame. What happened? This was obviously the day that we've just looked at. We had our false reaction, build up, inducement high, and then we came back, mitigated the inducement before continuing lower. So that all looks really, really good. Everyone should understand that. And now we have our potential mitigation here. So let's jump down to the lower time frame and let's think, what could we expect in this case? Okay, so overall, we know that at the moment, we have a potential mitigation lower, a liquidity build up here, and we have this potential POI. Now, this is going to be more of an advanced trade, but it's still a really, really nice trade. And what is this trade? Well, it's our fast and Francturious into inducement of Asia low into mitigation of the overall POI, completing your lit cycle. Yeah, makes sense? Can't really complain about that. So let's have a little look. And then, before we even do that, build up, inducement, but we create equal lows right above this H1 POI, just making this trade that much nicer, making this trade something that we really want to look at. Okay, sitting above Asia midline, so you've got your build up, inducement, mitigation, Asia midline confirmation as well to trade into the overall inducement. Very nice. And then again, we go into another build up for London Open to give us the inducement to the downside with what? Strong vector candles, right? Strong vectors. And now we have completed our lit cycle to the downside. So now we can think, okay, now we want to trade away from this inducement, right? So let's do exactly that. We're coming up to Asia high. So at this point, if we get if we come into this, is this going to be a valid mitigation? I'll let you think about that one. Obviously not, right? It's going to be a false reaction from this overall liquidity. We go into a build up, induce that build up to the downside, come back down, mitigate this zone right here. And now, where are we targeting? Well, we know that we've had a build up of liquidity right here. So it makes a lot of sense because, how do I explain this? At this point here, let's just think from like an account management point of view or a trade management point of view. After we come up here, what happens? Potentially, we've just grabbed liquidity, right? We've just grabbed this liquidity after we take this. So next, we could potentially expect a liquidity grab to the downside. Where is that going to be? Well, that's going to be right here, exactly where we took this entry, right? So that's why you need to at least partial here, most likely close, because after this, we will have a liquidity grab to the top side and then we'll come down and grab liquidity to the downside. Obviously, sometimes because we're trading away from this major inducement overall, we might just go like that. But a vast majority of the time, you'll expect some kind of pullback after this sort of liquidity grab, because look at the way we build the reactions and we fake it. Again, this is what we spoke about, showing their hand, showing their hand, showing their hand. They show you what they're going to do. Same with this on the higher time frame, right? If if you think about it like this, it was very similar on the higher time frame where they showed us what they were going to do and then they did it. Same up here, they showed us what they were going to do and then they did it, right? So when we have something like this, it's not about forcing what you want to see. Sure, ideally we'd want to see, are we getting buys and all the buys fly straight up? But obviously that's not always how it works. Rarely how it works, right? So this would make the most sense to close off this trade right here, as we expect a pullback. We don't expect a full reversal as we are trading away from this major inducement, but we do expect a pullback down, right? Okay. Then, same thing. Building more liquidity right here. MM2, we vector through. Build liquidity, fake the reaction, come back up, mitigate the inducement. We only mitigate M5. So I don't believe that there was an M1 refinement down here. So, you're not going to take this just to trade it back down into this. So you're talking like your 1.5 RR. Okay. So we get exactly what we expect. If I remember correctly, this was CPI. So we just missed, initially, we just missed this mitigation, leaving it here. And then what price does is it whips high, comes down, fulfills the mitigation. So now we've got our lit cycle trading away from the inducement, away from the lit cycle and away from the inducement. Perfect. Then again, same stuff. What are we doing? Building equal highs right here. What can we expect? Price to push higher as we're trading away from this inducement, our higher time frame, lit cycle, plus lower time frame one, right? So we obviously expect price to go higher. So let's dive into M1. Okay, perfect. So right here, what do we see? There's the mitigation of this inducement, and then also obviously this mitigated something to the left. And then after that, we give our, again, perfect M1 let to trade into these equal highs. Again, getting close to the end of the day, so likely you can just target that for a quick 1 to 5. Okay, perfect. That should all make sense. And then we go into our end of day consolidation and build liquidity for the next day. Now, let's speak about the daily cycle. What kind of daily cycle did we get? Let's go all the way back. So at this point here, what are the daily cycles that we could expect? Yeah, we don't need this mitigation. That's important. It doesn't need to mitigate. It's not a requirement. So we could expect we could expect a retail heaven, or we could induce Asia low, London open, and then get our London open knockout. Now, obviously, when we see this inducement to the downside at London open, this is the point where you've got to think, okay, at this point, I'm probably getting a London open knockout, and I need to be mainly looking for buyers. That doesn't mean that you can't take sells, but any sells that you take, you have to acknowledge, okay, these are likely going to be pullbacks, so I have to TP with that in mind, right? I have to understand that they're likely going to be pullbacks, so I need to TP pretty conservative. Either you're going to TP at, like, let's say you take sell from here and there's like immediate liquidity here, then you TP there. Or if there's not immediate liquidity there, then what you likely do is you TP on the mitigation itself. So something like that, right? Cool. Okay, should make sense. And then obviously we got our London Open knockout daily cycle. Again, we should know, if we decide to, I don't know, let's say you decide to take this, you should know, okay, I need to target this immediate liquidity here. You shouldn't be aiming for the moon and, oh yeah, we're going to take this low, right? That's not what you should be thinking. Okay, perfect. So now we have a couple questions to answer, but first, I actually want to show you the significance of the topside inducement, because technically these are both major inducements, right? So we need to think, okay, obviously all you really need to be doing, you don't really need to have like this level of understanding. You can literally just say, okay, I've got my inducement here. I'm looking for buys. Okay, liquidity build up here, inducement high. I'm looking for sells. Okay, inducement low, looking for buys. Okay, we've completed our overall lit cycle. Looking for sells. Okay, 1, 2, 3. That's our third tap. False reaction. Now we complete the lit cycle to the downside. So we've induced to the downside, and now we're going to look for buys. You can literally do it like this and just understand your most recent inducement and just trade away from that until you get an inducement to the other side, and then you just trade away from that, right? But I want to show you the significance of the top side inducement. So let's have a look. It's not just these H4 equal highs. We have also induced all of this liquidity, all this channel liquidity been induced to the top side. These equal highs induced to the top side. Look at that daily candle. How many people, after seeing this momentum to the top side, right? Pushing with lots of speed. How many people do you think are currently looking for buys at this point here on this daily candle? How many people do you think get FOMO and have a buy right at the top up here? Quite a lot of people. So that makes sense why we give such a violent reaction away from this, and why this becomes the very significant inducement that we should trade away from. Okay, so what exactly does this mean? Well, likely our inducement to the top side should be weighted a lot more than the inducement to the downside. This one right here. Okay, so if we're going to continue to sell off, what we need to see is something similar to this, and that's it. We just need to see a liquidity build up, inducement high. Would be lovely if it came with a mitigation as well. One of these points, liquidity build up, inducement high, trade away, mitigate the inducement, trade back down, and then we will likely come for this liquidity overall. Yeah, that should make logical sense. But for now, we're trading away from this inducement. So buys it is. Nice and simple. Okay, jumping in. So let's remember what happened the previous day. Let's just go back and remind ourselves what happened the previous day. We had significant inducement, major inducement in fact. We're now trading away from that. Okay, all of that should make sense. So coming into this day right here, looks a little bit bare at the moment, but let's put a little bit onto the charts. So again, we have this liquidity build up into inducement, nice vector candle. Although it's in Asia, so we do need to be a little bit wary of it. We also have this liquidity build up right here to the top side. Okay. So coming out of Asia, we induce Asia high. This is our minor inducement. Then you can see we have build up, inducement with vector candles, but we also know, okay, this is the previous day high, and what do we know? We're trading overall away from our inducement to the downside. Not just this one, but also our major inducement. So realistically, we should be looking for buys. So this is likely a false reaction at a quote unquote key resistance level, but we have still had a build up and an inducement high. So it should overall be good enough for a mitigation. And then this is very similar to the first day example, right? Where we had build up and then like build up like this, and then we induce low first. If we induce low, then this mitigation becomes less and less nice, basically. Same with this. If we induce low, then this mitigation becomes less and less nice. Simple as that. Don't really know how to put it in any other words. Okay, so then we see huge channel to the upside, induced high, and now we have induced it low. So let's also jump into M1, as this is where it gets quite tricky and quite fiddly, but let's see. So on M1, we actually give a very minor break of structure or change of character, right? So at that point, we have to think, okay, where are people going to be looking to sell from? Well, structure's now shifted to the downside. So this, not only is it where resistance traders are going to be selling from, it's also where structural traders are going to be selling from. So we've got lots of structure traders and resistance traders selling from here now. That just means that we're not going to be looking for sells at all right here. Doesn't necessarily mean that you have to look for buys if you don't feel comfortable with it, but obviously we also know that buys are, from trading away from this inducement and our major inducement, buys are the main play. They are what we should be looking for. So then within this SMT, we have build up, inducement to the downside. Then when you look on M1, this is our inducement to the downside. This is our relevant break of structure, as this is the high that caused the low. So that's our relevant break of structure. And then we come down into the demand candle. But like I said, it's always best to take it with the best chance of being tagged in. So in this case, the imbalance candle is your best chance. So take it off the imbalance with SL, of course, at the bottom of the demand. All right. Again, they could not be making this more obvious as to what is going to happen next. So we now have another build up. We are building so many reactions within all of this. So many. So we need to, begin to question things like, do they think we're stupid? Probably. And then look, build up, inducement low, what timing? MM2, can't really complain at that. Where should we be targeting? Again, similar to the previous day that we just covered, where we had like a big liquidity build up. There's a lot of liquidity here. So after we take this liquidity, what are we going to expect? At least a pullback, right? And at least a pullback to take some liquidity. And we've got liquidity here and liquidity here. So that means that both of these entries are at risk. And this one here, if this one presents an entry, they're at risk, right? So this makes sense, definitely for a partial point, and realistically, almost definitely for full profit as well, especially if it's above this, as this is our first like significant liquidity point after we've grabbed the liquidity high, of course. Then, boom, look at that. We vector high after we've shown the liquidity. Here we really showed it. 1, 2, 3, 4, quadruple top, right? And then we induce high with vectors. Now it's time for a pullback. Obviously, we should know why it's just a pullback, but let's first think about where our liquidity is to the downside. So we've got, yes, this was a break of structure and a little minor inducement, but looking at it now, it's just perfect. Not perfect, but relative equal lows. Then obviously our next liquidity point is also here because we've got multiple taps. You know, this is like a nice support zone, also a structural point. So we understand, okay, this is where our liquidity is. Then, as we can see, we had our build up and then also our build up over like our higher time frame build up. This is our little M11, but we also had this overall build up, right? So we had that nice momentum to the high side. Unfortunately, there's no real entry within this. You could take it off the demand candle and say, okay, I'm confident in this inducement. I know that we're going to grab some liquidity to the low side. So this is a trade that I want to be in. Even though there's no imbalance with my POI, I'm going to take it right off this demand candle. Supply candle, sorry. I get them mixed up when you're going so quickly. So now, what I also want you to notice is that we are building equal highs here. And this will be relevant in literally a couple seconds. So ideally, we know that we have liquidity here, liquidity here, and we've got that liquidity on the M5 right here as well. But look at what happened. This is where it gets quite tricky. So now we have liquidity built on either side. We've got equal highs up here and equal lows here and here. So what should we do? Well, we know that overall we are trading away from our higher time frame inducement. Yeah, our higher time frame inducement, which was to the downside, and this inducement right here, even though it is in Asia, so it's not the best, but we can still understand, okay, major inducement, and then we have this inducement in Asia, right? But in this situation where you've got liquidity on either sides, what you need to do is you need to wait. You need to wait, you need to sit on your hands, not make any silly decisions, and you need to, just sit on your hands, wait it out. Let them show you what they're going to do. Okay, now we've taken liquidity to the top side with a vector candle, vector candles in New York chap timing. So this is the point where you can jump down onto the M1. You should not constantly be sitting on M1, 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 M1. No. What you need to do is you need to identify your build-ups on M5, and then once things get interesting on M5, i.e. you've induced your build-up, that's when you can hop down to the M1 and refine. And there are some cases where you don't even need to hop down to the M1 to refine. There's nothing wrong with taking it off the M5. We don't need to be getting, especially at the beginning, all you need to be doing is catching the clean moves. You don't want to end up refining something and, let's say on the M5 it's a 1 to 10, but on the M1 it's a 1 to 15. And you think, oh yeah, I really want that 1 to 15. You don't want to end up missing out on that 1 to 15, on that 1 to 10, just because you wanted a 1 to 15 or a 1 to 12, right? Sometimes we have to go, okay, this is a 1 to 10. This is more than enough. Let's take this so that I get tagged in. That's the exact same reason why over these weeks, I always tell you I take the best opportunity to get tagged in. If that's the demand candle or supply candle, fine. If that's the imbalance, if that's the candle on the imbalance fill, that's fine. If that's the M5, That's fine, right? So I just wanted to make a little note there. We don't want to go crazy with our over refinements. Okay, again, here we don't have our clean break of structure into mitigation. So here, again, this is why we say that the break of structure part is optional, because there's going to be a lot of times where you're waiting for your break of structure, or you may even, be waiting for your M5 break of structure, right? But realistically, is this going to be a break of structure or a liquidity grab? I'll leave that for you guys to think about. Then the entries are like the order flow entry. It's not the nicest. It's probably not something that I'd take. Maybe, especially not for like first trade of the day type thing. But if if you're already in like a good stead, this is where, you're already up for a bit. You're no longer playing with your own money. You're playing with the house's money. You can begin to, oh yeah, I'll give this an attempt, right? Because the RR is very good. You know that this isn't even your overall target. Your overall target is going to be, and this is, again, I literally just spoke about it a couple of seconds ago, watching too much on M1. If you're just zoomed in on M1, this can look really nice. Oh yeah, this is our inducement. Now we trade away from it. But when we take a step back and we look at the M5 time frame, we've got our equal lows here. And we're reacting away. Maybe you've got your smart money traders. Oh yeah, equal lows, FU, this mitigation. But we know we shouldn't take a mitigation from here. Why? Lies on liquidity. So this is very likely a false reaction. What can we expect after this? Interesting. Just tap it out. All those smart money traders that are in here, support and resistance traders that are now at break even, right? People buying from here, after it moves away, they're at break even. So they've all been tapped out at break even. Oh no, what a shame. Vectoring down at the very end of New York trap, and then boom. What a shock, right? Then we take, and this is how they keep them in the game. This is why it's so important, right? Think about it. What happens is they take them out, sometimes by the smallest of bits, right? They'll move to break even. They'll take them out at break even. And then they see price, as soon as they've been tapped out, start reversing and going in their direction. Obviously, that gives them the idea like, oh yeah, this works. I was just unlucky that time. That time it was just unfortunate. Next time it will be my time. And this is exactly how they get them. So again, let's look into the lower time frame. We just had an inducement low. Again, also want to go over this as well. Wicks. These rejection wicks like this, everyone sees this, oh yeah, this is a strong rejection. I'm going to add another position in here and, stop loss below here or below here. But wicks are really good forms of liquidity because everyone sees them as safe. So everyone puts their stop losses below the wicks because they see, oh yeah, it's a rejection. We're rejecting that area. This is a good area for my stop loss to go under. Just a quick little note. And then again, we get very nice M1 let. And then we come down, mitigate the M1 let, take that trade wherever it is up to these highs to end the day for our end of day consolidation. And as you can see, London close was the highest point in the day. So it's instead of getting a London close mitigation, we get London close being the inducement, and then we trade away from it. Realistically, if you're going to be taking, a London close trade, you're probably going to want to get out at like an imbalance fill, maybe a higher time frame one up here, something like that, like M15, M30. You're not going to want to aim for liquidity down here, especially because it's end of day consolidation, and we know realistically overall we should be looking for buys. The only reason this liquidity got taken was because we built lots of liquidity to the top side, induced it, built more liquidity, induced it again, and then we came down, sliced out all of this liquidity, and then the buys played overall. So let's just give a quick look at the overall higher time frame from where we started. And again, I just want to point this out. When we started, this right here is 3 days of price action. Okay, 3 days of price action. That's all. A couple of candles. So we started right here. We had false reaction from this higher time frame SMT. We didn't know how far it would react up, but when we began a build up and then we induced it with vector candles, remember I showed that on that M15, we were clued into, okay, maybe this is as high as it goes. We can potentially get a mitigation of this inducement to continue lower. We then came down, gave a false reaction up into the mitigation before the mitigation of the inducement, before continuing lower with nice vector candles, especially on intraday, right? Then we had our major inducement right here. That's not good. Major inducement plus cycle. Yeah, because we've had build up, inducement, mitigation. So now we're trading away from this. And now we're trading away from this, but how do we know how long we're going to be trading away from this? Well, to be honest with you, you don't. This is where you need to get out of the mindset of predicting, and we just need to react. So we've got a couple potential mitigation zones. But how do we know if it's going to be this mitigation zone or this mitigation zone? Or maybe it will be none of them. Well, it's exactly the same as what happened over here and here, right? What do we need to see first? We need to see a build up. Then you want to see an inducement. And then ideally, you want a mitigation. Now this mitigation in this case up here can be a mitigation of the inducement, or in this case up here, it can be the inducement can also mitigate, right? So going into, I think we will cover this at a later point. We'll go into how it plays out, why it plays out the way it does.
Hello, everyone, and welcome to week 5. So now it is indeed my part to show you a couple of examples. So what I will be doing is actually showing you an entire day example in depth on gold, as you can see over here, the 4th of gold. So what I will do, of course, is start in Asia and then build away the picture for the rest of the day. But mainly, most importantly, should I say, is understand the main target of the day. That's key to understand the overall direction. And then you can decipher what is a pullback trade and then what is your pro-trend trades. And this will help you identify then your targets. Are they very short-term targets being the pullbacks, or are they the targets that lead up to the main target? So if we start off the day, let me change my pen color first to black. Maybe that's a little better. So let's first see what our intraday target is based on the price action we currently have. So what we can see is we have Asia, as you can see in the purple box in front of us, and we have the previous day New York over here, as well as all these price action bits of lows, highs, creating these structure points. Now, I'm not interested in them as a structure point, but just, again, for argument's sake, just marking them up as an average. Now, the way we see this, well, we can see already these points here have been induced, where you could say the buys or the buy pressure has been induced by this reaction in Asia. However, we have the remaining highs intact. So this will be your yesterday's high. And then we have these other structure points in the way, not really having significance in that sense. It's end of day liquidity from this point. You can see it's around London close, around about there. Then we get this choppy price action in Asia, and then whatever, this little mess that goes on in the price action stage of buildups. So the question really is, what is our intraday target? Based on what I just mentioned, not a very strong reaction of sells from this point. Everything in between didn't really do much. As you can see, Asia already traded below that. So a lot of this liquidity has been taken out to the buy side. So these buyers are taken out. However, the sellers are not taken out. So what that likely means is we then have our yesterday's high as our main target of liquidity. Now, also what's key is it a reasonable target? Well, yes, because it's not very far off from where we currently are trading in Asia, let's say around there to there. It's a pretty decent range. Now, it doesn't look like much, to be fair, but again, we're waiting for some sort of pullback likely over here. Then ideally trade into there. Then we want to take our sells because our main target is now induced. So once it's induced, trade away from the inducement and then start taking out these lower levels of liquidity. Now that is the ideal cycle we want to see when it comes to the daily cycle play. But what we must also do is ensure we have our confluences in play. So the question is price ready to continue bullish in line with our target? Now, this is key for understanding your build-up. So you need to mark up your build-up liquidity stages. If you remember them, that was your trend lines. That was your equal lows, equal highs, your breakout traders, your smart money traps too. So these are, you could say, random points of imbalances or mitigation zones as smart money traders would see it. So, and then of course, your Asia high and Asia low. That's pretty self-explanatory at this point. So if we mark them up, what we can see is we have a pretty good amount of targets. So we have Asia high right here. We also have the smart money trap right here. You can see this little mitigation point very close to Asia. It's in such a close range, we can likely expect that will be smoked. We're not sure if it gives a reaction yet or if it actually gets straight smoked as a smart money trap. An FFS. Then we also have our build-up phases. We have a build-up of liquidity above the smart money trap, which also helps us understand why this is an invalid zone, as we still have liquidity to the high side. Now, another key factor that can help us identify why Asia low may not necessarily get induced in this case is because of this 5M lead. Now, it is a 5M chart. Hopefully you noticed that up there. Should have mentioned it, but yeah, you should see that at this point. I always start off mainly on the 5M in these examples. So the 5M let usually helps us identify direction when it comes to an Asia inducement. Now you have to backtest this as well. Don't just take my word for it, backtest it. But you will see that the 5M let does have significance when it comes to the direction of where price may trade into Frankfurt or London Open as the first target of the day usually. So in this case, what we can see, if we just mark up this liquidity, whatever these trend line bits there, lows, and then this random structure point there, we even have a fractal buildup over there. What is this? An inducement, but they are vector candles within the inducement. Then we get our 5M let after we break these relevant structure levels. Price reverses, perfect mitigation, and then price has given a very lovely reaction at this point where we currently are trading. Now, that doesn't mean to say, of course, this isn't valid Asian mitigation, we should be trading it, but it's for the understanding purposes. If we get a 5M let, not a 1M, it has to be a 5M, you may indeed expect price to then continue into the direction of the main target. Now, again, what's key to understand is this lines up with our target, which we marked up first. Our main target is the first thing we need to mark up. Then we need to mark up our liquidity levels. And only then I use the entry helper right at the end to help confirm direction in the beginning of the day. So let me clear those drawings. So I guess the next thing is let's see what price action will present us. So let's see the reaction. Okay, so price has indeed continued bullish, as you can see from here. London open window doesn't look very nice, be very honest, very low liquidity, very low volatility as well. And indeed, this was actually a smart money FFS reaction, sorry. As you can see, price did indeed choop straight through it, gave no reaction. So it's an FFS. So this is nice because it helps us build our direction. So what we can currently see is indeed price does continue bullish, as we did mention, likely from the 5M letdown hit. So what happens is the smart money trap does indeed cause a FFS in this case. As you can see, it did smoke through the zone over here, didn't give a reaction. Unfortunately, London did give a not so volatile reaction. It kind of stayed within the range of this smart money trap zone, likely inducing smart money traders to take sells. They get probably mad and then want to take more sells. Equally, we could see this as a double top of liquidity. So again, taking in account of your resistance traders. So it's all a buildup of liquidity. That doesn't mean we're necessarily finding an entry here. So as you can see, the 5M let did cause the reaction of such, where we had the 5M let after the inducement over here for price to continue bullish, likely in line with our main target, which is ever so slightly above at this point. What we can see currently is that price has had a reaction of structure to the left over here. So it's reacting within this structure point over here of New York the previous day. It's given a very strong reaction of a wick. Again, this is on 5M, so can't see too much over here. But what we will do is go on the 1M chart soon to see exactly what's going on and see potential entries. But let's first understand this a little better. So we can likely refine on the 1M timeframe to identify pullback trades within this fractal inducement cycle. Now, remember what I mentioned, that our main target is indeed here. We haven't reached there yet. Maybe we get a pullback, which we can trade only with the confluences aligning, identify a target, also close the trade, take the continuation trade, which should likely present an entry, and then only until we reach the target up here to the left, then we may also get the same cycle, but now this becomes the pro trend trade. Now, why does it become the pro trend trade? Is because price has then induced the main target, we can reverse. So this is an entire day example and how you can get multiple main targets of the day. Well, mainly two, I would say, where price is continuing, let's just say bullish or bearish, and then the target's complete. Now, because it's complete, you're taking the main trade of the day, which is against the inducement. So right now, this is essentially trading into the inducement. But let's likely see if there is an entry opportunity, maybe on a pullback of this structure point. So let's clear things up a little bit. What can we see? 5M chart is over here, but let's just see what the 1M chart does present us. So on the 1M, we can see the London box of liquidity at this point. We have these perfect equal lows over here. We have vector candles. Now, this was that reaction we were talking about off the wick over here. So we get perfect vector candles. We have a very nice mitigation POI actually over here. Again, it's a fractal inducement because it's a pullback and not necessarily a pro-trend trade. Hence why I mentioned fractal. Then what we also have, which is very key, I would say, in pullback trades, is eligible helper confirmation. And what that would be in this case is potential let opportunity, because the price did cross over. Upon completing this pullback over here, we may indeed get a let. However, everything else does align from the build-up inducement mitigation aspect. We didn't get a relevant break of structure just yet. That would be indeed over here. Maybe also a smart money trap, but the relevant structure would be having to break that point there upon reversal. I'm not too keen on that just yet, as I can already see price may just reverse. I do like taking it as such without relevant breaks of structure. You don't need to use it. I personally don't like using it too much, unless it does appear, of course. So let's clear things up a little bit and see what price action will show us. Now let's see the reaction, what it gives us first. Perfect. So we get our 1M let. As you can see over here, perfect 1M let. Reaction's a little bit messy, I'll be honest. It's a bit of a choppy reaction. Nevertheless, it did hit our target over here as a pullback trade. Now, target-wise, we do have equal lows as our first target. However, what we also have as our main targets is a pullback, actually. So we have our pullback target of the POI with the imbalance over here. Why is that a target? Well, it's just a generic target for price to fill in these imbalances. If it breaks the low here, that's completely fine too. I don't really, should I say, care in the sense of if it reacts there or not. To me, it's a target within this little purple box of a zone. Within this area, I want to take profit essentially in there. So we have is also almost MM1 for when we had our let. I would say it's just ever so slightly off, maybe that's like 5 or 6 minutes. Still very valid. So it's an MMM reaction, or MM11, which is 10:30 a.m. UTC plus 2. We have the 1M let after the inducement, after the buildups of liquidity. Now what's happening is we're getting more buildup, which gives us the intention that price will continue to take out this as well as this, and then continue maybe into our POI. What's also key is when it comes to risk to reward wise, stop loss will be just above this high. It's pretty decent. Entry is here, pretty decent. Risk to reward, I can't magically guess right now, but that will probably be maybe a 1 to 10, and that's pretty decent for a pullback trade. And the only reason why you would take a pullback trade if there is actually reason in the sense, is it worth risking your money to take the pullback when it comes to a target? So target-wise, it makes sense. It ticks all the boxes. So let's clear that up. Now, what another question here we have is, before we continue, is there potential for a second entry? Now, you're probably thinking, where would that be? Now, let's probably zoom in a little bit better. Maybe it will help us. So we can already see the 1M let. So that's just a mirror image of this reaction here, just zoomed in a little better. So a consecutive mitigation POI with potential for another let. So this is why it's key to mark up your buildups, and then you will identify this much easier. Maybe you didn't see over here. Oh, that was a bit wrong. Let's do that again. Around here in this area, what we see currently. So when you zoom in, it's a little bit easier. We've got another mitigation over here after having this trend line type of pullback. It is also equal highs or whatever you want to call that over there, but nevertheless, it's liquidity. leading into potential POI again. And what's really, really key is the potential for another let over here, which looks really, really nice as we haven't had the pullback yet. So when the pullback forms, maybe that's what causes the line to then tap. So characteristics look really, really juicy over here. And let's just see what price shows us. Perfect. So we get a 1M let. Looks ever so slightly off. Nevertheless, it basically did its job at that point. Either way, you should, if you take it in real time, be tagged in based on spread. You will take it a little bit less off anyways. Nevertheless, what is the reaction it gave? A very lovely one. It induced the structure points. Smart money trap, or is that an FFS? That's an interesting one. It technically is an FFS. It broke through ever so slightly, but arguably you could say it's somewhat of a smart money trap with that reaction over there. However, 2 perfect entries on a pullback. Now remember, pullback trades don't always look this nice, so avoid them if you don't find them clear like this. Make sure they're basically like this with a whole lit cycle in making sense and with a very clear target worthy of risk to reward. So at this point, price is actually away through pips from the target POI. You can see we are there creating this fractal lows, and the imbalance is just ever so slightly low over here. However, what's another important timing factor is, you can't see it properly here, but we have MM2 coming, or MNM2 coming, and that's 1230 UTC plus 2, which you should at this point have that remembered. You're on week 5 content, so you should have that deep in your brain. So as we are approaching that, maybe we get the characteristics we want of the vectors inducing low and then tapping into this area, but we'll see what happens. But timing likely may play a role to create cause essentially, and then we can understand whether to then take our profit. So let's see what happens. So if we do get a MM2 reversal, we must build the COE, which is your confluence of events. So can we identify a fractal buildup? Yes, we can identify a fractal buildup. As you can see here, we marked up the liquidity both to the low side as well as the high side. What can we then wait for right now? Well, we have an inducement. So we have an inducement. We have this slight vector candle. Now it is a 1M price section, so it's not going to look the clearest generally. However, we have had an inducement of this perfect lows over here. Now it's a matter of, well, could price possibly come back here? Well, maybe it could. Now, this is where your relevant breaks of structure will help you, because it did break these relevant structure points over here, which led to the inducement. Price is now trading there. So at this point, we can detect reversal characteristics that price is now essentially reversing in this case, and maybe to then take TP after this point, because we're seeing a whole new cycle form. Now, what we also can see is a mitigation. This is where it's key, because now this becomes what? The pro trend of our trades. So these are pullback trades. You take it and then you close it. Pro trend, we take the mitigation and we want to expect price to break through, 100% break this structure point at that level. It's not really like a structure point of any validity. It's just a pullback. That's why we don't really care what it is. On the way, we induce these liquidity points here, like such, smart money trap or FFS. And then, yeah, we've got a very nice build-up appearing too. So let's see what happens. So we get a mitigation. Lovely. Entry help was not very nice on that one. Could have been a let. Don't get me wrong. So that high is also this high. Could have been a let. I would say it's very choppy. As you can see, price did react. Not the nicest. But nevertheless, cycle-wise, it's all there. So let's see. With the characteristics of this fractal cycle, we can likely expect price to continue bullish from here as enough liquidity has been induced upon a fractal scale. Remember, price will gravitate towards liquidity over POIs. So that's key in understanding why this POI didn't necessarily mitigate, because the target has already been complete. It's created enough liquidity that now it's enough that price can continue. And this is why we don't necessarily choose random POIs. This was just for an argument's sake of actually a target, but not not a target to buy, but a target to actually close our profits. So that's very key. And let's see what price does. It's almost MM2. We have let potential for a second POI. This is very nice. So just like the first one, we get two very nice entries. Now we get an entry that's probably even cleaner, where we actually get, again, let potential. You can see it's crossing over. It's there right now. Upon pullback, maybe we also get the pullback where it forms now a let. And it's almost magic manipulation minutes too. So this trade in itself, the second one, would be far more nicer in that sense than the first initial mitigation. This is why if you're not confident to take the initial mitigations, wait for the entry helper confirmations, whether that's the EDMs or the lets. So let's see how price then reacts. Lovely. So we get actually a perfect let. I don't think that could be more perfect where it taps on the line. That's lovely. Price has given a very nice reaction. So you would be at break even. I would say that's 1 minute off to the minute of MMM2. So that's actually a perfect timing based reaction. And what's lovely is how the timing actually helps the volatility of price to then intentionally move. Now it has actually induced this structure point from what we can see. Now we just want to wait and for price to then continue. Now let's see if our smart money trap does indeed get trapped, or does it become a POI? Let's see what happens. So remember our intraday target, we should look to take out everything to the left. The sells are pullback trades. So hopefully you didn't get confused when I mentioned POI, because I knew it was not a POI. I mentioned that, so it's not a POI. It's a smart money trap. So smart money traders enter positions at this zone, which gives an ideal reaction, right? So it gives a perfect pinpoint entry right there. But what price does, remember, we have a main target for the day, still higher up. Buys are then pro-trend. So let's see the 1M chart, what it looks like as an overview. So if we see from here in a smaller, you could say, picture, this is the 1M chart. We are currently trading over here, the 1M price action. Now let's include the 5M chart. That is this mirror image over here. Where are we currently? It looks like this. So 5M price action is here, and this is the 1M price action. So this is why using the 5M alongside the 1M on intraday is so key, because maybe on the 1M you get lost and think, okay, the sales look pro-trend, it's order flow entry number 3 at this stage. But then when you look at the 5M, it really doesn't make sense. You can see that price have made this pullback here. You'll know that this is going to be a smart money trap over there. Target is ever so slightly close. We still have, remember, these liquidity levels, these structure liquidity levels over there to the left in such a close proximity that price likely will induce, and the smart money trap is inevitable, where it will induce traders to take the sells. So let's clear the drawings. Now we shall go back to the 1M chart. If we look at the 1M chart like such, could we identify another buy opportunity using the lit cycle? That was key. We've already got 2, but maybe we get another one. Let's see what price does. So firstly, the question is, what even is your POIs when it comes to, well, we're going to minus this one because this is already now mitigated. So everything between here and, since price is there, it would have to be around there. So between these structure points, is there anything now, what I would say, a POI with significance? So we can see 2 POIs that are basically with imbalances. Now it's the question of which one is more significant than the other. So we have 2 POIs marked here, both with imbalance. We will identify significance based on what the push led to. And this is very key in understanding the significance, is what did each push lead to. So now if we mark up with 2 red dots or pink dots, whatever you want to call that, the first one led to this high. But what is that high? It's equal highs. So the first POI led to equal highs over here. So it actually led to more liquidity. The second one, on the other hand, actually induced these highs over here, as it made, you could say, a new high. I'm not trying to implement some retail structure stuff here with highs, lows, but I'm talking generically when it comes to seeing the price action with these dots, maybe it helps you see the significance. So what we have, zone 1, which is this one here, it breaks above the liquidity level like such. Let's clear drawings. So Pier 1 serves a cause in breaking above the liquidity and equal high formation that POI formulated in conjunction with the buildup. So POI 2 basically formed a buildup, and then POI 1 induced the buildup. So what does that mean? POI becomes our significant zone for taking buys, essentially. So let's see. POI 1 is our main POI. Let's mark that one up clearly. Let's mark that one up clearly. Can we identify a fractal build-up target to be induced into our POI? Well, technically, yes. We have, again, the trend line formations. So key to have this in your eyes, but we have 1, 2, 3, and that's where trend traders fail because now price is breaking below that. Even those lows, if you can see there, equally, support traders, they'll take buys from here. So let's see what happens. Perfect. POI reaction takes out the liquidity. Vector candles, as you can see. So they induce into our POI over here, as you can see. Now it's a matter of, well, maybe we can take the consecutive mitigation after. Now I'm very key or big on taking those. I love taking the mitigations after an initial POI if I'm not necessarily confident if the POI will sustain, or if, say, price breaks ever so slightly below. I actually prefer to wait and then take the mitigation. Now here it's very clear that we've got an entire cycle, but this is our, you could say, number 1, the build-up stage, 2, the inducement. Now the only thing is 3 is after the inducement is the mitigation, so that can only be this. This is not number 3. So important to understand when it comes to a POI to the left, you're not actually necessarily completing a cycle when it comes to fractal liquidity. You are just, identifying a POI with significance, and then your real mitigation after the inducement is, like I said, after the inducement and not before that. So key to understand, this is not a 3. This is your last stage. If it occurs, it doesn't always occur, that's fine. So we could take the consecutive mitigation as such, and now we can see the outcome of what will happen in a few seconds. Let's see right now. So you can see, lovely. We even entered New York at this point. We have an inducement high, which is lovely. If you remember this structure point here, I'm going to try to be as straight as somewhat possible. So it's somewhat equal highs with this very first reaction. Price obviously will give a pullback for those resistance traders. So that's resistance, liquidity, or whatever, equal highs type of liquidity. They get induced because they want to enter here now. You can see they're still trying to enter. They get induced again. So seeing the buildup is really key of understanding not to take things like such, and how that's your resistance traders entering the market on a third touch over here. What we get after this so-called third touch is these lovely vector candles as such. Inducement high. Doesn't sustain because, again, timing's not significant. So we're going to see these cycles play again and again. It's just important to wait for the relevant ones. And this is why trading the cup trades are so key. And this is why you want to wait for your timing-based cup trades, which is London and New York, and not just take these random trades. Because if you take, say, this mitigation, it does give you a reaction, but it doesn't sustain. It just takes out these fractal liquidity levels, these traps over here, inducement low, price continues to now take out these levels over here, and cancels out these early sellers, you could say, that trade the typical London Open, which is 2 o'clock UTC plus 2. So this is why we wait, and what we can see already even in New York is the same cycle, but with far clearer vector candles with more significance. Price has trooped really nicely. It takes out this fractal liquidity over there of sellers. So that is very lovely. Now the question is here, is, did we reach the inducement target of yesterday's high? Now, if you remember, we are on the 1M, as you can see. So it's a little bit tricky, and this is why we need to continuously change between the 5M and 1M to see exactly where we are and not get lost in trades. So let's see on the 5M chart for an overview. So this is a 5M. That was your New York Open inducement. I mean, it's pretty juicy of how it's reacted ever so slightly. It doesn't need to go crazy high, but look how beautiful that is. It induces perfectly in New York Open. I don't think it could be more clear, but that is lovely of how that has occurred. So now price has reached the target. We can look to take sells using the lit cycle. So let's see a little bit on the 1M, what that looks like. So we can see the 1M zoomed in of New York over here. Again, you saw this before of the effect candles here. Perfect. I mean, it's pretty self-explanatory what's going to happen next. Let's just make room for that. So we've got the 1M chart back. I mean, it's build up, inducement, and mitigation. So, of course, it's self-explanatory. Your entry becomes the mitigation. And this is an absolutely lovely one because we get such a nice reaction bearish. We get the relevant breaks of structure over here. It's in New York. What else could there be at this point when it comes to an entry? Maybe a let. I'm not going to keep my hopes up on that one. Maybe a let. The only reason I'm not too concerned with it is because let me just clear that. The distance between this line is not too crazy. However, the distance between this line is too crazy. So yeah, I'm not too keen. However, I'm happy with the overall cycle play. So let's see if and where price may pull back in order to take the sells. So what do we mean? Well, we wait for a little bit more for reaction. What did price do? It takes out liquidity over there. What does that mean? Okay, we get also a fractal inducement. We get the vector candles like such. Build up, stage number 1. Inducement, stage number 2. We're getting a very nice reaction from that. And then what would it be? Let's look to identify potential reaction points. So you can see what I'm doing here is identifying pullback trades into our POI. So what's lovely about this is we can potentially take a mitigation in here to take the buy, to then take the sell, close your buys, of course, and then take the sells like such. And that's how you can play ping pong. So let's see what price shows. And remember, earlier, the POI with the imbalance that failed to initially mitigate. Now remember that, keep that one in your mind. It looks like such over here. So you can see, where did the pullback happen? This pullback, not only did it induce liquidity, now it actually taps into this as a, you could say a smart money trap, because yeah, it's reacting. It's a smart money trap, not an inducement. Like I said, I wasn't too concerned with if it reacts or if it doesn't react. It was actually more of a target, I believe, down here. It was more of a target. Well, I'm marking up a mitigation, but it's more of a target for these cells to maybe tap or induce. And then, yeah, I close because then I'm expecting that a cycle is now complete. However, the cycle can already be incomplete once it's made a fractal liquidity like such over there. And then these little inducements, relevant breaks of structure, reaction, mitigation, and then price troops. So you can see that's lovely how New York gives that illusion. And this is where maybe yourself or maybe, well, 100% smart money traders would then probably take the sells and the buys all confused and yeah, not knowing what to do. Like, oh no, it's like hit my POI perfectly. For me, I don't really care. It's more, can I trade the pullback? So let's see. That's what it looks like on the deeper version over here on the 1M. So we're building the picture from here to the left. So the perfect reaction. Back to this price action point. So we've got this big chart in our eyes. We can see what's happened there. We don't need it anymore. So let's see what price then shows us. So we've got a lovely reaction. Price has reacted here. Now we're not going to get a relevant break of structure to the high side to take this buy. I mean, it's pretty obvious the price action is not suggesting anything. Remember, it's a pullback anyways. You're not going to expect crazy confluences as it is the opposite trade, whereas the pro trend trade here did give the relevant breaks of structure there. So let's just clear that up a little bit and also have our lovely purple mitigation box ready for us. So, lovely reaction there. As you can see, perfect mitigation. Now, this is why you don't use an entry helper with like no confluence, assuming, oh, it's a let there, it's a perfect let. Maybe it mitigated this. Like, I mean, now we're just making up stuff because I just seen that on Edge. But this is why you don't use it. You only use it in combination with a mitigation that's already marked up based on a cycle you've already marked up. So that's why it's really key you understand this. So let's see the reaction it gives us. Lovely. Let's get rid of that drawing over there. They're all drawings, so it gives a nice reaction in terms of a pullback. It's pretty nice, I would say. But do you notice something here? Now, keep your eyes out. I'll give you a few seconds. Can you see something on the chart? Use everything you can see. Do you notice something there? Possibly a re-entry. What would that be? Let's see. Let's point towards something that's key over here. What do you see? Now, this point you should know. I shouldn't be telling you. But we can see a let. Now, the let would be exactly this point here. So that's a let. And this is where you can trade the mitigation after the let. Does that make sense? So like that is somewhat of a mitigation entry. I'm not too fussed on that one because you would already have this entry here to be taken, but to take that one based on the consecutive mitigation isn't additionally confirmed. Like it is at let, don't get me wrong, but I would rather then wait for the mitigation after where it gives a clean reaction that price will now continue as opposed to then like go choppy like such. So when I get the reaction like this, it's nicer for me to then take this. So let's see what that will be. A 1M let, of course. We can take the mitigation after this initial let as mentioned. And that will be exactly that point there. Now, again, remember the risk to reward aspect of this. It's okay. It's not amazing, but it's okay. But like I said, I would prefer the first one anyways. When it comes to a pullback, you don't want to take too many pullback like entries, I would say, depending on the time frame. When it's a 1M, ideally 1, maybe 2 if it's extra nice. So let's clear the drawings again. So we get a lovely reaction, as you can see. Now we are indeed approaching the sell POI. So what does that mean? We should inevitably close at this point here. So at this point, your buys should be now closed. And upon the reversal, we should know that this point here will be a smart money trap or an FFS. And this is how you build a picture of understanding. It's using the momentum mitigation. Like, honestly, that is so important to avoid taking random POIs. It's the matter of what happened first that does this now make sense. This is why these are not smart money traps. The ones, well, marking X's again, but these mitigations are not smart money traps because we're taking them to lead towards the fractal target. Now, again, that's ping-ponging on the pullback trades, but again, don't take them. If you don't like them, don't take them. It's fine because you know you need to close them. Don't get greedy, close them. Like it's so key to do that. Now we get our perfect mitigation. It's kind of traded in there a little bit. That's fine, but take the sells. You get a lovely reaction. Now, pro trend being the second main target as price has actually completed the target. So now we are trading away from the inducement. What we can also see, if you can notice, the purple line is indeed London close. So it may get a little bit choppy at this stage. So intraday volatility is low, so we can close the trade here at the imbalance. Now, the only reason why that was okay now to close is purely because of the timing aspect of London close. Otherwise, what the chances of the next day or going into Asia, I'm 99% sure that will get induced. So yeah, either way, it doesn't matter. You close not based on a mitigation, but based on a target for yourselves. And that's just unfortunate because it is end of day. However, for the rest of the day, we had some really nice trades. How many was it? It was quite a few as ping pong trades. So let's look at an overview of the day with lit opportunities. So I'm going to pull out the plain 1M chart over here. And you can see it actually kind of looks like a mess. This is why I should ask a retail trader to make sense of this. But looking at the overview, from what I can remember, is we had our sells as pullbacks. I believe it was two sells over there. We took 2 buys over here. We took 2 buys over here upon a pullback as we were waiting for a reaction. And the pro trend was the sells over here. But timing, of course, sufficed to why we then target there as TP. So quite a lot of trades, even seeing how they actually traded kind of in a weird, I would say, range around there, as opposed to Asia being all the way down there. Frankfurt did his thing over here, but that's pretty nice. How many trades would that be? That's 2 over here, 4, 5, 6, 7 trades, 7 ping pong trades on a day that looks like this. Like, it wouldn't make sense to a retail trader. It really is that simple. So yeah, I hope you guys enjoyed that. Do let me know if you have any questions on this module, and I'll catch you up in the week 5 Discord.
If you just look at this day, which was Friday, okay? So what do you do? The first thing, you see what they're doing. Crazy uptrend, whatever, crazy. So Asia range is doing this in here. So now you can look to the left and expect already what? You already know that this Asia range probably gets induced to the high side, right? Do we need an inducement of this area? No, because why? Look at this huge buy trend they're already forming. So we don't need an inducement high side. So if you look at this point in here, this created the inducement. So guess what you can do? You take this whole area in here as a possible point of interest already for the decisional play, right? Because this is the inducement of, guess what? New York trap time to the minute. Funnily enough, look at it. Like this candle in here, when there's a trap to the minute. Look at the bottom, 15 o'clock, literally to the minute. Again, what does happen next? London close, reversal. Same shit over again. Look at that shit. What is that high doing? When does it happen? Magic manipulation minutes. It's the same shit all over again. Anyways, this makes sense in here to get mitigated. But guess what? This already is mitigated. So what you can do instead, again, that we're digging into advanced stuff, so don't get confused now. But if you do, just bear with me here. We go into the 1 minute and refine it because we know we only induce Asia high, you see? This demand zone has still a lot of place in here, supplies and whatever, doesn't matter, right? So you go in this area and you refine it. So you take this zone, refine it to the next imbalance area like this, right? So guess what? Because this was a smart money trap, there's still imbalances left, right? So guess what? You remove that shit, Again, we're moving into the advanced stuff now, so don't get confused. Just bear with me here. So we're taking this point in here, switching over to the 5-minute, and see what the intraday does. Does everyone understand that? So we have this huge buildup. We don't need an inducement high. We already had an inducement high. We just need mitigation next. Okay? Again, for this day in here, Asia range. Next thing, inducement Asia range, mitigate something. Right? So guess what we do? So what's your task now? Again, you dig into this day, you know, okay, this is a possible zone. You're looking for a mitigation afterwards. So what are you seeing? You're seeing, well, why is that so thick? That's what she said. Oh, sorry for that one. So what are you going? What is going on here? You're already building liquidity, whatever these equal lows. I know, oh my God. So anyways, so what do we expect afterwards? Guess what? Right, just building these equal lows. Further, we don't care about what they're doing right now anyways, right? Guess what? Finally getting there to what? And now we're getting interested. Now you start to think like, what is going on here? Right? So guess what? Are we done yet? Most likely not. What is the ideal perfect time? Where's my freaking thingy? Where is it? There we go. The ideal perfect time would, of course, be London open. That's the ideal scenario in here, right? That one. So guess what? Is that possible? I would think it is. So guess what? You're just waiting patiently. Are we done yet? No. We done yet? No. Are we done yet? No. What can we do in here? Go to the 1 minute. So what are they doing? False channeling, right? False channeling here. What is going on here? Not really mitigated anything. False channeling. What do we expect? An inducement of a buildup when timing. What does it do? It hit this area in here, which we were interested in anyways, right? So guess what? That would be your limit order. Right? Interesting. Doesn't make sense already. So guess what? What should happen next? Okay, interesting. Okay. That's a surprise. What can we do here? Internal break of structure. Interesting. Do we have some imbalances? We do. We do have some imbalances. You see that candle has an imbalance in here. So what can you do? Okay. Interesting. Yeah. That's a surprise. That was unexpected. Okay. Okay. So what should happen next? Question for everyone. What would happen next? Asia low. Very good. So guess what? That's your first TP here out of the trade. Close it. What is it? 1 to 14, 1 to 8.9. Not the best trades anyways. Good stuff. Was it that hard? I don't know. All right. So guess what happens after? Again, you could technically hold that longer because guess what? That's only the intraday target. Guess what? Obviously, you never induce something to the left, so that should still go lower. Anyways, guess what? This is the minor inducement. You expect a pullback. So, interesting. First of all, again, makes it even easier. What are we doing? We're looking time. Close enough to magic manipulation minutes. We're 50 minutes off. Okay. So guess what? This thing will become a smart money trap. Why? We never took liquidity to the left. All right, so again, we know that. So we do nothing. Okay, first of all, it comes back to these areas. Awesome. So we do nothing until internal break of structure of the pullback. So guess what? What you can do, again, refining whatever the imbalance is in here. Right? So guess what? Price comes, mitigates this area. When does it do it? Oh my god, what a surprise. Magic manipulation minutes. Oh no, sorry, that's not it. Sorry, that's some weird modification they're doing, because they're switching it up to do the 11:30 sometimes as well. So in the middle, but no, we don't do that. Sorry about that one. Our one would be, of course, 12:30. So guess what? This worked out pretty good. Okay. Oh, taps into the smart money trap, right? So if you like whatever random hatches like I do all the time, you technically can, because guess what? You expect a what? A reaction into mitigation area. Imbalance. Awesome. So guess what? Oh, timing makes sense, doesn't it? What a surprise. What a surprise. Oh my god. That's your limit in here. Confirm with timing again. So what do? You aim, of course, for lower lows. Where should it likely go to? Again, where's the next mitigation area? Should be this in here. Whatever. Right, so that's the next demand area. Right, so easy stuff. Is it that hard? Guess what? Oh. Okay. Messes around. Obviously fakes the quadruple bottom. Of course they do. Oh, stay short of the mitigation. Right, so guess what? So guess what they're doing? Oh. What is that? Oh. What are they doing here? What is going on here? Oh. So what is going on here? Oh. What is our perfect timing? Oh. 15 o'clock. Oh, that can technically work out here. Oh my god. Oh shit. Oh no, that's hard. That's so hard. That's what she said. Anyways, so guess what? Oh no. Oh. Tapped us in. To the pip. Okay. Zero drawdown. Okay, just a 5-minute. Oh. Okay. That was hard. Anyway, so what should happen next? Oh my god. So what's the next timing? London close. Again, what's the perfect mitigation? It's here. Obviously, will not go there probably. What can happen as well? 50% of the freaking imbalance. What the hell is going on here? Oh my freaking god. Oh, what in the hell just happened? What in the hell? How can I edit that thing? What in the hell? Anyways, I will not try to do that. I don't even know what just happened. So let's assume 50% would be something like whatever. In here, let me just guess it. Whatever, in here maybe, whatever. Does it seem like? Yeah, something like here, 50% of the huge imbalance. So guess what? The same shit all over again. There's your build up. Right? Oh my god. Oh, inducement into 50% of the imbalance. Almost at it. And of course, London close. Done for the day, done for the week. Over and out. There you go. That was hard, wasn't it?
So today, with an example to touch upon the other one I sent in, which was the Chi breakdown. At this stage, I actually want you all guys to take these trades, right? So what we will do, I just show you again of how it's the same freaking shit all over again. So you had the video of Chi attached in the front, where you see how we just broke it down like half a year ago on Chi Friday. You can compare it to this one and already see it's the same exact shit. But what we will do instead, to make it even clearer, obviously, to take an easier, quote unquote, easier day, obviously the same day, which will be Chi U on the same day, right? And what do? It's the same shit all over again, ladies and gentlemen. The same shit all over again. Nothing changes. It's always the same stuff. So what do we have already when we see and analyze that? We already see even the higher time frame approach is we see, okay, we're having this huge up channeling move, right? So now we're entering this zone, right, which is also a major inducement zone we want to trade away from, right? So the first thing we had is obviously we had this touch in here, which touched upon these zones already. But of course, now we're entering like this, and we already understand this is what? Yesterday's high. Should we run a limit order of yesterday's high? Yes or no? Of course, the number one rule is no. So what do we know? This imbalance zone in here will already turn a smart money trap. So we can mark that out as a smart money trap. What's the next thing we need? Smart money trap inducement. Where's your inducement in this sense? Yesterday's high. What's the only thing which is left? Oh, mitigation. What is our price? What is the last point that is not mitigated yet? It's of course the extreme push, right, with the imbalance. So what do? We see that's already missed here. Perfect. So that becomes our inducement into mitigation. Perfect. So when should it happen, ladies and gentlemen? Is it at this point, should it be surprising to anyone? When should it best happen? 9 o'clock, London Open, best time scenario. We already are in this time window. Perfect, right? So what can we expect? In this time window, we have obviously a buffer time, right? An hour maximum of when it should happen in these scenarios. The next thing is match manipulation minutes 1 and 2. And we can expect something in these areas also. So guess what we will do in this stage? So we just wait. Oh, and London tapped in to the minute, but where does it tap into? Smart money trap. You should understand these rules by now, and you should not trade into that. That's a smart money trap. That's really what we taught you since day 1 of our bootcamp, right? So that's a smart money trap. Looking for the inducement mitigation. So guess what's going on? What is our price? We get the inducement vector candle into the supply demand area. In this case, supply area. Perfect. So what do? We change the time frame. We don't even need to run limit orders anymore. Whatever, we can obviously play the internal picture. So what we have? Okay, do we get excited about that? No. What do we wait for? Okay, so now we're having a push that made a new higher high, still in the supply area. So what's the only thing we wait for? Break of structure. Do we have break of structures here? No. Here's a wick. Do we have break of structures here? No. Do we have break of structures here? No, 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 no. Okay, now we tapped into this last supply area after an inducement of yesterday high, after our smart money trap, and in that time window. Perfect. Okay, so what's the next thing we do? Oh, here's the break of structure. So technically, we could take this trade because there's no imbalances whatsoever. So we technically can look in the seconds time frames. We will not do that right now, but technically some sort of imbalance is here. If it gets filled in the seconds, that's your trade to take. But if you want to be even more safe, what can we do? We look in our entry helper. Okay, now we're crossing over. Perfect. So now we're just looking for lets. Okay. So, and what's going on? No lets technically. So close enough. There's still no areas of imbalances, right? So that's at some point we need to understand what's going on and create the market intention if it's not perfectly clean, because guess what? The whole other play is perfectly clean. You have your whole build-up channeling, whole channel build-up, right? So build-up, smart money trap, inducement, vector candles into higher time frame supply areas. Can't get clearer than that, can't get easier than that, and it's literally always the same shit, right? So technically that would be your trade. Guess what? Oh my god, even if it's not clean, oh, there's no imbalances, oh no. But guess what? Is it still tradable? 100% it is. Where should you aim for? Asia low. You need to obviously understand at some point that the market will not always be picture perfect clean and will fill all these little imbalances to the tick and to the pip, to the minute all the time. It's not like that. Obviously, sometimes it's literally is like that, But at this point, you should understand the bigger picture with the daily cycle, with the build-up, smart money trap, inducement into mitigation. That's really what we teach you over and over and over and over again. So what's the next thing which happens? Oh my God, here's the tube. Perfect. Should we get too excited about it? No. What's the next thing we wait for? Oh, okay. So what's going on here? They're faking the equal lows. So that's even better for liquidity purposes. So now you would have your perfect picture, perfect imbalance zone in here. Is it always perfect? No. Obviously, if it's nice, if it taps in there, yes. Maybe even giving a let on the 5 minute. Awesome. But it's not always that nice, right? So, okay, it ends up like this. So what do we do in this scenario? We look at the 1 minute again. Okay, and what do we see already? Okay, so they missed this picture perfect whatever zone, but what do? It's always fractal. Build up, inducement. Okay, so what's the next thing we wait for? Break of structure. Okay, awesome, that's the push. Perfect. Break of structure. There's your imbalance zone. Oh my God, what a surprise. So you're playing the intraday little minor cycle, build up, inducement, break of structure into mitigation, away from what? Away from this major play, build up, smart money trap, timing, inducement into higher time frame mitigation, break of structures. Right now, obviously, we're having this build up, equal lows, which is, in my opinion, even nicer as a break of structure. I said that 5 million times already. Now we're playing the minor plane here. We're having build up, inducement, break of structure into imbalance mitigation. Perfect, right? So what's going on in the 5 minute? Okay, nothing yet. Okay, awesome. So if you zoom out a little bit, we can technically obviously wait for a let, but if you see already, the let got missed here, right? Okay, so not a big deal. What do we wait for? Next timing window, magic manipulation minutes. Okay, so what should they do? They're faking around in magic manipulation minutes. That's why it's magic manipulation minutes. So what's going on here? So 10:30, where is 10:30? Our first magic manipulation minutes. Right here. So fair enough, these plays happens in magic manipulation minutes, right? The build up, inducement, mitigation. Could be a manipulation move. That's why they use these minutes for. Next one is right around this areas. So what will they do here? We already see we're on Asia midline. So what can they do already? Of course, they're faking what? Smart money trap in here, right? So what a surprise. It's always the same, ladies and gentlemen. It's always the same. So they're faking around. Look at it. Building this crazy ass resistance support nonsense off the Asia midline. In this sense, you're trading away from the major cycles, of course. You only can trade it as a technically pullback trade because you can understand it, right? So we obviously won't do that because our main direction is away from the major play, short direction. So we're just looking for re-entries, right? So guess what we will do? Same thing all over again. We just wait. What's going on here, right? Okay, what's going on here? We're just changing again the time frame to see fractal plays. Always the same shit. So what's going on in here? You already see, okay, they're building again these equal highs. What a surprise. So what should happen next? Oh, wow. Okay, inducement into what? Into this last imbalance zone. Wow. What a surprise. Oh my God. That's also the push, obviously, that led to these equal lows being broken. Okay, it's this push that's enabled it. So that's also structure point. We have imbalances left. What's the only thing left? We need to look for build up, minor one, obviously, minor inducement. Perfect. Okay, wow, what a surprise. So technically we could take this as well. Obviously, that's not the cleanest trade of all, but we have to understand that our main direction is obviously short away from the cycle. And I drew you the cycle 5 million times, didn't I? Didn't I draw that? Where's my pen even, huh? What is it? Asia range, build up, some sort of smart money trap. Here gives an reaction, inducement. Let's make it even like this. Internal break of structures. London window. Trading away from here. There's your LAT entry. There's your EDM entry. And then like this. It's always the same shit. And then sometimes you have a New York reversal here, or sometimes you can have a, not like this. Sometimes you can have obviously a low of London close, and then obviously a little pullback area as well. That's always the same shit. We talked about the cycle variations over and over again also, right? So what's the only thing we do? And the only thing which is left, obviously we see if it makes sense on the 1 minute as we did. Okay, the only thing left obviously is EDMs. So if you look at this structure in here, obviously not the nicest EDM, of course, but just for understanding purposes, that technically would be our let entry, got missed by a little bit. Whereas our EDM trade, technically that's it. Obviously you have this push, then or maybe pullback, then push, not a pullback. You take these two zones. What is going on in entry helper? Of course, you already see it's huge EDM, right? Obviously not the cleanest one, but just for obviously rule set confirmation that we have extreme break of structure, technically a let, obviously new break of structures, and then technically a let. It's the same, the EDM. It's the same shit all over again. And we combine it with the minor cycles, build up into inducement, into mitigation. Same shit all over again. So what's going on next? We're switching 5 minute. So obviously our target should be at least, it's Friday also, right? So we shouldn't aim for obviously these areas right away. We're aiming for at least intraday target. So what is it? 1 to 11, 1 to 10, 1 to 14. Okay, awesome. Only aiming for the lowest point of Asia. Obviously, we have more potential, but the only question is how much potential do we potentially have? So what's that already? Imbalance areas. Smart money trap into inducement, into mitigation. Did you have that before? What is also the inducement candle in this one? It's not this push. It is obviously here this wick inducement candle. Right, so what's going on here? Obviously, that's the inducement candle of this trend thing, whatever. Also, before it happens, breaking out of Asia range. So that's obviously the inducement candle, right? And that's the smart money trap. Perfect. So we have the smart money trap into mitigation areas, something like this, whatever. We don't want to break it down too much now because we just understand the bigger picture, right? So guess what happens next? Okay, wow. Wow, what a surprise, right? What a surprise. So now we again faking around, seeing what's going on here, right? So what's the next thing we can do also? Let's say we even missed this push. So we see, okay, they never broke out of Asia range. That's obviously the most obvious smart money trap in the history of smart money traps, right? So, oops, okay, cannot even write anymore. Look how confused I am, God. So, so obviously we can label that smart money trap, and I will not try to type that again. See? So I will just go here. Oh my God. And take this one and put it right here as well. Right. So guess what? That's a build up, right? Creating liquidities. Awesome. So what can we already do? We do the same thing. We want to aim for the liquidity. Isn't that the same shit all over again? Smart money trap. Where's the next imbalance zone? Right here. Obviously, this one is a tricky one as you have right above that like a little doubles as well. So just make sure to take it like this instead, but aim for the imbalance fill, of course. Right. And it taps in. Perfectly fine. Awesome. So can you take that? Yes, you could. What does the entry helper say? Maybe even clearer EDM. So even as you already see, technically that is an EDM as it's by itself, but that's nothing we should take, right? But guess what? We're having our huge build-up. That's the push. It led to the new break. We're taking this imbalance zone, and obviously now this whole plane here is an EDM by itself, filling the mitigation areas or the imbalance areas. We never broke out of Asia low, so guess what? We obviously can take this short as well if we wanted to. And that's all the trades we had, trading away from the daily cycle, trading away from something we taught you for almost half a year now, right? Obviously, one student's even longer than that. So guess what? It's the same place all over again. There's no need of taking counter trends in here if you're trading away from the main cycle into higher time frame supply areas, internal break of structures. You're looking for LETs and EDMs instead. You never had Asia range being induced yet, so obviously you want that to happen. It's the same shit again. What's the next timing line? Look at it. New York trap time coming around the corner. What is that time? New York open. What should you understand already? New York open fakes the false move. That's what exactly what it is. It's a false move faking this obviously support play, whatever, this imbalance fill, whatever. And look at it. It's so obvious. And even that one is way nicer. Like that's how they even do smart money traders left and right, because they obviously see this bigger picture play and they think, oh my God, yes, that's the supply area, whatever. Now we're having whatever. Oh my God, break of structure. Yes, awesome. That's the push. And they're taking obviously their limit orders in here. They don't understand that the inducement should come into the main mitigations. So that's why we have Asia ranges, the build up, timing aspect, smart money trap, inducement into our perfect timing window, and then we wait for our plays. Right? That's our huge advantage and our huge difference. But it's easy as fuck, sorry to say, but it's easy as craziness, right? So just follow the same stuff. Is it that hard, ladies and gentlemen? Is it that hard? It is literally today, or technically Friday, right? So it's the same shit. It's the same stuff we showed you half a year ago on Chiche on the same exact day even. Like nothing changes. It's always the same stuff. You just need to take it. I don't know why some maybe even would even take a reversal trade in here or even like here. Like why? Trade the cycle as we teach you and wait for the stuff we show you over and over and over again. So guess what? Next thing, New York trap time. Oh, what a surprise. It induces it. The only question is how far should it go? It's Friday, so obviously we would not aim for these new lows to be formed. So we understand, okay, next imbalance area is most likely a smart money trap. Could it reach in this time window? Yes, it can. So let's see. Okay, now it will be unlikely to be reached. So not a problem. So that's even nicer because now it's confirmed what should be next to come. And the next thing to come is what timing? London close. If London closes the extreme, what should it do? It should induce. You also learned that literally in the checklist, right? So guess what? New York close comes. What is the time of New York close? Where's my line? 17 or 5 p.m., right? For me in Germany. So I will not be interested in that zone because I know if it's an extreme, it should induce something. And that will be the inducement, obviously, here, and then aim for the extreme mitigations of this, obviously, inducement, right? So guess what? To the minute. Oh, wow. Oh, my God. How can we know that? We only have rules for that. So what a surprise. So that turns into, for fuck's sake, because it just smashed through it, not giving a reaction, right? But now, obviously, we want to interested in this zone. But now it's late, obviously. What we even can do, we wait for the pullback. We see internal break of structures. Oh my God, what a surprise. What do we have? I would consider this as an internal break of structure. Out of this, for fuck's sake, or even maybe you look at it in a 1 minute, maybe it is even a minus smart money trap, but on a 5 minute, it's more like a for fuck's sake. Back to candles, breaking it, staying short of it, false pullback, and then finally taps into it. Wow, that was hard, wasn't it? So let's just wait and for entries. So where could we enter? Obviously, have our extreme with the imbalances. Now it makes sense. Not now we're not only having this internal break of structures. If we have like a major, oh, okay, we're only getting a build up. So guess what? What did I say above here? It's sometimes even nicer if you get that. So the only thing is you wait for the same shit all over again. What's going on here? Smart money trap. Same shit all over again. False reaction. Oh my God, look at it. How many times do they show this, these guys? 5 million times, taps even one more time into it. At this point, ladies and gentlemen, come on, please, please. Okay. Smart money trap, obviously. Just label it out. What does it become? Liquidity for what? The inducement and the mitigation. Obviously, now it becomes very late. Oh my God. Okay. And there is YouTube for the last and final trade for the week. And you just should aim for the next liquidity area. So not 1 to 6 to end the day off. And that's literally it. Oh, okay. And if you want to even play the let entry, guess what you have? Taking these order block type of things, whatever, right? Okay, awesome. There's your perfect let after the build up in here. So you're having the extreme mitigation, you're having the let entry right here. what is a price. If you miss the extreme entry or you don't like them, it's the same stuff. Another 1 to 6. Okay. Messes around. It's late Friday, and choop. That's it, ladies and gentlemen. Is it that hard? Like, seriously, I want to see some serious improvements soon. Like, no joke. Okay. When I saw this day, I thought like everyone should take this. Everyone should take it, right? So understand it. It's the same stuff all over again. So yeah, guys, please. It's as simple. Don't overcomplicate it. Like, seriously, don't overcomplicate it. You have everything you need right in front of you. As you saw, it's the same shit half a year ago, September, right? Or now, Friday, 18th of February, it's the same shit all over again. Nothing here changes, right? So get into it. What's the excuse? What's the excuse anymore? I don't want to hear it. I want to see executions and your guys' improvement, because that's the most important thing, okay? And let me know what you need in order to even understand it better, because everything is right in front of you, right? So take advantage of it. And you see, even these positions, all of them, they have more potential. But guess what? We should not aim randomly lower on Friday, other than your swing trade or whatever. Then you obviously can. But just for an in-to-done approach, what we do here, 1 to 10 is fair enough. 1 to 10 is fair enough. 1 to 14 is fair enough. 1 to 10 is fair enough. You see what I mean? And there's 4 picture perfect scenarios here. And even after this one, London close mitigation after the smart money trap, or in this case, for fuck's sake, build up, inducement, here build up, inducement into the extreme mitigation after break of structure gives you even a let. Guys, take it. So we will touch upon another example, of course, in greater detail, to even follow the story what I just gave on Chi back in September, which obviously all of you guys probably watched in the world already multiple times. And then the Chi example I gave of literally today, like Friday. And now what you're going to do, we go back to Chi, right, and see if it's something different here, as it was half a year ago, 5 years ago, or even today. So let's see. What we will do though, we choose another day to wrap things a little bit up, right? So what we're going to do is we're taking this day of here, the 16th of February, and we will do some analysis there. So first things first, of course, also the guidelines of the Litiverse, we start if the higher time frame approaches, right? You already can see, okay, the only thing we can see in this scenario already, which is important for us, that we're breaking out of Asia range high here. And of course, we can expect at least some sort of imbalances filled after build up inducement into what? Into mitigation of London time frames, right? So you already can understand, okay, in these areas, so starting from 9 to, of course, our time buffer for like an hour, right? Can be always a little bit off, so let's not do that. So then we see, okay, where's technically our next imbalance zone, or where's our next inducement zone? So already we see, okay, interesting. We have already this inducement of this push in here, but obviously our mitigation zone is huge. The only question is, how can we know where's the next imbalance fill? And the answer is we can, because if it reach up here, all in London, that's very unlikely, as you see, right? So what we can do instead, we're just taking the 50% of it. Obviously, we will never run a limit order based on that. We just need to understand what's going on. So we're taking the imbalance here until the next, before the next pullback area. So this whole imbalance from here to here, just for understanding purposes, right? And we could see, okay, so we have at least some room until these areas, okay? So these purple line, 50% of the imbalance fill, right? Okay, obviously just for understanding purposes. So now what we have to do, or should do, we're fulfilling, again, as always, the minor cycles. So we have this little inducement push in Frankfurt Open, okay? So we understand, okay, that's a Frankfurt Open inducement, and we at least can aim for the next liquidity areas. In this scenario, what is it? Before London, obviously this equal lows should be taken out after this minor inducement, but then still we have a lot of room to filling these imbalance zones. So that's probably not the move that will utilize the whole new down scenario, right? Because it's Frankfurt Open and they probably save these pushes for the main session, which is of course London session. But anyways, now we're having a minor cycle as always, and we can obviously take advantage of that. So what we can do already, where's my pen? So what we already can do, we understand, okay, so this is a medium inducement already, but of course we still have upside action or upside space we obviously want to utilize. The only question is, if that's a medium inducement, it obviously should not go like this and then higher. What should it do instead? It of course should induce high. Obviously breakout traders getting induced long because it's a medium inducement. And where are these stop losses? Guessed it. Of course, below the next equal low zone or these strong support zones, of course, right? But then obviously having in mind that we just want to grab these breakout traders high, then utilizing the whole push in London, and then fulfilling the 50% of the higher time frame imbalances, and then fulfill the daily cycle with the build-up, inducement, medium inducement, right? Or in this case, already medium inducement, mitigation, higher time frames, break of structures, and then we have the daily cycle completed, and we aim for what? You guessed it, at least Asia low, and then we can see if the cycle is fulfilled or not. So easy stuff. So what we will do first, things first, we playing the picture of how it is. Build up, right? So now medium inducement, Frankfurt Open session, perfect. The next thing, of course, we want is to grab liquidity low in order to take these breakout traders out of their positions long, right? So what do? We obviously wait for confirmation. So now we already see if this is the push that led to the new higher highs or the inducement. Technically, we're having our break of structure in place. Obviously, what's the push that led to the break of structure? It is this minor pushes in here or minor push in here, right? With the imbalance zone. Okay, so if you tap into the, and potentially even a lat, which we technically, fair enough, closely have, we would have a minor cycle completed. If you obviously want to see a clearer lat than that, that's completely fine. We will say, oh, that's not a lat, that's fine. And okay, then you would see, oops, okay. Also, even now you're having your clean lat entry, right? Of course, you just have to understand that we probably aim for higher directions in order to fulfill the higher time frame purpose with all these huge imbalance areas. But we still understand, okay, that probably our direction will be short. Now we're just playing the Frankfurt inducement play, and we can at least aim for these 1 to 6 plays, right? Whatever. stop loss a little bit higher in terms of the spread and whatnot, you know, all the nonsense, right? Okay, awesome, perfect. So what we can do in this sense, after this major minor play is done, now we're having the inducement low, we could understand, now it's London open, we still have so much imbalance areas left, so maybe at least let me take this position at break even if I'm not sure if this will be the whole push that will lead to the Asia range low. Let me at least partial out of that, or at least make a break even position in the scenarios. Okay, so that's the two options you have in this scenario, because you can maybe think, okay, it goes all the way down to Asia range low, perfect, and London, whatever, will be in the middle, but usually, of course, they do these major pushes in London. Okay, so let's say we just partial out here, whatever, and what we see now. Okay, we have break of structures again after what? Break of structure after inducement. So technically, what should tell you that? We're right in front of London, open, and now we're having this another cycle play to down. So we have equal lows, we took it out of the inducement, now we're having break of structure. So what's the next thing that could happen in these scenarios? Of course, mitigation, and we're aiming for new, obviously, higher highs, because guess what? We took out these breakout traders, which took out this zone in here, and they are long. Where were the stop losses? They were right below here. Now we took them out. Now we can go higher, induce high, low to go higher. When do we do it? London areas. So now London open is right around the corner. So we could understand, okay, this would technically fulfill the directional change. Of course, we can expect a little pullback, but then, of course, higher, because, of course, we want to go higher to fill imbalances and then make the play in London areas. So at this point, you should understand, oh shit, break of structure high, London open right around the corner. Right now, technically, we should induce high, technically more, do the whole cycle again. And after it's done inducing high, we look for potential reversals and then can aim at Asia low. Okay, so what do? We obviously will never pick the high in any sense. So first of all, we watch, okay, so this position is worst case break even, right? But if you understand it, you partial out here, and maybe you held it until Asia low because you were not sure, maybe. Okay, not a problem. Now you understand a London open is literally right now. What's the huge thing you should never ever do? You should never ever pick the some sort of high. You should not say, oh my god, no, vector candle, let me take a short here. Vector candle, another one, let me take a short here. Okay, not a vector candle, let me take a short now. No. So that's what you should never ever do. You wait until they clearly show you some sort of break of structures. And again, that's not a clear break of structure, because why is that not a clear break of structure? Because you're not playing from a higher time frame supply zone yet, because you're just having a huge imbalance. You can't play these major or these minor break of structures if that, for example, would tap into a 1 hour supply zone, for example, and you find it. Then it would make sense if it's a little minor break of structure, maybe you have an imbalance here, maybe you're having a let, whatever, but nothing here is like that. You don't have like an entry helper confirmation, you don't have like a 1 hour zone, you don't have nothing. So you need to wait for clear break of structures after the London inducement is done, because we should never pick a random reversal trade, right? We just only have this understanding that they should maybe go to the 50% of the imbalance at least, but obviously they can aim for the whole mitigation fills. But now we're on a time window and we're reaching the 50% fills. Okay, but obviously not enough to take a trade at all, right? And also here, this buy trade obviously only would be possible if what? You would have this build up and then an inducement into this mitigation and maybe with a let. Then you could have taken it, but obviously that never happened. So that would be technically your fast and fortuitous trade. Obviously, in this sense, the London inducement trade, high, right? So what's the next thing we do? Of course, we just wait until they're done inducing high, because we never know. We cannot pick a random point where they might reverse, right? So now we're just having this channel build up, and now these whatever vector candles even to the high side. We can check slowly but surely. Okay, we're entering. Oh, technically already we are filling the 50% right there. So now, okay, still we don't do anything. We just wait for what? Clear break of structures. Oops. And technically, now we would have clear break of structures. That now is a clear break of structure. Not like this in here, because again, we never played of a valid 1 hour supply area, right? So we only can play the structure and the cycle in this scenario. So what's now the extreme mitigation area? After the break of structure, you could have taken this imbalance zone from this point starting here, or if you refine it to the extreme, it would be like this candle, right? Technically, the imbalance is from here to here, right? So we can understand that already. Only now after a break of structure. And guess what? Even the entry helper confirms slowly the push into the other side direction. Right? So we're having this change of characters slowly. Okay, so best case scenario, we tap into these scenarios after break of structure, after the London inducement is done. We're having our medium inducement already. Now we're fulfilling the 50% of the higher time frames after our cycle is done. Build up, inducement, vector candles into the 1 hour half imbalance fill, and now we're having a break of structure. Perfect. So now we can just wait what's going on here. And we already see they're not filled these areas, which is technically not a bad thing. It even can be a good thing. Why? This obviously can help for inducements later. So they're grabbing the inducement and then fulfill the mitigation. Would be even nicer. That's what they do all the time. But what do we understand at this point already? If this would actually be a play they want to play, so let's say we're having finally our build-up in London, inducement, fulfilling something on a higher time frame, 50% of the imbalance areas. Now we're having break of structures. The only thing we look for is obviously extreme mitigation for our first entry opportunity. Now we see the build-up of the liquidity. We have an imbalance left, so we can expect a mitigation. But now we play in obviously in order, and what do we see? We have Asia high, we have an imbalance zone, and of course, if they want to go higher to induce these zones, that obviously is a smart money trap, but we can understand, okay, that they may be going into here, faking the reversal to make even continuation traders and all these breakout traders will of course break and retest whatever, excited about the moves and give a strong reaction. But to do what? The original move is to induce and mitigate and then potentially go lower or even way lower. Obviously Asia low for the intraday perspective. Nothing new. We went over the scenarios hundreds of times. The only thing that changes, obviously, slight variations. Is it not to the minute? Is there something to the 1 hour not clear? But the rest is always the same. The timings, the whatnot, everything is the same. And even if we check, for example, let me remove my pen. So if we check even the timings, of course, we already see magic manipulation 1. Look what happened here. Obviously, the best case scenario would be that they manipulate price even higher to tap these imbalance areas. But guess what? They did not, right? So, okay, fair enough. But at least we understand that this would be an area we would look for. So now we're entering slowly these Asia highs with the imbalance areas, but we understand that is most likely a smart money trap. Because of course, our cycle to the upside could be fulfilled with the medium inducement, build up inducement into higher time frame imbalance areas. Now valid break of structure. Of course, we can expect some pullbacks at some point. Oops. Okay. And they don't even want us to see. Okay, there we go. Back into action. So of course, we can just wait to see the plays, what they do. And what do we see now? What's going on here? Perfect. We already see the build-up, right? So, and if you break it into a more fractal play, what is going to be technically this? That technically on a fractal play would be your smart money trap into mitigation, but obviously on the bigger picture, let me draw that. So on the smaller picture, that is your smart money trap into inducement mitigation for reaction. But on a bigger picture play, that zone, of course, is also a smart money trap. So now we're playing the fractals into the fractals, if I hope that makes sense, right? Because it's the same thing all over again. So now what we have is just a buildup of this fake smart money trap into now buildup inducement of Asia high, obviously just for the next areas, liquidity areas, into the bigger play mitigation areas, and then we're fulfilling the play downwards for the major plays. So now we're understanding at least the fractal cycles. Okay, so what's going on here? Another build-up, triple bottom. Oh my God, right? Perfect. There's your inducement into now for the fractal play, the valid mitigation zone, because the build-up inducement into mitigation of a valid liquidity zone, which is Asia high. But for the bigger picture play, we're having our major inducement here, or medium inducement to the left. We're filling the 1 hour zone, build-up, timing, break of structure. Now we're having the new play. We want to fulfill these mitigation areas. So inducement into mitigation. That would be the ideal scenario. Now we're having this fractal play. And obviously we can expect these pullback areas, right? So what's the only thing we do? We're waiting for what? Internal break of structures here maybe, right? And then potentially we can wait for lets to order to take this little pullback trade if we really wanted to, right? So there's technically your let entry. So technically, again, if you wanted to fulfill this little pullback trade, which obviously is not recommended just for understanding purposes, you could take this little pullback trade by obviously like this maybe, right? But of course, that is just optional and not the ideal play. It's just for understanding purposes. And let's say, okay, it's not bad to have a 1 to 6 also to fulfill the bigger picture play. And now we're having this arrow again. Okay, so too much sauce here. Right? Okay. So back we are. So taps in, perfect. And technically now it's very, very juicy, right? They're faking it, whatever, they're faking it, and obviously this becomes what? The smart money trap for the people that always look for sells, right? Because they want to trade these continuation trades and obviously look for these imbalance zones. But now they're getting a false reaction. We understand this cycle was done, build up inducement into mitigation out of Asia high, but you're only aiming for the next liquidity area to fulfill the extreme mitigations of the bigger cycle play. Okay, so what's going on? Take profit goes on. Perfect. And now it's the same thing. Look at it. Huge candles, now obviously relatively big, creating obviously the excitement, whatever, another zone that gets obviously induced, but obviously now the bigger picture would be the mitigation of these extremes, and then we're looking for shorts, right? So guess what? Taps in. So, and for me personally, this would be too big in terms of stop loss zone. So I would not be interested, because guess what? You probably have a lot of other entry opportunities, right? So if you want to trade this limit order of here and having a big stop, that's completely fine. It's a legit point, but we can even play it more safe, obviously, and wait for more confirmations like entry helper, break of structures, and whatnot. So let's just say we wait, and we already would have this minor break of structure, right? This is the push that led to the new highs that tapped into the imbalance areas. This is a minor break of structure. Perfect. Not much in terms of entry helper, so you even can wait more for more clarity, okay? But obviously the more advanced you can get, or whatever, you can open maybe a position here, put your stop off above here, or open a position here and put your stop above here. That's totally valid plays, right? But obviously we can wait for more confirmations, like guess what? We have a lot. Fulfilling the Litiverse, what's the next thing in line? Magic Manipulation 2 for an optimal time for enter the trade. So let's see, it's right down there. Okay, so what can we do? Obviously, we're just waiting. Okay, nothing too crazy going on here. Okay, completely fine. But now we're entering slowly the Magic Manipulation minutes. Perfect. And there we are, Magic Manipulation minutes. But obviously, you will not enter right here. So what do we see and what do? We just wait for what? Maybe inducement high. Perfect. Right, so inducing whatever, these little structure areas. And now we're getting closer to obviously this order block scenarios right here, right? And whatever. Again, nothing is really clear in these scenarios, but just for argument's sake, we can take these order block scenarios here, right? Or whatever, imbalance areas or whatever, this IFC candles, whatever you want to call it. But you want to take some sort of supply areas in here at obviously the structure inducement here, and then maybe going lower. Guess what it is also? We're having our first let here, which is very low, and even a second let here. So what we can do, we check the 5 minute, For example, if there's anything going on, and oh, what a surprise, there we have our 5-minute LED also in this candle, which also tapped into this supply areas. So perfect. That's 5-minute confirmed. That's bigger picture cycle confirmed. Guess what? Build-ups, medium inducement, faking inducement one more time, and check our illustration, which we always give you. We always give you this picture. Inducement. Let's even make it like this. Even more clean, and check our illustrations again, because we literally give you that stuff all over again. So it's inducement here, inducement low, and then the final inducement, and then we can look for here, here, and that's it. And then obviously we can potentially look for reversal trades in here, in New York trap time. It's the same thing again, and then they ends off. That's our starter kit and our always confirmed rule set base for the picture perfect daily cycle plays, right? So we should not be surprised that we have a medium inducement here, faking the inducement low to go even higher, channeling upwards in London, inducement, fulfilling the 50% fill of the imbalance, right? Perfect. Now we're having break of structures. Now we're coming back to the extreme. We tap that. Now we're having internal break of structures here. And finally, our 5-minute LED even in here. Perfect. So what can we do? We obviously look for entry opportunities, right? If you don't like this one, completely fine. Let's see if we have nicer ones. Okay. So, okay, now we are making new lower lows. So now maybe we can take the order flow, because technically what we have, equal lows in here. That's the push. And obviously led to the break. Perfect. We can take the order flow. Where's the order flow in the scenarios? You guessed it. It would be right here. Right. So now we're taking the order flow away from the major cycle. Perfect. And now we could have a clean trade opportunity. But of course, we can understand this trade if you would have taken it. We also could, maybe this is a not clean trade, but again, match manipulation minutes of the LEDs, 5-minute LED also. But now we're just trading the order flow, equal lows. That's the push that led to the new equal lows being broken, forming imbalances, comes back. And obviously, entry helper not really confirms that one. So let's see. What's the next thing in line though? So now, first of all, this position has obviously so much potential, because we're aiming for the valid cycle to be fulfilled for Asia range low. So 1 to 20, not bad at all. So what's Litiverse confirmation, the next thing in line? What is it? EDM trades. EDM trades. We have our extreme, mitigation, we have our LED entry, technically here, or we have the order flow in this scenario. The next thing in line is an EDM trade. So guess what? Same thing as always. They're faking another one, another build-up. Perfect. Easy, smart money trap. Right? Perfect. And now guess what? What's the next thing in line? Our rule-based scenario. Look at how even giving you again a freaking quadruple bottom. Juicy becomes all liquidity. For what? For what? For what? Next imbalance zone, right? So what is it? If it taps into here, whatever, like this maybe, right? So again, hopefully you understand that it can back up here. And what's the next rule set scenario? That's again not a LED. We already had the LEDs and whatnot. So why would you even take a trade here? It makes no sense. You need a proper mitigation anyways, right? So guess what? The next thing in line. Oh. What do we see? It taps. And what's also going on? Finally, we have almost close enough, fair enough. Okay, goes a little bit higher. Yeah, so we can consider this now as our EDM, rule-based inline, extreme mitigation, LED entry, order flow, and then EDM trade in that order. So technically, again, that's something we could take for sure as well, right? Let's say whatever, we took in this one and maybe this one took another break even. Then again, you should understand, oh shit, it only came back because again, fulfilling the order flow, also the mitigation, also it's an EDM coming from the smart money trap, of course, faking the reversal. Now we have huge liquidity, quadruple bottoms of the Asia high, and of course, we can expect the major reaction now. Yeah, hopefully that's very, very clear at this point. And of course, we aim at least, again, for Asia low as a liquidity target. Okay, and guess what? That's what's going on. And the funny thing is, what's the next thing in our Litiverse rule set? Next timing is what? New York trap time. 3 o'clock, and we should see something going on here, right? So guess what? To the absolute minute, ladies and gentlemen. Like, can it be more perfect? Can it be more clean? Can it be more structured? Of course, we cannot run a random, whatever, limit order in here, but we understand it is an inducement. And guess what? After the inducement, we have what? Our next imbalance area, right? So now internal inducement. Now timing is to the absolute minute. We tap just. There's your internal break of structures. That's the push that led to the mitigation zone, right? Of course, not as clean, but of course, the more you understand it, the easier it becomes to take these trades. So technically, that's your last demand candle in here. So technically now after the break of structure, it taps into, but let's say you want even entry helper confirmations. What would it be? Goes over, right? And now we can wait for what? We can wait for our let entry based on this one maybe, right? And there you go. Okay, not the nicest let, but you get my point. Everything is the same thing. Of course, it's not clean always, all the time. Nobody even says that. And obviously that's highly expected. And it's not clean all the time. But guess what? To the absolute minute, internal break of structure. Now you're having the last demand area, gets fulfilled, now comes back, forms imbalances, makes new higher highs, gives you the let entry of the minute, coming off a perfectly fulfilled daily cycle. That's something you should understand. Where should we aim for? At least, of course, these next liquidity areas, right? So we should aim for a new grabbing these points, or if you're not sure, then just aim for this. Always that's safer. For example, you say 1 to 7 or 1 to 8, one risk it's not worth for, like let's say you say that, for example, not worth for me taking it, it's completely fine. Then just aim for this, or even like obviously that's a very easy smart money trap, for example. But let's say you think, okay, maybe inducement into mitigation, but obviously no, should grab liquidity. But let's say you're aiming for 1 to 7, not bad at all, right? So not bad at all. So what's going on? Okay, perfect. The only thing which is going on missing is EDMs. We don't have EDMs in here, so completely fine. If you don't have, they obviously put nice to have. So now, guess what they're doing? They're faking the smart money trap again. What a surprise. If that's an EDM trade, we could take it long. It's not. Okay, now it tubes. Okay. So technically, if that's an EDM, again, you can take for the liquidity. But let's see if it is an EDM. No. So we don't do anything. Still, okay. So now it's even nice. Yeah, okay. And there you go. Finally, this target gets hit, but obviously at this point you should understand, okay, we should aim for liquidity higher. And there you go. Okay. Everything rule based fulfilled. So the only thing next in line, obviously, we see now we created these liquidity areas. It's getting late into the day, so that can technically work for your equal lows into inducement and balance area. So the only thing next in line is what? Of course, London close, right? So London close would be the mitigation, right? And the only thing left we need is EDM trades. Whoops. So guess what? What a surprise. Taps into these imbalance areas. What is it? An EDM. What a surprise. That was the only thing which was missing. So guess what? We even can aim higher. Okay, so let's say you close this one at 128. Is it worth to take one risk on that one just to fulfill the plays and the EDMs to go even whatever, to aim like one more higher? Okay, 124, technically not, but let's say we just understand it, what's going on. Let's see, okay, taps even one more time, maybe even a break-even position, not a problem, just for understanding purposes. And okay, day technically is over. Let's see what's going on. Okay, makes a new high, perfect. No, doesn't even make a new high. Okay, no, it does. Okay. So just for understanding purposes, right? So it's the same shit all over again. New York trap time, perfect. Taps into the demand area after the inducement, after the daily cycle is confirmed. Guess what? Huge vector candles faking the Asia low, whatever, give a false reaction, then induces it, taps into the internal break of structures, mitigates the lost demand area, then comes back, gives you another imbalance area, comes back here, gives you this whatever semi let whatever you need to take what's there, not what you wish, whatever could happen. The next thing in line is of course EDM trades. There you have it, and makes new higher highs. Perfect. And that's how you end the day off. It's the same stuff. Check it. It's the same stuff. Isn't the cycle exactly the same to the absolute perfection? Nothing had changed. Check all the bases, check all the checklists. It's literally to the minute. It's literally always the same. The only challenge, of course, was in here, as it was a little bit off timing. There was not a clean supply area in this sense, but we have breaker structures into the extreme, internal breaker structures, LETs on the 5, order flow entries, EDMs, fulfilling the mitigation, smart money traps, and of course, then the daily cycle is fulfilled, perfectly aiming for Asia lows, tapping into the demand areas, internal break of structures, mitigation, gives a 1 minute let, and the next thing in line, EDMs off when should it happen to the minute in London close, and that's the day ended. Yeah, any questions about that? Let me know. I hope you enjoyed this little breakdown. And the funny thing is, guess what? As I showed you earlier in the other 2 videos, the first breakdown we did was a half a year ago about the cycle play and GJ. Now it's half a year later. It's still the same exact stuff. Get that to your head. Trade with confidence. There's no excuses. Trade with confidence. You have everything you need. You just need to make sure that you understand that you're trading a very, very, very highly confirmed strategy, which is always the same. You need to enable your confidence, and you need to get your confidence, and you deserve to be a very, very good trader and understand these pushes, okay? And need to understand that you can do it 100%. A lot of people already trade like that, and so can you, okay? So just dig into it, and as you see, it's the same stuff. Go over all the material we gave you so far, and you will see everything is there. Everything, day in and day out. Of course, there's not clean days, 100%, but if it's clean like this, then take it. GU Friday, picture perfect. There's no excuses. Take it. Okay? So that's it for me. I hope you enjoyed it, and cheers. Catch up later.
So if you zoom out, because you have to understand the bigger picture for the whole understanding of what's going on, okay? Because like you said, like here, it's not a vector candle, right? Its inducement is weak, okay?
Yeah.
Very interesting. So if you put like the replay mode just here,
Like here.
yeah, I mean you can make it like this, yeah. Just so we have an Asia, okay. So if you check, I mean you marked it up pretty well. We had like this quadrillion top in here, right? With all these pushes to the high side and touches. And even that, whatever gives it a quadruple top by itself, false reaction, right? And obviously what happens next? Mini build-up, inducement low of that mini build-up, into what? Now this medium inducement. So the first question maybe for you is, why did you say there's no vector candles? Is that a vector candle you would classify or no?
Yeah, for sure. Yeah.
Right, so like that's the first thing we had, definitely in vector candle, especially if you have all these quadruple tops, and this itself is like the fourth touch we had like on the higher time frames, right? And then out of a sudden in Asia, choop, right? This huge vector candle, that is definitely a vector candle, and that locks in the medium inducement, right? And before that, the cycle was very nice as well. It's mini build-up, induced to a low side, structural inducement, right? And then to push price higher into this medium inducement, boom. So now you want to trade away from that medium inducement, right? Doesn't matter if it's in Asia, but this is a very clean cycle we had. You're completely right. The timing of this inducement based at its EU is not ideal. What does not ideal mean though? Not ideal is just we don't know if it will lead to the overall inducement for the whole month or stuff like that, right? But we know for fact, okay, this is definitely a medium inducement. The timing is just off, so it's not a timing confirmed inducement. So this is just purely made to stop out every one of these quadruple top sellers who traded the reaction, and then they wiped out with the obviously their stop loss being grabbed, or they've taken out a break even, right? But there's not really liquidity getting into the market because EU is not really traded that much in Asia session, is it?
Yeah.
Right. But for understanding level, now we know, okay, medium inducement of a quadruple top, what day should logically follow after that?
What? Sorry?
What day, like what cycle variation should follow logically after Asia high is?
It must be there with tail heaven.
Exactly. So we can have a very good understanding, okay, this can turn into a retail heaven. So if you just fast forward it, or like first of all, you can let me know what you see in here and what's the logical next reaction of what they're trying to do, what's going on, what they're showing. So the first thing, I help you out a little bit, right? So we see, okay, that's kind of the extreme of the inducement, right? That is almost like fairly much delivered, okay? So maybe it left like a baby pip imbalance of whatever, 0.01 pips, but we don't really care about that too much, right? We see, okay, they came back, fairly delivers imbalance already of this extreme mitigation, right? And now this price action here, what is going on in here? We still know, okay, you want to trade away from the medium inducement for the day, okay? So what are they doing right here?
Building up.
So
it is building up, yeah. So for me, it is building up then to induce or high, or maybe induce low to fake like the movement low.
So you mocked it up perfectly, actually. So if you check 1, 2, 3, 4, 5, 6 touches to this trend line, now we have the 7th and 8th touch to the trend line, right? So obviously, what do retailers do and see? And this is also the breakout, which for them locks in the direction to the long side, right? So everyone is looking for buys, everyone.
Yeah.
And also these trend traders having the 17th touch of the trend line as well to go what? To go long, right?
Yeah.
So guess what will not gonna happen?
Go low.
Exactly. And especially if we had this medium inducement first, we want to trade away from that as well. Now we identified the liquidity properly. And obviously we know, okay, they will definitely not go long. Okay. So what do we expect in Frankfurt? What should Frankfurt do? What is the trade you already should know? Like it's the FF. What is the FF?
The Francturius
Exactly, the funny name with the fast entering tourist trade. So if you're getting better and understand the liquidity properly, I mean, you're in a very, very good stage. You should understand, okay, if that's the 15 touch to the trend line, we had a medium inducement, obviously we're looking for and sell trade into the inducement in Frankfurt, right?
Yeah.
The only question is, where could this potential trade be? So if you check this build up, right, this again is technically new to high in here. Everything's mitigated to the higher side. So will it induce higher? Most likely not, right?
Okay.
So if we have what? This is obviously a push, right? Where's the last imbalance we have in this current price action, which we could mitigate?
Here.
Exactly. So we can take this zone as a potential. Okay, because why would they induce high one even again? Right? They're giving people all the reasons already. We had a medium inducement already. The extreme is already mitigated. Again, we can't ignore like 0.1 pip imbalances. It's completely fine.
Okay.
Right? And now we obviously Frankfurt opens in here somewhere. And obviously we expect the inducement of all this liquidity in here and obviously away from the medium inducement. Okay, so if you mark up the imbalance zone, the last supply demand candle. There you go. And then check the timing. So what's the fast amplitude trade? Obviously should happen. What time zone are you in? UTC +2? Okay.
Yeah.
Perfect. So obviously 8 a.m. would be our Mona Lisa time, right? And also if you check the entry helper, what's going on there maybe? All right, what do we have? Okay, we already have like the 15 flat. Okay, so what do we see also? Equilibrium rolls to the downside. It's getting already mitigated even the third time now. So we had 1, 2, 3 touches to the equilibrium. Equilibrium rolls to the downside. Obviously, this points to the low side now. So the chances are very high. And obviously now this is the mitigation and we're ready for the tube. Do you agree?
Yeah. Okay.
Exactly, because it's exactly what we expect anyways. Trading away from the inducement, retailers getting built up. Now they're having the 7 million touch in here.
And another left touch.
And another LED. There you go, right?
Yeah.
So obviously this is something we could potentially look for on trade entry. Not the best, obviously, right? But again, that's technically what we had. And sometimes it's just not the Mona Lisa as we want to, sometimes we wish to. Right?
So it would be better if the price like in this low first, like a boss, maybe.
Yeah,
Then
of course,
to
that's
mitigate the two.
definitely possible as well. So if you even check whatever on the M1 or something like that, that would also be a possibility, right? So now even the Mona Lisa point of interest obviously would be above this in here. That would be the extreme mitigation in here, right?
Okay.
Something like that. But obviously we want to induce these things and more. What is the price? They do that, right? And I'm not sure if they tapped into the thing, but obviously we induce the internal liquidity, and now obviously it looks very juicy for us. We're overall in this bigger POY, so the only thing we're waiting for is literally the tube, right?
Yeah.
So there's your internal breaker structure technically, or here, right? So if it comes back here, technically you could take it as well.
Okay.
And then you're just looking for re-entry opportunities based on that.
It's going.
Right, but obviously overall we expect a retail heaven. So now first of all, okay, tubed out of Asia, low, awesome. So again, the only thing we should not be confused now is that we say, oh, whatever, this is the trend, this is the inducement, low, blah, 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 because this is the medium inducement. That's why, again, we have to look at the multiple time frames. We know, okay, this took out literally like a fucking quad million top in here. And obviously now retail is slowly but surely getting induced to a low side. But again, now we're trading away over from the medium inducement. We expect a retail heaven, right?
Yeah, yeah.
So the only question is, where can we re-enter retail heavens? So we use our simplicity approach.
Okay, so there is London, and
So
Right. So
building
how would you
in
mark
those
up
segments.
this in here? How would you mark this up in terms of the build-up?
A build-up will be like that.
Why like this?
Like you tell me to mark it as a build-up,
Yes, but
right?
why like this? Like if you're just analyzing like this push in here to see if you're in an inducement stage or build-up stage.
Oh, I mean, for the build-up was here, right? So that's the engagement of the part of the cycle. So
Okay, so if you just
I'm
look
not
at
sure
this
if I
push
understand.
right here, and you might be
Yeah.
like, oh, is this like an inducement to low side here? Right, so how would you mark it up properly?
I'm not sure if I understand the
Okay, so
question.
can you
Sorry.
zoom in a little bit more? Like make the chart a little bit
So,
thicker? Yeah, something like
okay.
this. Right? So if this always leads to some trend in here, they're building. Right,
Yeah.
so you just need 3 touches, like 1, 2, 3 in here. So you're building
Yeah.
the channel down there. And you mirror it up. Can you do that?
Yeah.
All right, now let me remove my choice for you. There you go.
Right.
Okay, so you see, is this channel being induced? Yes or no?
No.
Exactly. So we are in this channel, right? We see that
Yeah.
right away. So even if it's hard again to see first, and I would remove this also, like because that's
Yeah, I
not really
didn't
a build.
understand the question at first. Sorry.
But you see, like that's again keeps you away from vector candle, this, and then obviously you're looking for buys. No, you need to mark the build up first, and now we see, okay, we are in this channel in here, but we only can see it if we mark the build up properly. Again, with this 1, 2, 3 touches here, and then mirror it up. So we see, okay, it's still in there. So we should not randomly open a buy trade now. You see what I mean?
Yes. Sure.
Okay, so let's
we could
see
mark
and
it.
wait until the build-up gets induced. And in what direction? We are expecting a
Okay.
retail heavens, obviously if induce is high, that would be the ideal scenario.
Yeah.
So let's see.
It would be better if we mark the build-up in 1 minute here. Like,
No, it's
maybe-
completely, let's just stay in the 5 minute.
okay.
Right, okay. So now there you go.
It's
Okay.
still inside. Okay.
So it's still kind of inside, right?
Yeah.
Okay, perfect. So now what's the time now? London Open, right?
So, yeah.
So now that's the time we are getting technically interested in for the next valid play we have, okay? So now we just have to monitor again. They're like kind of a little bit outside here, a little bit outside here, but still both in the channel, okay? So you want a
Yeah.
clean channel inducement, and we just have to monitor in what direction it goes,
Okay.
okay? So now we can see in what direction is the channel induced, low or high.
High.
Okay, we see that again. We don't. Can you stop it, please? Again, we see very clearly. Again, this could be like, oh, is that outside of it? It's not really that clean, is it? Because again, if you need to think about, oh, did they induce the channel? Then they did not induce the channel, right? But
Yeah.
this one, you cannot argue that. Again, it's here 1, 2, 3, 4 touches, even those 3 candles all in a line, and then out of a sudden, boom, it shoots to the high side. In London, obviously, where the liquidity comes, and they want to fake a reversal. The other thing
Yeah.
is, maybe zoom out. Right. So what's on the outside?
And it's swing.
Yeah. So is there a medium inducement? Yeah. Yes or no?
Yeah.
Okay. If you see this as a medium inducement, it could be the case, but this is again a structural point, which is very late in the day. The question is there a lot of liquidity here? Yes or no? Or would you see like this double top, double bottom of the day
Yeah.
open, also New York open, also London time. So where do you think the liquidity is? Here in this like very late candle, or in the double bottom of the day open price, London, New York open and London open?
Yeah. This is definitely a more strong liquidity zone.
Exactly. So we mark this one
Okay.
and we can ignore this one. Because again,
Okay.
of course, it's some zones that just want to fake you out like here. Right? They want, oh yeah, they take out the structure point with like whatever this quote unquote vector candle, but as you can see, it's in the build up, and that's obviously a fake move. It's just very
Yeah.
tricky to see, but as you can see, if you mark up the build-up properly, we can see that. We can identify that right away, right?
Yeah.
And again, that's why we also have the compass of our time. We had Frankfurt. This is literally in the middle of it. And now we have London. So
Yeah.
London obviously confirms us the right move and is induced to the high side. We still have liquidity to the low side. So obviously if this channel is being induced to the high side, to what zone do we expect price action to tap?
It could be here, right?
No, like if they induce high to go lower, how low should they go?
Up to the inducement.
There you go. You see, now we're just building a proper understanding. And then after they take out liquidity to the low side, what's a logical reaction they usually do?
To go against the inducement.
Exactly. So if again, now we see how we can build the cycle. So we have a build up, inducement high, next liquidity zone being the double bottom in here of the open price of New York Trap open or New York Trap, New York in here,
Yeah.
right? And then London session as well as here, all comes together in these 2 points, right? Then if we induce high, you want to go lower. So we take out this liquidity spot. And when we grab liquidity, we want to pull back. The only question is how far and what is the overall cycle day we expect?
Retail heavens.
A retail
Yeah,
heaven
so-
again. So we don't expect a reversal like in here. We don't expect
Yeah.
that because again, we expected a retail heaven based on the
Yeah.
medium inducement we want to trade away from. You see how we slowly but surely can combine everything?
Yeah. Yeah, it
so-
will go into a point.
Okay, so let's see
the
if first of all what we made up here is true or not.
Yeah.
Okay, so let's see. Let's fuse. There you go. So induced high to go lower. When do they do it? In London open trap window. What a surprise. What do
Yeah.
they do? They grab the liquidity. So now, is this mini cycle completed? Yes or no?
Yeah. Complete.
Exactly. So now we have an inducement of liquidity. So we can expect a pullback.
Yeah.
But again, not a reversal because we expect a retail heaven. The only question is how far it will go up. The next imbalance zone is where?
Yeah.
Exactly. That's the next imbalance zone. The next liquidity zone would be Asia low, right? So there's also an imbalance zone in here. And we have Asia midline, which also is imbalance zone in here. We have these 3 potential points of interest, right?
Yeah.
Okay, so the only
You-
question is,
You will say that this could be the potential, like the most important point because it was the one that created the inducement.
yeah, sometimes again they want to trap in these and this becomes the SMT, for example, and then they tap
Okay.
into another point of interest. That's why again we have multiple other confluences. Like what? Now you tell me, what confluence do we have?
The entry helper.
Yeah, for example.
Maybe a build up before or
Exactly.
equal hikes or equal lows. Yeah.
Exactly. So if we tap into this point of interest, would be obviously nice if we have some sort of entry helper confirmations, maybe timing, right? All that stuff. And you mocked it up already. Magic manipulation minutes could confirm it also.
Yeah.
That's all stuff we have to consider, obviously, if we be interested in this point of interest.
Okay.
Right? So if you check the entry helper, so if we want to look for an EDM, because we already had a let, that was our let in here. Obviously, these all points were kind of all lets in here.
Yeah.
The only thing we look for is an EDM,
Yeah.
right? So if that's the push we won't be interested in, that's the point we have to look out for the entry helper.
Yeah. And it's very possible as it's like very short in here. Maybe.
Could be a let also, technically off an EDM, which would be even nicer. But now, obviously, we expect a pullback anyways because we just grabbed liquidity. And obviously, if you grab liquidity, they want to pull back.
Yeah.
So what can we do if you're getting experienced? Here's our buy trade, but obviously only until the zone, or obviously,
Yeah. Into the point. Yeah.
all right. But that's technically how you can then obviously take this buy, sell, take this buy in here, obviously take this sell in here, and out of a sudden you got into this sell. Obviously, you should close it down here, which you got.
Yeah.
Maybe a possible re-entry of the inducement of the channel, And then obviously you can look from buy in here into this zone, and then you maybe can look for continuations because you're looking for a retail heaven anyways. Make sense?
Yeah. Yeah, sure.
Okay, let's see.
Okay.
So that's your possible buy trade on what is a price, gives the pullback, right? It's not EDM yet, and it's not in the zone anyways. Oh, okay. So now it
Yeah.
tapped into the zone. What is a price, and is it an EDM?
Yeah, and almost a let.
Yeah, but what is a price, is it?
Yeah.
Like, how can we know that? Right? It's so random.
And almost 10:30.
Yeah, it's
Okay.
completely fine. So nothing. Again,
Yeah.
it's everything is there.
Yeah.
Right. So obviously, if this is a limit order you take, obviously your stop goes above here, and then obviously whatever it pulls back, and obviously if it messes around, it messes around. But it is a valid, definitely a valid play. Okay.
At this moment, you will take an order, like you place a limit order here when you see this.
Yeah, you can
Or
place a limit order for sure, or you can refine the zone into the M1, for example, to find like your
Okay.
lost imbalance zone, stuff like that. So if you
yeah,
take
here
this,
it's-
what's your extreme? Like if you take this push, again, this is the overall push. That's your smart money trap. Same stuff as always. Smart money trap should be very easy to identify here,
yeah,
right?
Yeah.
This one is your smart money trap, and that obviously becomes your extreme mitigation point. If you want to mark that up.
okay. Yeah, like this order block.
Yeah, so that's the obvious smart money trap. They want to fake, obviously, smart money traders out of it. And then they go into the higher point of interest, which is, again, the 5-minute point of interest anyways here. And obviously refine it then to, again, technically can take this order block in here, or if you want to take it all the way to the high to be on the safe side, that's also completely fine. All right, but now at least we know, okay, what to expect an SMT first, and then obviously to the higher point of it if you want to refine it. But again, we're still playing the M5 play, so it's completely fine anyways.
Okay, great.
All right, but just to refine a little bit more. But again, you see the
Yeah.
difference is just, again, maybe 1 pip or something, so it's not even
Yeah,
that.
it's nothing.
All right,
Okay,
so it's
yeah,
not even that.
I asked that before that because I was wondering, well, I'm doing live. Sometimes I see that there is like a possible LED for a possible EDM, and sometimes I place the order, but I have take losses doing that because it seems like it's going to meet to touch like a LED or EDM, and it just like stop loss me. So I was asking to know like what should I see in terms of entry helper that could make me be more like secure, like yeah, like secure about if the trade is going to be okay. No?
Yes, so the most important thing about the entry helper is always you have the same order all the time. You're looking for one let and then after that an EDM in that order. So first of all, you should never take like a random let or a random EDM, right? So you need a
Yeah.
valid cycle before. Again, if you zoom out a little bit, right? So what's our cycle? Medium inducement, let, EDM in that order. So you see,
Okay.
it's very hard to make stuff up even here. The only tricky parts is obviously they don't getting caught into this fake, whatever that even is, because you're in the build-up. Then you see the next liquidity zone, seeing another inducement. Obviously, it's the same stuff. You can trade this into the next zone, but then overall you're expecting a retail heaven. And the order is let's EDMs. And if that
Yeah,
obviously
always.
appears, there you go.
Always like that. Okay. Yeah.
And then you have all the mini cycles in between. So you just should
Yeah.
not get faked out. So let's continue to play a little bit, but we have to go soon.
Yeah.
All right, so okay, taps in, perfectly fine. All right.
So the target it would be like Asia low, right?
Can you zoom out a little bit more? Okay, so you tell me. If that's a medium inducement, right?
Yeah.
What's the next target you should aim for?
Like, okay. we could say like the beginning of the last engagement of the
Yes,
last
perfect.
cycle. Okay.
Absolutely perfect.
Okay.
And funny enough, that was my target also.
Nice.
Right, but that is the next
Yeah.
logical target, right? Because we have a medium
Yeah.
inducement to the high. It wasn't the strongest, as you said, because it's an Asia high inducement. Our next valid liquidity zone is this inducement down there.
Yeah, because it was like the beginning of the other cycle, right? Of the last cycle. You can say it like that.
Yes, and again, it's a valid target because liquidity sits there. It's a New York trap target to the minute. And it
Okay.
happened, right? And obviously that induced the whole other place. You had this build up before that. You induced always overall the build up, and also you will induce this trend line you marked up in here. So everything getting induced left and right. Okay,
Yeah.
perfect.
Yeah, perfect.
Okay, so let's see what they did. Sometimes they mess around, sometimes it's perfect. Okay, so they just mess around. It is what it is. But what can be seen here if you stop it in here also?
Magic manipulation minutes.
Mm-hmm.
Yeah.
And what do they do now, though? It's a little bit tricky one. Because, like, look what they're doing. Obviously, they're inducing low,
Yeah.
right? To maybe do what?
To grab to this point.
Very good. Very, very good, Camilo. Very, very good.
There is equal
Very good.
height
Perfect.
with
Yes, and as long as we keep an eye out for these traps, and again, it's the same stuff all over. This is the buildup as you marked up. That's the inducement. That's the vector candle into a mitigation. So this is a mini cycle. Boom, right? It's a mini cycle, but it gives a reaction, or it should give a reaction into, again, inducement to continue the overall play. You see how it's always the same stuff. You have a mini cycle, build up, inducement into mitigation. Then obviously faking the breakout structure, which for us is the inducement of this equal highs into another mitigation, continuing the cycle. It's like always the same stuff. It's a perfect picture stuff, right?
Yeah.
Okay, perfect. So let's see if we match it up or no. Right, so that's obviously the smart money trap. Gives a reaction, induces the wrong direction. The overall thing is to mitigate price delivery, deliver price, obviously, quote unquote, fairly, filling the imbalances, right? And that's done. This cycle now is done, so we can take this short again.
Yeah, and it's
Boom.
EDM as a confirmation.
Not sure if that's properly. My eyes are too old, but yeah, could be.
Okay, why it's not like?
Because I'm not sure if that's directly higher than that. Can you make the entry up a little bit bigger? Oh, okay. Yeah, it is. You're right.
Oh, okay. Okay. Yeah.
Oh, my eyes are just getting old. But yeah, the best EDMs though, again, always are like if you have something like this right away, right? So like just very clean zones with an imbalance, and then not so clean EDMs is something like if you have like this. And then like this, because you have all this stuff in the middle, if that makes sense. Sometimes, again, this is a normal cycle build-up. Again, if they're building up sideways, inducing low to induce higher first, and then tapping in. So it's more like a cycle play, and the EDM technically was this.
Okay.
Right?
Yeah. Okay.
But yeah, definitely 100% valid. And again, you see the order flow. If you missed this trade in here, that's your order flow. Yeah, already tagged in. There she goes. All right, so again, now it's again important what you do. Build-ups.
Okay.
All right, if they want to go lower, what should they do? See, perfect build-up. So if they want to go lower, what do they do?
High to go low.
Yes, and what's the next structural point they could induce? Very good. So that's an inducement now, though, right? Because they want to induce high to go lower.
Okay.
Right?
On New York drop.
So they want to again, not mitigate that zone, but induce that zone though, right?
Okay. Okay. Yeah.
So we should not look for re-entry in here because now again, trap time is called trap time for a reason.
Okay.
And I obviously want to trap you out of your trade.
Okay.
So
Perfect.
again, if for smart money traders, again, if they see the continuation, that's their clean point of interest. They're looking for an entry. So what can this become? SMT. What should
Okay,
SMT do? Fake a reaction. And then obviously smoke them and then go lower. There's your reaction. There's your inducement. What is the price? Right, and then we're ready to go. Again, what did happen to the channel?
Yeah, induce high to go low.
There you go. And now we can expect our retail heaven, obviously, for New York trap being a continuation trade. So technically, again, comes back all the way, maybe something in the 1 minute in here. I don't know. Right. But yeah, that's technically how you trade these continuation setups in here.
Nice.
And then obviously, let's see. Boom, troops out of it. Smart money traders are so confused right now. And
Yeah.
obviously, we're having a good time. Right. And then obviously the only next thing is London close. What's London close? Right. So if there's something happening there, obviously we can maybe look for mitigation entries. Right.
Could be like an entry here, right? Like
Technically, yeah, because there's the imbalance. They want to get out of their position, so it already happened. So it's already mitigated. So that play is done already.
yeah,
Right.
there was a lead and an EDM here.
Yes, but again, very careful about these EDMs and LEDs because we're technically only looking for one proper LED and one proper EDM. We already had the LEDs and we already had the EDMs. Right, and so this
Okay.
play is just done technically. I would not be personally interested in that.
Okay.
Right, but technically
Perfect.
that's again the whole cycle just like there. Everything literally is there. Right, in that order. That's all it is.
Yeah.
Right, so if you zoom out then, just maybe speed run, and I can show you my trade I took and even the target, and you can check that in the chat where I even set my target and why I took it. So if the next day,
Okay.
all right. So let's wait for Asia. There we go. Maybe let's do a little quick more training and then be good. So, okay, stop it, please. So what do you see already? Should be very obvious here. In Asia.
There is a builder.
Yes. So in what direction? Or can you mark up the build-up? Yeah, there you go. So already in the inducement stage of low side, right?
Yeah.
Okay, so just speed run through it. All right, it's inducing low. Where's the channel? Oh, stop it, please. So where's the channel here? All right, like this.
Correct.
All right, so very obvious channel in here if you mark it up. In what direction does the channel getting induced?
To the downside.
To the
Yeah,
low
low.
side, structural inducement here into mitigation. What is the price? Never induced out of Asia high or low.
Okay.
Right, so obviously this right here, if they come back to the extreme, is our London trade into the inducement.
In this case, if price, so my objective was this inducement, right? But it didn't happen, and
Yeah.
there was a build up here.
Mhm.
So why I could say like it's not going to induce low here, you know?
They will. That's the funny thing. And you marked it up perfectly as well. You have to start thinking in about what's going to happen and how they achieve it. Let's say the goal is from A to B. That's the obvious goal, right? You have your A and your B. If they do that all the time, just say, okay, they're building up liquidity here, boom, take it out. Right? Then building up liquidity here, boom, take it out. Take it out, take it out. Then the market would look like this. It's not possible. They cannot take out all the liquidity points all the time. Right? And even then, again, they're building up the trend line here and the trend line here. You see? So
Yeah.
obviously they have to deliver market properly. And how they do it, they have to build up everything simultaneously while giving retailers what they want to see. So they open positions. So what is that? It's a double top, double bottom, right?
Double bottom. Yeah.
Obviously, this one did not take out the inducement. It also didn't make too much sense because it's again Asia.
Okay.
So when do they want to take out these zones? Obviously, in a time which makes sense for them. In the meantime, again, they're building up, again, giving a false reaction to the low side, building up a channel, so buyers getting in. Perfect. Getting all these Koch entries, exchange of characters, buyers getting in. Right? Perfect. So they buying. Obviously, now they're building up a channel to low side, structural inducement. Now they're having again, overall, it's a bigger channel to the downside. So, of course, that's a continuation now. Right?
Okay.
No, it's not. It's literally a build up, an inducement of structure and low. And now London kicks in. Now the liquidity comes. But where is the liquidity now? In Frankfurt and London. Where's the inducement of this channel? Lower high.
Okay.
Right? Build up, inducement low, structural inducement. So in what direction did they induce?
Low to go high.
Exactly. So now we can obviously take this buy trade and then expect what? This liquidity to be taken.
Yeah, sure.
It's the perfect play they always do. Right? So let's see what they did.
Okay.
Right? So obviously now that's technically we had the inducement low. So that's just a reaction. Now tapping into the double top. Right? So again, they can smoke it out, or they can even be more brilliant about it and give a false reaction, which again brings sellers in the market because they see, crazy resistance. It's overall a sell trend, pullback. Oh yeah, let me trade that short. No, you're getting smoked. But they first need the reasons to get in. A false reaction. It's always the same. Right?
Okay. Yeah.
So let's see. False reaction. What is the price? Oh, third touch. Oh, yeah, the thing has to hold, right? Yeah, look at it. So much resistance there. Look at it. Impossible to get out, taken out. And now look what they're doing. Boom. Smoke it.
Yes.
But again, you're smarter now and understand, okay, let's build the channel. No, take take this one. Yes, and mirror it up.
Okay.
Yep, there you go.
Yeah, so it's building and inducing high to go low.
Okay, so going high. What's the next point, obviously?
This inducement.
Could be, right? But then we have to check the build-up.
Sorry, as a low first.
It's technically already a valid thing. All right, so let's see what they did. Okay, first inducement low. All right, and then something interesting. Okay.
Yeah.
So then the first question we have to ask ourselves is, does this push in here tap into a valid mitigation zone already? Yes or no?
This one, yes.
Yeah, but the first one?
No, the first one, no.
All right, so now we had just a build-up, induced high to go lower, inducing low. Okay. And now obviously let's get tricky. Because now they induced low, and that's where, again, things for retailers become absolute confusion level. But what can we do? We're making our channel again. Now we see, okay, the first channel is this one. Was induced to the high side to go lower. Okay. Now let's see if they do another cycle. We have to find 3 points or 2 clean ones to find an inducement point. Okay, so now we have to take these higher ones and draw a channel here. If you can connect these 3 points. So is that channel induced, yes or no?
No.
Exactly. Look, it's literally a perfect channel. So should we get too interested on this push in here?
No.
Exactly. And that again keeps, you remember when we did it the first time? That's so essential to do so you don't get induced by the inducement. Again, in this one, okay, I completely see it, right? But now the third one, we should stay out of that because there's literally 1, 2, 3 touches in here, faking the SMT now, most likely because why? Build up, false reaction, inducement, and then it can go lower, right? But you
Yeah.
see, it's all the perfect picture play. They even said that yesterday when it happened. Right? It's like,
Yeah.
oh, was it yesterday or 2 days ago? I can't remember because every day is just so perfect. Right? But I think even yesterday, can you check the date on this one? Was it yesterday? No, it was the. No, sorry. Yesterday was the play which they went by higher, which was the most obvious thing ever. Yeah. That was my self-trace soon. Yeah, I remember now. Right? But that's the picture perfect plays. They do it so obviously. Again, it's just a little bit hard to see right at the beginning. But now everything is perfectly sense. Build up into the SMT, gives a false reaction. You want to induce out of this channel. And obviously, if you want to take out this liquidity point, we want to induce in what direction?
Low.
No, if we are in this cycle and this build up.
Sorry. Induce high to go low.
Exactly. Small money traction can give a false reaction, induce high, ready for taking out a medium inducement.
This will be a smart money trap.
Exactly.
Too. Okay.
Okay, so let's see.
Induce low.
Okay, induce low. So very interesting. So
high.
now again, we have the inducement low of the channel. So what should happen next?
To go high.
There you go. And now obviously we have the smart money trap reaction.
Yeah.
Smart money traders doing what? They're seeing the break of structure, the Koch, whatever. So guess what? They are
There's a point
looking
here. Right.
exactly. They're looking for entries right here.
Yeah.
Right? Obviously they're getting induced. Same thing in here, right? Boom. It's the same stuff. Getting a false reaction and out of a certain tube. And now look at this
Yeah.
build up.
Sorry. Yeah.
Is this
Now
build
it's
up now
getting-
induced to the high side? Yes or no?
Yeah.
Do we have our vector candles? Yes or no?
Yeah.
Okay, so what's the
Yeah.
logical thing we look for?
Go low.
Exactly.
So
What's the order of
now-
things you should look for, like in terms of entry helper?
So here we look for a let after the boss. So there is inducement, then it creates a relevant boss.
Mhm.
Then there's a point, and in the point we're looking for the entry helper confirmation.
Very good.
So and it's like
Okay, so first of all, there's our 5-minute point of interest. Like, no, we're looking for shorts now, right? So what's our 5-minute? Exactly. There you go, because that's the mitigation of the inducement, right? So technically the
Yeah.
imbalance, like here.
Yeah.
Perfect. So that's our ideal scenario. So we stay on the 5-minute. What's the next entry helper confirmation we look for?
There's a boss here.
So that's our where we get interested, not like whatever smart road trades, because they're already getting their third L in a row. We are just getting
Yeah.
interested now, right? As you see.
Yeah.
Okay. So what's the entry helper confirmation we look for?
The let.
Oh, okay. So let's see.
Also, there is like, could say like equal lows here.
Not really, because again, the overall target is the medium inducement anyway, so we don't really. If you want to play the internal plays, then yes. If no, then no. If the target is
I
clean,
say like for confirmation, extra confirmation of the third.
yeah. But again, you have to also think about like what they're doing. Again, first of all, this whole thing is like breaking out to the low, to the high side. Again, they're technically whipsawing each other like left and right all the time. So again, they're just smoking retailers left and right, and even smart
Okay.
money traders in here, smart money traders in here. Final inducement with vector candles. So our direction should be very clean, trading away from the inducement, right?
Yeah.
So we don't really care too much about now these little points in here,
Perfect.
right? So again, if you're getting a let or something like that,
Yeah.
what a surprise. Right, so I missed this. I can spoil it right away because it didn't tap into the 5-minute POY, and plus
Yeah.
the 5-minute POY is way too big
Was
for
too
my
big,
taste.
Yeah.
Right, so I wouldn't even take that even if it taps in here. So even if it taps here, I would not take that because it's way too big.
Yeah. It's too big.
Right, it is a let, yeah, perfect, but it's just too big stop loss. So guess what I did, and maybe you can figure it out.
The continuation.
Yeah, so what you do, you go to the M1, right? Because now you see, okay, this is the M5 flat. Perfect. So now you're looking for baby cycles inside. to look obviously for your entries.
So there's that build-up, right?
Yeah, you can mark it like this.
Okay.
All right, so there's your inducement, just a wick little, which stayed a short. I mean, now I'm remembering things a little bit, so I'm cheating a little bit. But again, this, because I tracked it obviously very hard, and this missed. But then it was a 5-minute let and kind of okay. You could be like, okay, that's the build up, inducement into point of interest, fair enough. So given 1 minute confirmations, I'm in, right?
Okay.
So let's see what happened, and maybe you can find my entry. All right, so first of all, where's the imbalances? There you go.
So you took this entry?
Nope, it didn't tap. Okay, there's the build up, equal highs into it, right? If it would tap, obviously I would take it. When I was remembering things a little bit, that was the build up. Look, the equal highs.
Yeah.
Right above the PY, limit goes straight here.
You put the limit there, right?
Yes, limit was right
Okay.
here.
Okay.
And obviously, what do we have also after this?
Equal lows.
No.
You
This
need
push
to-
led to the high and gets broken here. So that's our internal break of structure, right?
Okay, yeah.
All right, so that locks in the time, the direction as well, which is nice for us, obviously. The better break of structure obviously is here, right?
Yeah.
And that would be even nicer because now we have the equal lows. If that gives some break of structure, again, now I'm remembering things a little bit. So yeah, there you go. There we had that one. Equal highs. That's the ideal point of interest. Limit order was sitting right there.
There is a let here.
Yes, but we're not interested in that. We want to grab the liquidity and obviously
Okay, the equal
get
highs.
touch
Okay,
into
yeah.
the, yeah,
Yeah, taps.
there you go.
There is an
No, we're not interested in lets. So again, we technically would be
Yes.
interested in lets if it's in,
Yeah.
again, the entry up. That's why the
And-
simplicity approach says everything before and then let and EDMs, right? So
Okay.
same thing here. You need to look for the liquidity and your POI. If that's a let in here, I'm not interested because again, that's equal highs and our point of interest is here anyways,
Okay.
right? So if you
Okay,
want to take this let in here, your stop has to go above here.
Yeah. It's
And that's again too big. So just wait until they take out the liquidity, and then your order is way closer to the extreme, and your risk score is way better, right?
Yeah.
So
Yeah.
this obviously was my trade in here.
Okay.
And guess what? Where's the target?
Here.
Exactly. You should not aim too much more because you're just aiming for the medium inducement, right?
Yeah.
And then obviously that let them mess around, and then you expect what after that, after medium inducement?
To end the cycle and start a new cycle.
Exactly, right? So let's see what happened actually. Right, so smooth. And now obviously you can look for let confirmations. If we missed that, for example, right? Because again, now we have another baby inducement in here. Now we can look for let entry confirmations. Right, so here's your let. Obviously missed the POI. So it is what it is. If you want to take the let, same thing in here. If you want to take the let, stop goes above here. So if you want to take the let, stop goes above here. Best case, not a buy.
Sorry, I was confused. Yeah.
Yeah, so you have to take it like, yeah, like this. Obviously, the better trade was this one in here. If you want to mark this one up as well. No, like this one. Like my
Sorry.
trade in it. Yeah. Yeah, that's the best trade we had in the day. Mine only was a 1 to 10 because my stop was above here.
Okay.
All right.
Yeah.
but that's your LED technically you had without a
So after
mitigation.
the LED, now you look for the EDM, right?
Exactly.
Okay.
So let's see if you can find the first EDM or on EDM.
It must be maybe here.
Why here?
No, not here.
I mean, we don't know, but it could be. All right, so the only thing we do, again, we track what they're trying to do. Now, obviously, we have to draw the build-ups. So where's your build-ups? All right.
Like that.
You
Right.
could mark it like this or like this. All right.
Okay. Okay.
So both techniques would be valid, but that's probably a little bit more nice because you have like 1, 2, 3, 4 touches like this. Then obviously induce to a low side. Or you can mark it up like this also. It's completely fine. The only thing is, again, we're looking for build-up, for an EDM.
Okay.
Obviously induce clearly out of the build-up.
Here is the EDM.
There you go. Was it too hot?
No. Not really. I just wait for the mitigation, right? You can put
Yeah, again,
an
these
order here, right?
EDMs are a little bit tricky, right? Because again, you remember when we spoke about like you don't want like stuff like this to happen, and then EDM like in like here. So again, I saw this EDM on the edge, but I did not take it because again, it's not something you just look for entry EDM confirmations, and if it's not clean, if you don't have clean structure points, wait for the confirmation. Okay.
Yeah.
Because again, now I'm speaking a little bit in hindsight because I remember what happened, but it happens a lot of times. And what happened, if I remember correctly, I think this point just got induced high because again, we're looking for an inducement of the build-up anyways. And then the next point was EDM, and then it went lower than that, if I remember correctly.
Okay, perfect. Yeah,
Right.
yeah,
But again, it makes perfect sense in the cycle because we're looking for an inducement high to go lower. Right?
okay.
That's
Yeah.
why the first EDM can be a little bit tricky because it exactly is in the build-up stage as you drew. But can you fast forward so you see exactly what they did actually? Oh yeah, it was like this. And reducing high out of the channel, right?
Yeah.
Technically, yes, it is your
Okay.
EDM.
You consider this like an inducement high.
Yeah, so if you took this EDM with a limit order in here, that's your baby L. Then you should understand, okay, shit, they induced out of this channel to go lower. So let me look for a re-entry.
Okay.
Again, this is your inducement now out of the channel. Where's your imbalance here? There you go. So what's your breakup structure? Where is it?
Yeah.
There you go. So again, that's technically, again, let's say you're getting this L in here. Okay, I see why you got that. And again, see the bigger picture with inducing the channel to the high side. Obviously inducing structure to the high side. And then obviously here, the tap, nope. Okay, completely fine. Did not tap. So it is what it is. Oh, there you go. Okay, it taps.
So it was like kind of a let, but
Yeah, now it would make sense again for being a let because again, we're looking for inducement, let, EDM. Right? It's the same stuff all over. You see, it's just in another baby cycle.
Yeah, like you can repeat the.
It's always the same. Yeah, it's always the same. Again, you have the channel build-up, inducement high, breakup structure, into mitigation, kind of a let, and then obviously continue lower. Next target is here. Boom.
Okay.
So I missed this one also. Now I'm just giving away my trades a little bit, whatever. So I missed this trade because I just literally wasn't around when it happened. But then I took the order flow after that. So you can show me where the order flow is.
Yeah, actually there is an EDM here, but was like later.
Yeah, the better thing always is to let, so we don't care about this EDM.
Okay.
Right. Okay, so I missed that one. And my order flow entry was right here.
All right.
And then obviously you aim for, you see, it's like an abundance of trading opportunities.
Yeah, that was very fast here. Like
Sorry?
that this rate was very fast. Like it happened really fast. Was hard to enter, right? Well,
Not
I
really,
mean,
because I actually was annoyed because I missed this one in here. Then my alert
okay.
just fired, and I looked up my charts, and then obviously said, okay, fuck that. I'll add market execute here, stop goes above here. Perfectly fine.
Okay.
And then obviously the magic happened. Choop.
Yeah.
Not too bad. And obviously now you had the medium inducement, you should be out. Again, you should not aim for the fences and look at the risk reward. 1 to 10s, like it's not bad. Like why, again, people should not aim for everything. Just take it, medium inducement, done. Done.
Yeah.
Okay, so that's all you need. Right? 1 to 10. Well, I think this one for me was only 1 to 5 because I had a little bit bad worse entry of my execution. That is what it is.
Yeah.
What else do you need for EU in like literally
Yeah.
1 hour?
Yeah. That's
Right, and then obviously after medium inducement, what do we expect after?
another cycle, so build up.
Right, but now obviously becomes very late. London close. If London close is the low, like or the extreme, what should it be?
Sorry?
If London close is the extreme, maybe you remember that from when we covered London close characteristics. If it's the extreme, it should induce something. Right? Not mitigate, it should induce. If it's in the middle of the range, it should mitigate. If it's the extreme, it should induce. Right? That's again, if you don't remember that, then just go back and watch London close characteristics because it's very important for the overall cycle. Okay, I can show you what it is because remember, obviously, so if you fast forward it a little bit.
Yeah, I didn't understand the question. Sorry. I think that it might be that like London close should induce something.
Yes, London close again. If London close is the extreme, like meaning again that you have price action like this. London close is here. You know it's okay, but might be the extreme. If it's like this, it should induce something. Induce liquidity. That's London close. And obviously trade away from that.
Okay.
Makes sense?
Yeah, it must be inducing the.
Yeah, just mark London close. Where is it from timing?
Yeah.
No. London close is what time?
3 p.m.
London close.
Oh, sorry.
There you go.
That confused with it. Yeah.
All right. So again, next timing window we'll be interested in London close, but that should be if it's the extreme, it's and should be an inducement. So let's see. Just fast forward a little bit because now I'm just talking about memory a little bit. All right. So boom, there you go. Stop it. So again, how does the rule make perfect sense in here? Right.
Yeah,
but obviously all is channeling, then obviously inducing to low side.
Okay.
And what is it? London close. If you check the M1, what did we have? Right. First of all, these fake Kochs in here, obviously stopping out small point traders in here. Right. With having the limit order in here. Then we have equal lows. London close obviously induces all the structure points to a low side one more time. And then obviously we're interested in that. Look what we had. Build up, induce low to go higher. Boom, boom, boom. Always the same. Always the same. See, it's always the same.
Okay.
Okay, makes sense?
Perfect. Yeah. Perfect.
Then obviously we expect price action to move away from the medium inducement, as always, like orders of price.
Yeah.
Right, and then the next day was quite easy as well. We covered that a little bit on the edge yesterday. Was actually quite nice, but yeah, I have to go. But I hope everything is clear.
Yeah, this helped me a lot, for real. Like, thank you, man.
Yeah, man, you deserved it because of your mock-up. So it's an earned 101 session. And I made my promise. I hold my promises, okay? So if there's any more questions, let us know. And enjoy the rest of the day.
Okay.
And smack it.
Thank you.
Okay, catch you very soon. Have a good one. Cheers!
So when I looked at this area, I zoned in a little bit closer, and I noticed that there was some type of inducement here. So you've got a small micro buildup here with these 2 wicks, and then it builds up, and probably we can see this on a 1 minute. Let me see if I can take my 1 minute all the way back here. So right here, we've got a buildup, and then it comes up to this imbalance, but it induces. The character in my mind was an inducement, a buildup, a vector into the area, and induced, and then refilled, and then came back. So this was an inducement that led to a pretty substantial fall from 35 down to
what is this purple line indicate?
That purple line just indicated the last imbalance for me.
This one?
This line here.
No,
yes.
This one.
That is London close.
Exactly. So what's the purpose of London close also?
Usually for them to mitigate their positions.
Exactly. And what do they do here to the absolute minute, right?
They
mitigate the imbalances to the minute, and then they create the 5-minute imbalance from here, right?
Exactly.
So that's also why it is a liquidity point. It's not more like on a bigger picture, it's not really a structure point because we have just low lows, low lows, low lows, low lows, low lows. But then the only time which we could consider also, which makes sense and is not mitigated on the 5-minute, was the London close. And as you said, it's also some sort of equal highs plus an inducement which fills the imbalances on the 1, right? And then makes new low lows and then creates imbalances on the 5 in the meantime, right?
Yes. Okay. While we're here, I think this will be a good point since you're going to share this. Why would this not be considered a smart money trap right here?
This. Okay. So if you just zoom out on the 5-minute. So what do you see? What to the left even? Where does this point react from? So this point right here, where does it react from? To the left.
Reacts from.
Yes.
I couldn't really see a good POI to that, but
exactly. That's the question. That's the answer to your question, because it has no significant reason to now react from here and out of a sudden makes a new higher high. It makes no sense because to the left is nothing. Price has no reason to make a new higher high here. So that's why you're just trading the normal order flow scenario. Plus, if you look at the daily cycle, if you zoom out a little bit in this scenario, so you can see the full day. Just double click maybe here. Yeah. So I think that's also you who asked this question of why is only this the inducement and we don't waiting for inducement here, right? And then go lower. I think it was you asked that, right?
Yes.
Of course, if you just look at this price action here, if you zoom a little bit more in. So that is by itself some beautiful equal highs, right? And that is itself the inducement, right? So technically that could be done. And we even have break of structures after, right? So technically, this could be an area of interest later on. So now we're entering an Asia session here. So that's not even an time we would trade anyways.
That's right.
And then they decide to just induce this high one more time. Makes it a difference to us? Not really. Obviously, we don't expect it because technically we have already our equal highs, our inducement. So we technically could run a POI from here. Then Asia, they just make it one more time to clear out every potential sellers in the market, right? There could not be more sellers because it just made a new higher high as well, right? So if you just look to the left then, sorry, to the right, after this little inducement here, it's another inducement after this beautiful inducement here. Do we necessarily need another inducement in London, or could we go straight down?
We can go straight down. And my research shows that usually after the third one or an inducement of a prior buildup, equal highs, you may get one more, but you usually do not get one more.
Exactly.
Okay.
So we just need to understand that this price point level, even it's just an Asia high, yes, it is definitely an inducement after the inducement. It usually should not happen, but it did. So who cares? And nobody trades in the close of Asia anyways, right? So
Correct.
now we just can expect, and you should already have that in your nose, the daily cycle variations. If you understand, okay, we have a beautiful equal highs here with an inducement after a huge up run, still a lot of imbalances left. So we definitely have potential to the lows, at least to these areas. And now we have another inducement, but it happens in Asia. So what can this whole day look like in terms of the names we have for daily cycles?
Well, either it wasn't a London knockout because it didn't occur during London
Exactly.
as far as inducement of Asia, but it's a retail heaven and a retail
Exactly.
hell for us.
There you go. But we can for sure expect a retail heaven. So we understand
Yes.
that, right?
Yes.
So the only thing is, where could we enter? And I think you already marked it up here. If you just look into it closer a little bit. So what do we have? We have our last imbalance candle, right?
Mhm.
Here is filled. The demand is filled all fair enough in here, right? So the only supply and demand candle is here with the imbalances left. Then we have a beautiful equal highs into here. London session, suck, mitigates this last areas and then goes. That's our ideal play. Equal highs, the inducement candle in London, obviously not inducing Asia, but mitigating this last point in here. After what? After break of structure, right? Here's your structure points.
Mhm.
Broke the structure, supply turns into demand in this sense, right? Comes back, equal highs, inducement candle, mitigation. That's your entry right here, trading away from this and target all the way down to at least this last imbalances, right?
Correct.
So is that understandable?
Absolutely.
Is that something we can catch and understand and even know when this happens right here?
Yes, sir.
There we go. So the only thing is, how do we get in? So would you see this on the edge? Yes or no?
Yes, sir. Absolutely.
So what kept you away from it?
I talked myself out of the IDM, the medium inducement, because it happened during Asia.
Okay.
And I was looking at the Asia midline becoming another leg higher because I didn't think that if the inducement happened during Asia, it was valid. But I've learned now that it is. And so I would have had a different outlook on that if I would have believed in the inducement. Do you understand what I'm saying? I was looking at a possible midline reversal here to go higher.
I see what you mean. The only question is, why would they make a fourth inducement, if that makes sense? Or
I totally agree now. After looking at it that way, yes, sir. That is absolutely
another tricky
correct.
example. Yes. Maybe the opposite example is if you maybe just switch the tab and let that open, but change the tab to, I think it was it EU? Oh, I think it was GU. If you can look at GU. That was the opposite example. If you can go to GU.
Yes.
Okay, so if you look at that day, this one right here. So yes, it was GU. So if you look at this day, what do we have in here? We have a 1, 2, and a 3, right? We have technically a triple top, but then we have this actually London Cup trade. So why? Maybe someone would not take it because they would see this triple top in here, right? And would be scared of it and like, London, triple top, probably an inducement, and I wait for the reaction here, and then it's off, right?
Right.
So sometimes that's 100% valid. If you have this thought process, that's no problem at all. It's not a mistake. It's even good because technically being aware of like triple tops and whatnot. But just for argument's sake, if you have something like our normal picture perfect lit trading cheat sheet or checklist, whatever, it's always reconsidered a smart money trap before and then going into the higher mitigation area, right? I mentioned it happened, London. Okay. With that in mind, is that definitely a good example we can take. If you have a smart money trap before with an easy imbalances, very visible to the whole world, and then we have this hidden imbalance in here. Obviously, forget about the triple top, but would that by itself be a very valid scenario if it hits London Open to the minute as well? Yes or
Yes.
no? Yes. The only thing we just would need in terms of make it a very good setup is a break of structure. And then a potential mitigation of the extreme with potential lets. So now we don't have a break of structure. We stayed short of it, but we for sure had some lets, right? Plus some EDMs on the 1 minute and all the scenarios. So just because it's sometimes not clear, is everything rule conformed, yes or no? Other than forget about this triple top. Is everything else picture perfect?
Yes, sir. It is.
That's the only thing which a few people keep struggling is because if you just look for Mona Lisas, like picture perfect Mona Lisas, they, of course, they happen, but they happen rarely. And you would miss a lot of really good confirmed setups in the meantime. There's nothing wrong with not taking not clean setups, but it's up to you of how much you want to trade and how comfortable you feel if taking not so quote unquote clean examples, right? So that's what you need to figure out for yourself. If you just want to really picture perfect Mona Lisa trades and take 1 or 2 trades a week, or if you trade trades which are rule confirmed, everything is in line, but maybe some criteria are not fulfilled. Maybe you don't have a mitigation, or maybe you don't have a picture perfect inducement or stuff like that, right? And that brings us back to the EU trade, also the GU trade from today, for example.
Can I ask you about something before we go on? I think this might help some folks too. Why would we use this for a sale instead of this area, or are those both areas valid areas of interest?
This one. Okay, so that's an easy one because, like, what's your liquidity zones? What zones of Asia range do you have for liquidity zones?
You really don't.
Okay, so and overall you have the midline and the low or the high, right?
Yes, absolutely.
Okay, so then we look at the structure play. So we have this structure point, right? This is our new high, right? Or in this case, the inducement push. So that's our Asia low and also daily low. What's the push that led to break these daily lows? What's the push that led to that?
This push here.
Yes, so that's of course now this push that led to it. Plus, is there any liquidity zone that leads to indicates also that this could be a point they come back to?
Okay.
It's Asia midline. It's also Asia midline. So we have a structure point that led to the break of the daily low. Plus we have some imbalances. Of course, we have imbalances here. So if you say in this sense, okay, this is my extreme, this is my decisional, but now this is confirmed also by Asia midline plus the imbalances, right? Plus now we have really, really juicy, and that's why it made it so juicy. We have look at all these equal lows being formed like maniacs. Then they come back.
Okay.
Then they fulfill it, and then they continue lower. So they even show it to you. And because I remember this setup, if you go in the 1 minute in this scenario, it was also a picture perfect EDM trade. Okay. So the answer to that is, if you have 2 zones, just weight your confluences. And way more confluences indicate this point in terms of liquidity, in terms of structure, in terms of what they show with all these equal lows being formed until they tap into here, fulfilling the imbalance, and then they go lower, right?
Yes.
Okay, and then you also have your 1 minute EDM trade for another confluences of events. And then obviously you can still say, okay, maybe I'm still not sure if I should take this one or this one. Then you still can split your risk and just give it a shot. Because if it works out, good enough. If they go higher, okay, take this one. Okay?
Beautiful. Yes, sir.
But the confirmed answer is this one is definitely way more valid than this one.
5 minute let, 1 minute EDM, imbalance in fill. We broke the lows of Asia. We got, or the low of the day. We've got all that liquidity below there. And that's the origin of the push that decided to break it. So you got Asia midline, so you got like 6 or 7 confirmations
Exactly.
to take that trade.
The only thing which would be the cherry on the cake would be if that is a timing confirmed, but it just wasn't. It even looks like some news event or whatever, right? So that's
It's
the
New
only
York
thing.
Open,
I think it was a little bit off though.
8:40 Eastern.
Yeah, best case it would be 8 o'clock, so it's 40 minutes late and it's 20 minutes before New York trap
Okay.
time. So it's a little
So
bit
in
in
New
the
York
middle.
Open, you consider that to the minute, New York Open, not the hour.
Yes, it's better if it's like you can give it a few minutes, obviously difference, but if it's New York Open, it should be New York Open. Same thing with London. That's why we give you this little box with the time difference. So you give it maximum of an hour of play, but not more, right? So if it's like in the middle, yeah. So we have timings to the minute, even the saying for a reason, right? Same thing with magic manipulation minutes. If it's 10:24, it is obviously magic manipulation minutes. But if it's 10:50, it's not magic manipulation anymore, technically, because it's too far off.
Okay.
Right.
Yeah. I've been told 10 minutes by some people and 15 by others.
Yes, that is a good range. That is a good. Obviously, it can be 20 at some points as well, but yeah, give it a little bit of play, and obviously, timing is the cherry on top of it. If the price action doesn't align and the whole picture doesn't align, the timing can be to the minute. Who gives a fuck? It cares what they show and what they print. So obviously, price action always comes first. Same with everything. Price action always comes first. Same with the entry helper. Even if it's an EDM, but price action shows completely something different, then don't take the EDM, because price action is key, and then all the other that's why it's confluences. Okay, that's why we have multiple confluences, but we only have one price feed, right? So that's why we always have to analyze the naked chart first.
Yes. Beautiful.
Awesome. Then, for example, another one for if you like these type of scenarios, even today, I think was the same exact one. If you look at today, what is it? What's the push that led to the new low? That's yesterday's low, right? That's yesterday's low. Which push broke it? It's this little push in here. What is also this push? What is it?
Asia low.
Exactly. So if you check it on a 1 minute, it was absolutely gorgeous. What's the timing? It's in New York trap time, coming, of course, from a bigger picture supply demand area. So we can just take it until it hits this areas. Again, it also was an EDM on a 1 minute. It's very similar to the setup the day before, but obviously way nicer. Way nicer. You could ask the same question, like why not this one or this one or this one? Because that's getting into the stage of you taking every possible imbalance zone and then you're getting confused. But if you overline the confluences with the intentions plus the step-by-step formulas, then it becomes very easy, because who cares if there's an imbalance here or here? My liquidity zone is Asia low, which is here. My EDM fires here. My timing is here, right? And then obviously my 1 minute imbalance is also here with the 1 minute EDM. Perfect. I can take that, bouncing off the fixed equilibrium in here as well. Confluences, and then obviously I can take it. Building the picture perfect buy channel. What do we have before that? Building the equal highs to the equal lows to your left, inducement. I think internal break of structure. Then we came even back, mitigate that stage. So that's your ping pong type of trade until these imbalances. Perfect.
Yes. Yes, I see it.
Okay.
That really helped me when you just said, who cares about these imbalances when you got all of this confirmation here?
Yes.
We'll say this for later. If we've got room to go to the demand area and we've got a good stop here, then we've got to, and then we're bearish. So we're coming off a major IDM last week. So we're still trading away from the IDM.
That's also true. That is also true. Obviously, we have this very not nice triple top on the all highs, but again, guess what? That just becomes liquidity for another day. It's not that they need to take the liquidity immediately. That's the concept of liquidity. They need to show the liquidity and give it obviously some pros and some plays. Otherwise, there would be no liquidity. If support and resistance and trend lines would always fail, guess what? Nobody would trade support and resistance or trend lines ever. So sometimes, obviously, they show a triple top and then they move away from it without inducing it. That's completely fine, but you can bet your ass on it that they will come back and induce it later. Right? But it's not, it doesn't need to be immediately. So that's why some people are a little bit afraid of taking stuff, because they think liquidity will always be taken out immediately, but that's not the case.
Absolutely. That's another thing, is like, when's the liquidity going to be taken? That you go through that. The only thing you're really going to learn about those kind of questions is back testing and watching the market and putting the hours in.
Yeah, very true. Plus, if you just follow the step-by-step guide we gave you, let's just look at this day, okay? Or even before. Let's look at the other day, the day before. So we make 2 days. So if you go on the day before, so just if you use the map of the Litiverse, okay? So if you just look at this, so we just look at this picture in here, project it to the left, smart money trap, extreme imbalance, okay? Obviously, would be way, way, way nicer. And even looking at it on the edge here, you would definitely bet that this takes, induces it and then goes low, but it did not. It did not. So guess what? Do we cry about it? Do we crawl in the ball now and whatever and lie in the corner? No, right? It is what it is. We just trade what is up in this specific moment, right? And what we see here, build up, vector candle, inducement into imbalances, but obviously we can expect this being smart money trap, and this is your extreme mitigation, right? But this is 100% a cycle fulfilled, mini cycle. Always not a bigger picture cycle, but a mini cycle. So we technically could take this sell in here for sure until when? Midline, something like that. What's the next thing we would look for in the midline, right? We're looking for, if any, anti-confluences, because we understand it is what time? What's the next thing in the Litiverse?
Frankfurt Open.
There we go. What scenarios do we have if Frankfurt Open shows us this channel here? What is the scenarios we would like to see?
Build up into Asia midline.
Yes, that's exactly what happens. So Frankfurt opens to the minute here, right? What does it show? Do we have any confluence that this thing might go higher or no? What's something we can use?
Smart money. Oh, entry helper and smart money trap, possibly inducement of smart money trap at the
What do you see at this point on entry helper?
I see EDM.
Where is it? There you go. It is an EDM, right? It is an EDM at Frankfurt Open of the Asia midline, right? So obviously we don't take this one right away just because it's Asia midline. We wait for confluence. It's only EDM after it even smashed through the midline, right? And the extreme imbalance is here, right? This one is mitigated. This one is mitigated. Awesome, right? So this is your extreme lost imbalance. It's still EDM, and now it makes sense because Frankfurt Open also taps into. It just plays off the bigger picture, Asia midline. Awesome. Coming from a smart money trap. So if it gives us potential internal breakout structures, mitigation, which did not, we could take this buy trade in here and taking the fast and fluctuous trade. But it did not. Obviously, if you're getting more experience and whatnot, obviously you can trade it from here or other 1 minute confluences, right? Maybe you have some LETs or whatever confluences on the 1 minute if you're getting more advanced, but just understanding the bigger picture first and understand that this 100% is a scenario we even give you with the fast and furious with EDM confirmations of the Asia midline coming off and cycle completed. And now obviously fulfilling the bigger picture cycle, which is smart money trap coming into the extremes. And when should it come into the extremes and mitigate?
London Open.
There you go. When does it tap into the
London Open?
There you go. Is that a surprise to us in this sense?
No.
Yeah, there you go. The only thing is, oh, I don't like this mitigation because it's equal highs. Fair enough. Don't take the limit order. But guess what? It tapped in the mitigation area to the pip and London Open. If you don't like it because of the double top, it's fine, but is it 100% our rule-based scenario? Yes or no?
Yes.
There we go. So now the next thing you wait for what?
Break of structure and timing.
And
well, you've got to wait for the next split cycle to come. Build up, the build up, and then inducement and mitigation.
Okay. And if you look for our entry criteria, entry approaches, what entry approaches do we have?
We have a let.
Overall, not overall. So what's the correct order? 1 to 4.
Cup trade, right?
So what is it based off? Is it what is the execution? When do you execute it?
Well, I get these confused a little bit, the order of them, but I know that one is the break of structure with mitigation.
Okay.
One is extreme. The extreme is the limit order.
There you go. So the limit order would be here. That's your limit order of the cup trade of London, right?
Yes.
That's the first one. Awesome. What's the second one?
The second one should be break of structure with combined with a let and mitigation, possibly.
There you go. So the only thing is we don't have a break of structure here, but we have obviously the mitigation of the extreme, right?
Yes.
With a potential let entry. So that's our second, right?
Mm-hmm.
So what's our third?
Third one would be a let and EDM.
There you go. Maybe in here. So that's a 5-minute let now, right? So that would be in here.
Yes.
And what's our fourth and last one?
The fourth and last one eludes me. Sorry.
It's just an EDM on the 5 for another one on the continuation trade. And that would be this one.
Okay.
And that's all you have.
Okay.
And obviously before that, it's the same thing with Foster Pretorius trades, and it will be the same one with New York trades. And then we just have a London close trade London close trade, and that's it. So nothing here should surprise you. It's just a step-by-step formula. And then every day out of nowhere becomes very clean if you just follow these steps and combine with the timing. The next thing is we give you magic manipulation minute here for potential let entry of the extreme. We give you the timing for the extreme entry for potential limit order with the London Open. We give you another point for maybe EDMs or something, re-entries on the 1 minute or 5 minute, right? With also the timing. This is obviously no timing, but it's an EDM, just continuation trade after new lows being formed, daily low being broken, equal lows being formed, comes back, fulfilling the imbalance. Perfect. Asia midline, EDM on the 1 minute, take the trade. And then the last thing, obviously, continuation, and then look for more scenarios to get in, but there was nothing in that sense, okay? But it's step by step by step. So and if you look at this day today, let's see if it's anything different or if it's the same exact shit all over again.
Okay.
So now you walk me through. Even hindsight, it's hindsight. What's the first thing? Start with Asia. Even start with Asia to show me that it's at the same freaking shit all over again. So if you just start, I give you a starting point. You have this equal lows in here. So what is this? What is this? And what is this?
You have an inducement, break of structure, mitigation.
There you go. Just happens in Asia. But it's the same shit. And where does it happen from? The last imbalance point. What is the price?
Yes.
So what is the next thing?
Well, we get build up during Asia.
Yes, moving away from the inducement. So they're building the buy channel.
We create liquidity up here.
Mm-hmm.
We also have liquidity up here because this has already been mitigated. We have a decisional up in here to take the low out here. And we came up into that point of interest and we barely induced this high.
No, we don't know that yet. We don't know yet.
Okay.
We're here. And just to spoil a little bit.
I see. Gotcha. Okay. I know
just to spoil it a little bit, never try to pick a point of interest here. We had like the GU example where this would make sense, where it was the London close with the imbalances, but guess what? This one is mitigated now. and we would not pick a random point of interest here or here, maybe here because it's Asia low, but
Okay.
not this one or not this one, whatever. But you only pick liquidity points. But if it's like low, 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 don't pick like, oh, this one, oh, now this one, oh, now this one. No, no, no. Okay, so in this
Okay.
case, this is the only liquidity point and Asia low, but there's no imbalances left in Asia low, nothing. The only imbalance was here, but that, as you said, is mitigated already. So for these limit orders, we already know there will be no limit orders because this whole point in here is just a mess and not clean, and we not pull something out of ours, right?
Okay.
Okay, but so,
So
we
we're
are
here.
here. We are here. Yeah.
Okay.
What's the next
So
thing?
we have build up and we create a mini cycle just before Frankfurt Open. We get Frankfurt Open here, 2
Yeah,
a.m. my
so
time.
what is the mini cycle here?
Okay, we've got build up, inducement of these lows.
Maybe even put it on replay mode because it's too easy otherwise.
Say that again, Reem. I'm sorry.
Can you put maybe on replay mode? Yeah,
Sure,
otherwise it's too easy.
Okay, absolutely.
Okay, so there we go. Just put, yeah, there we go. Okay. So that's Asia midline right now. So should we be interested in this one? Because, oh my God, it tapped off Asia midline. Oh my God, it should fly up now. Should it fly up right now or no?
Well, we don't have a completed cycle yet.
What is it currently?
We're in build up currently.
There you go.
So I'm going to change this to 1 minute. Okay.
Sure.
So got this build up here.
Mhm.
Beautiful triple bottom. And we've got the last imbalance here.
Yeah, to be just for argument's sake, I would not refine it to this one, just
Okay.
in case, because like, why this one? Exactly.
Just
There's
for me,
no
it would have been
real
the
reason.
last area that did
What
not.
about
mitigate.
this imbalance? There's still imbalance here as well, is it?
Absolutely.
Right.
Mhm.
So, and even
This is your smart money trap then.
I would say it's just more like a candle play inside the whole thing, but it's not a technical point. So if they fill the imbalance, they do it here, and that's technically all the imbalance left because there's no imbalance, there's no imbalance, there's no imbalance, there's no imbalance. That's the last imbalance, and then you have just this. So maybe if you really wanted to, this is your decisional, this is your extreme, but that's just making shit up at this point, right?
Okay.
So we should never look for like a limit order of this play, but just for argument's sake, they only would fill the imbalance here,
Okay.
right? Okay, but it's more about the inducement, is it?
Yes, we've got a vector out of build
Plus,
up.
also we had this one, right? This beautiful equal lows.
Yep.
Then the inducement, then break of structure. That's your extreme. Comes back, mitigated, mini cycle fulfilled. So that technically becomes your last point on here, right?
Mm-hmm.
Awesome, lovely.
Okay, so we're at Asia midline, getting close to Frankfurt Open.
Yes. So what would you wait for?
Wait for some type of entry, which would be the entry approach, whether that would be the extreme limit.
Mhm.
So if you don't want to take the extreme limit, then we need to wait on a break of structure and mitigation.
Very good. Where would be the break of structure? Where would be the break of structure?
To me, the break of structure would have to happen here, where the last push began.
Okay, fair enough. Some would say maybe even this one. So maybe this is the internal break of structure. Maybe this is some sort of internal as well. But yeah, technically this could count, but it's obviously the aggressive approach.
Yes, totally agree. In the context of where we are at the Asia midline at Frankfurt Open, and we've got a beautiful lit cycle, I think it's much more safe, in my opinion, to take the break of structure here during this scenario, let's say, then if you take the break of structure when the market has been trending all day like this, and then you come down to a POI and take a minor break of structure to reverse. Would you agree with that?
For the fast and fractious trades, 100%, because that's why they call fast and fractious trade, because sometimes they're just off. And
Right.
if you wait for like clean break of structures like here and then come back, that might be never the case, and then you're just missing out. But that's just for the fast and fractious trades, and because they're so fast in that sense. But obviously the safe, I mean, there happens, some scenarios happen as well when they actually give you this and then come back. Yeah.
Right. Absolutely. It has a name for a reason.
There we go.
Okay. So need to do that. Let's see. Okay. So you could say we have break of structure in here. If you're going to catch this trade, probably like you say, that's probably the best scenario, because it's going to, you may miss the trade altogether. So there was another entry if you want to take the mitigation of this point and have a very tight stop.
Yeah. Very risky approach though. Like that's definitely a risky entry for sure.
Okay.
But obviously a potential entry. Not the safest, not the best, but definitely something we could look for. What's another, now if you look at the entry helper, what's another approach we can choose?
This would have been a 1 minute let, no?
No.
Okay.
Where's the 1 minute let?
I was thinking it didn't quite broke, and then but it didn't come back to the line, I guess, right here.
No.
Okay.
But is a let a potential now though? Could it become a let now?
Absolutely.
There you go. That would be another potential opportunity. But then we need at least a supply demand area. So where would be the last supply demand area? That's the smart money trap.
Supply and demand area.
Obviously, we're looking for buys, right?
Oh, I'm sorry.
There you go. Very good. Very, very good. That's the last point supply area after this inducement happened, right? Now
Yes.
we're getting into the smart money trap. We talked about it a few times already in some community calls. Smart money traps, or technically building equal highs, can be sometimes even nicer than break of structures because it's just more liquidity, right? So they show and fake the support. Look at this. Look at this. Like, how many taps do they give this zone? Like
Yes.
50 quadrillion times, right?
Mhm.
So if you need to count up the stars in the sky, it would be this number in here. How many times it tapped this number? So guess what? Everyone is selling here. What do we look for? We understand the cycle, understand the inducement, understand the last supply and demand zone, having a let in mind, coming off a smart money trap, knowing fast and fractious trade is around the corner.
Asia midline.
We having the liquidity up here. Very good. Asia midline also. And we having all this liquidity sitting up there, just waiting to get snagged. So can we wait for something? And is that something you could wait for, Daniel, or is it something you'd be like, oh my God, I'm so excited, I want to jump in right away?
No, I think I could wait for it, because the way I traded before, and maybe some other traders can relate to this. When you understand exactly what you're looking for, then it's much easier to wait on that. When you don't have a really good plan and you think the market is random and why is it doing this or why is it doing that, and it happens sometimes and it doesn't happen other times, it is hard to not jump in, because you're like, well, I've seen that fly off of there half the time and I've seen it mitigate half the time, so I don't want to miss the trade. But when you really, really know your plan and you're like, you know what, the majority of the time it's going to do what it's supposed to do by the way they're manipulating the market and the way they're controlling the market, it makes it much easier, in my opinion, to wait on the correct setup.
I love that explanation. I love it. And do you think you have that at this point, or are we obviously working on giving you this exact plan that you should wait for something to happen?
Absolutely. And I'm coming from a different perspective. And you told me this in our interview. You told me this. You said, Daniel, I'm going to caution you on something. Yeah, I don't know if you remember this or not, but you said you have learned a lot of bad habits.
That was probably true, though, was it?
Oh, it's very true. And you have learned a lot of stuff the wrong way. So it's going to be more difficult for you than a brand new person, because you are going to have to unlearn everything that you've learned. And a lot of that is subconscious. It's not, it's unconsciously looking at things and getting in the trade and still not believing. That's why it takes back testing and journaling and things like this. But you're exactly right about that. I've had to unlearn so much to where it has been frustrating for me, but I know that when I do, this is the best thing that I've ever seen in my life. This is a plan that if you follow it, it can be confusing at first. It's like, reading a whole book with different chapters, and you don't know how it's going to end, and you don't know who the murderer is, and you're trying to you can think that Joe is, or Bob is, or Melissa is, like Clue. You don't really know until the very end, when all the clues come together and the most probable person, you find out who it is. That's kind of the way this is. It's like you're looking at all these clues you're giving us, and it takes a while to work through it. But when you finally start, that clicks. Oh, I see what he's talking about here. And you see it, then you develop that plan and follow the lit cycle. And it's just beautiful. It's a beautiful thing.
I love it. And I think we're doing pretty good of slowly breaking your old habits. Maybe not even bad habits, but old habits. But yeah, we definitely making some really, really good improvements. But as you said, it's just hard at the beginning to get rid of these old behaviors and just getting used to the better ones. But yeah, it's improvements. So saying that, what's the next thing you should wait for in this scenario here?
We should wait for mitigation and another type of confirmation entry, possibly a let coming up.
There we go. And that keeps you patient. And if you don't have that, there's no reason to enter. And if it doesn't happen, it's fine too, but at least you don't make stuff up, because that keeps you away from this habit of making stuff up. Because we talked also about getting the pro or the good thing out of something negative. Let's say you would jump in right here because you're too excited, and then actually moves up. You would be rewarded for doing something negative because you're hitting the trade with FOMO scenarios, and then you're getting rewarded for it. But if you wait patiently, and it plays out from here, who cares? But at least you don't get rewarded for hitting the buy trigger here, because that's, by example, how Alex trades. Alex is so patient, he literally could have the whole day perfectly marked up, but if it's his zone doesn't get hit, just missed by 0.1 pips, he doesn't enter. That's how patient he is. But that's obviously how he only trades, let's say, 1 or 2 times a week, because he has this discipline to wait. Obviously, I'm the opposite of that. I'm jumping in every shit you see because I see the bigger picture, and obviously he does as well. I'm not saying he doesn't. You know what I mean? And I just, for me, it's not like a perfection type of thing. It's an intention type of thing, right? So see, okay, that's fair enough. It fulfilled the intention. I'm jumping in. If it still comes back and goes here to the pip, fine. I rented maybe even again or whatever. But for me, it's just like, I love to catch every shit, and I want to understand every shit. But if you wait for perfection, that's completely 100% fine as well. But then you just need to be fine with it. And then you need to say, okay, foam is not a thing for me. I'm placing my limit orders. Either they get hit or not. Or I want to be in the trade, and I accept having a worse entry, but at least I'm in. But obviously my stop is a little bit bigger, but at least I take the trade. That's fully up to you, and you need to decide what to go for. Right?
Well, it's kind of like, I don't know how many of our students are basketball fans, NBA or international. Are you a basketball fan at all?
Germany, we actually don't have that too much, but I only know the greatest like Kobe and Shaquille and whatnot. But not
okay, so you know those guys. Okay,
yes.
All right, let's use. Do you remember Kareem Abdul-Jabbar?
Yes.
Okay, Kareem Abdul-Jabbar was doing an interview. I just watched this last week, and this is a very good example between you and Alex and Wakar. Okay, and the way that you trade. So Kareem Abdul-Jabbar said, I always wondered why these guys coming into the league before Steph Curry or during Steph Curry, why would they take 3-point shots? Because a 3-point shot is not a high percentage shot. He said, whereas me, he said, I'm close to the basket, and guys my size, they're trying to go outside and shoot way outside the arc. Come inside closer to the basket. It's a much higher percentage shot than the 3-pointers. Then here comes Steph Curry. So I compare Alex and Wakar or Dr. Asim to the guys that are playing inside the paint. They're waiting on the right setup, close to the basket, high percentage shot. What does that mean? That means the ball's going to go in the basket way more times than it won't. All right, let's look at Stephon Curry, though. Here he comes, and he changes the game because now Stephon Curry has put in so much practice, so many shots. He went to practice one day, and out of 100 3-point shots, he hit 92 and 77 in a row.
Wow. Yeah, that's
So-
some sharp shoot accuracy.
Stephon Curry is Reem. Okay,
Wow.
that's the way that's the way I
honored
look
right
at it.
now.
But do you understand what I'm saying? So the personality and the approach of Alex and Dr. Asim fit their personality. It's just like the close shot fit Kareem. Why? Because he was tall. He didn't have the athleticism that Stephon Curry has. He didn't have the quickness to be able to move around outside and get a shot off. So two different players in their own right can be argued one of the greatest players of all time, each one of them based on how they play the game. They still play basketball, but they have a different technique. And I look at you and Alex and Dr. Asim and Wally in those, and Cameron in those aspects. It's like a team, but you play to your strengths on that team. And we've got to find, well, what position suits us? You know,
Absolutely love it. Absolutely. You couldn't.
yeah, is it
explain
Alex or
better.
is it Reem? You know,
That is such a good explanation, such a good example as well. And that's exactly why we're having this great team, because every one of us has this special, like for example, Wally, he has the biggest balls out of all of us. Like he could hold trades, like hundreds of lots for months. I couldn't do that. I don't have the patience for do that. He easily does. He just deletes his app and whatnot to not close this trade, for example.
my goodness.
Like yeah, that's like the power of like having a really bright team and everyone having his special skills in that sense. I love this example, Daniel. Like you have no idea. That's a really good one, and that makes a good team if you think about it. If you have a team of everyone doing the same thing, that probably wouldn't work neither, right? But if you have like a team of everyone doing something different, but at least the same goals, then you're making a very good team.
Absolutely. Absolutely.
Yeah, I love it. So with
That
that being
beautiful.
said, there we go. Patiency, right? So you said it well. What could we wait for? Proper comeback for maybe possible. Oh, what is it?
Let
Mhm.
Mitigation.
So, there we go. So we have a let, and we have the last supply zone being touched, or demand zone, right? So is that a
Correct.
potential trade we could look for?
Absolutely. That'd be a
Yes.
trade where we'd enter, in my
So
opinion.
should we hesitate to pull the trigger here?
No.
So we measure the risk reward if you just want to do so. It's not not the best risk reward in terms of like if you only aim for Asia high to be taken out, but it's better than sitting there and not taking it.
Right. 1 to 5.
There we go. Is it something you could take?
Yes.
100%. And what is the
Target reach.
price? Took you around 15 minutes.
Yes. From 218 to 232, 15 minutes. You're exactly right.
There you go. Not a bad of start of the day, Ryan. And we
No,
didn't
sir.
make anything up. We just followed the overall Litiverse like structure. We even waited for London Open. For Frankfurt Open. We waited for the LAT. We waited for the confluences. Like obviously break of structure is easier to notify. And obviously equal highs from a smart money trap, sometimes even nicer. Plus there's not only equal highs, it's like a quadrillion top, right? And obviously comes back, last supply zone being tapped, being a LAT. Frankfurt Open, fast and Frankfurt trade. Now we're having our inducement, picture, clean shit. So now we can change, or even stay in the 1 minute. Stay in the 1 minute. And now we could ask like, so how do I know if this is not done? right? Why is it not like an inducement stop here? So if you just roll it further, maybe you can give me the answer.
We still have liquidity up above here.
There we go. That's one answer, for example. Right, at this
Yeah,
point,
we
we're
don't
just
have
building.
London open yet, do we?
That's also not a good answer. Very good. See, you're getting warm, I guess, huh?
Okay, you're gonna have to help me out because those are the two that I'd be looking for.
That's pretty good. We just let price action continue to find some more. Okay. So now we took at least this point in here, right?
Mm-hmm. Sorry.
So, okay. So if you just look at this, could it be done or yes or no? Without looking to the left, just for your gut's sake. Could this
Well,
be done
we
or no?
don't have a break of structure yet.
Very good.
So we do have an inducement. We don't have a break of structure, and we don't really have an area to do an extreme limit that I can see.
Very good. Plus, what's the timing?
It's not London yet, right? Is it?
Also, so what is our reason to make a sell here? Nothing, right?
Nothing.
Nothing. So that's why we should not even think about a sell here. Okay, if we just let price action continue. That also keeps you away from doing stuff. Like, why would you do anything? Wait for confirmed stuff and follow in line. The next thing in line in the checklist is London Open.
But yes.
It's not London Open yet, so why even think about doing anything? Don't. Right? So there we go. So, okay. If you just look at this, should we be excited about, oh my God, it's reversal now. Oh my God, I will take this sell here. Oh my God. Should we do that? Yes or no?
Well, we're just getting into London Open, and it depends on if you're going to call this a break of structure yet. I wouldn't. I would say this is your structure point down here.
Mm-hmm. Plus, London Open, what should it do? Should it mitigate best case, or if it's the high, should it be the extreme?
It should mitigate.
No.
Excuse me. It should induce.
There you go. And if London Open hits here, that will 9 out of 10 times will not hold. It will smash through and then induce. Right?
Okay. Yes.
That's another one. Maybe let price action play a little bit more. Okay, stop it. So what now? Should you get all excited and be like, oh my God, I take this. So should you do the yes or no?
Not yet.
Why?
Well, I see an anti-confluence here.
Very good, Daniel. Very good. What's the anti-confluences?
We got a let going in the bullish direction.
Plus?
We've got demand that made a new high.
Entry helper, maybe another one? It's a let plus?
EDM.
Where's the EDM? Mm-hmm. You see it? It never come lower than that, did it?
No. And there's your.
Yeah. So it's a huge anti-confluence as well.
Okay.
That's also the power of price feeds, because I marked this up earlier, and that 100% didn't come low on FXCM, but for your broker feed, it even looks like it actually came a little bit lower. So that's why, again, use not forex.com,
Right.
always stick to FXCM, because little things like that can make a huge difference. If it breaks this or not is a big difference.
Okay.
Right?
Okay.
Because for some people, it could be a break of structure, but for us, if you have the right price data feed, it's not. It's even an anti-confluence EDM plus a let, right?
Correct.
Okay, so that's our two anti-confluences. Plus, what's the time?
It's still before London Open.
There we go. So they're just building another trap for people to make random sells in here, or maybe even in here. Right?
Yes.
So guess what happens? You got smoked. And what's now? What's now?
London Open.
What is the price, huh? What is the price? So London Open induces to the minute, right? And obviously we still don't have like a point to the left. We could place a potential limit order, right? So we just don't. We just don't. If there's not, even if you go back on a 5, like, so where's a place to put a limit order? Like, no, never. Why would you place a random limit order on all this mess? And
Nope.
here it was different because we had this point on London close, which the imbalance is left, but here we don't. But obviously we understand that the cycle here could be done soon, and we're looking for sells, right?
Correct.
There you go. That's exactly it. So we don't making anything up. Now we're understanding, we're going through a Litiverse, understand, oh, London open, awesome. So what do I look for?
Look for Mona Lisa.
Yeah, what would it be?
It would be build up, lit cycle, then a break of structure, mitigation
Okay,
would
so
be
what does this look like for you?
build up.
Equal highs,
Right, yeah.
anti-confluence, there's your inducement, there's your to the minute. So now draw me with a pen the next potential best case scenario.
Go come down and break structure,
Like structure.
mitigate. Excuse me. Mitigate, maybe even get a confluence with entry helper. And
What
then
would be a confluence with the entry helper?
could be a let.
Yeah,
Break.
but that's the best case scenario, right?
Right.
So if you just go on the oh,
If you just go on a price action, you're going to get a break of structure and mitigation.
there you go. Perfect. So let's see what happens. If you're like Magic Daniel from now on,
Okay.
just play a few candles. There you go. So is it something we should be excited about? No. So mark me out the extreme. Or what is here going on? What is now going on?
Break of structure.
There you go. How did we know that? That was unexpected.
No, it wasn't unexpected. It was an inducement, London Open, that should behave the way it just did.
Obviously, I was just joking. Obviously, that is very, very expected, right? So that is
Absolutely.
expected as it can get. But the only question is, what is the next ideal scenario? Where's your limit order waiting if you want to run one?
I'm going to say here.
Why?
This is the area of last imbalance that led to the break.
Mm-hmm.
Now, this is our extreme.
Okay.
You can move it up there if you want.
Mm-hmm.
This, to me, mitigated this. We've got an imbalance from here to here.
Okay.
So that's where I would look maybe to fill this imbalance at the extreme or come back up here with hopefully a confluence from the entry helper. But if not, it's still price action in London Open.
And you would tap into the smart money trap. Right? That's the only thing with these scenarios right after the inducement, right? These usually turn into smart money traps.
Okay.
Right? And then they come back to the extreme. That happens lately the most of the times. When
Okay.
they first tap into the smart money trap. So that's why we always say the first one is usually a smart money trap. Of course, Alex will call it the decisional or the extreme. That's why we always have these two scenarios, right? But for us, it's usually smart money trap plus normal mitigation, right? So
Okay.
just be aware of those limit orders.
Mhm.
Wait for reactions after just to make sure, and then enter just in case this becomes a smart money trap.
Okay.
Everything else, perfect. But he even drew it out the first time very nicely. Is you had this like this, and then you had it like this, right? And not like, let's hold it like this, right? See the difference?
Yes.
Awesome. So let's see what happens. First, the tapping in. See, messing around indicates probably the smart money trap. Tapping in again, and there you go. Stops out smart money traders, taps into the extreme,
Mm-hmm.
Not even like fully yet. Like here's your full extreme, right? Close enough though. Gets people excited, comes even higher, fulfills the
Yep.
proper mitigation. And that's your ideal trade in here,
Beautiful.
right? The only little mistake is don't get too excited in this one. That's
Right.
probably be getting a step further into you getting too excited and not wait properly,
Mm-hmm.
right? The only question is, would you understand this scenario and would you tap into here again? Or would you see, oh shit, I got stopped out here and like screw that shit?
No, I would enter.
On both or on
No, if I got stopped out in the smart money trap and it went to the extreme, I would enter the extreme as well. Because that's the ideal setup.
Okay. Then you just need to be careful of risk management.
Yes.
Because you should not take two losses on one setup, if that makes sense. That player in here with the perfect London inducement trade, that is one setup, right? So it's one setup. You should not take 1% loss, not a 1% here, because then
Okay.
technically you could take in 2% on one setup,
Okay.
right? So if you want to take this one, be aware of risk management. Okay.
Or split your risk.
Yes. So the easiest ones, for example, like I love to take these when they also EDMs, and then they happen a lot of well. So if the first one, which broke the structure here, is also an EDM, then yes, you 100% can take this with full position. If it's just like this, and it's a lot of times like this, be just a little bit careful. Of course, they can work out, but of course, we have a rule set for a reason that this can turn into a smart money trap and they come for the extreme. Okay, that's the only difficulty here.
This was an EDM, right? I mean, we're looking at no, never mind.
It was not an EDM.
It's right here. It's down to low. Okay.
Yes, it's not an EDM. That's the only difficulty. That's the only thing we unfortunately cannot give a proper step-by-step formula, because obviously it differs from time to time. The only thing we can do is entry helper, and the cases here, entry helper does say nothing. Even says it's so far away from the EDMs, or let's just wait a little bit, right?
Yes. Okay.
Then we have our extreme, taps into the extreme, and there we go. So if we switch to the 5-minute, but that's your London Mona Lisa trade here, right? So if you switch to London, so you're just seeing, okay, you're coming from this one, we still have this one left, right? So maybe potentially coming back, but obviously, where's your first target here? Or at least partial target?
This demand that led to the break of these highs.
Yes, very good. But is this something we should look for more buys?
No, that becomes a smart money trap, because it's the smart money. It is the demand that led to the inducement.
Very good. Very good. But if this is already a smart money trap, or we can expect a smart money trap here, is this a potential scenario?
Yes.
There we go. So we just need to have our scenarios in mind and maybe look for potential hatches or whatever after break of structure, after mitigation, whatever. Any scenario we can expect, we can react to. But if we can't expect it, or we don't even understand it, then we cannot react appropriately, right? So that's why we have to rule out the scenarios in your head to understand the bigger picture fulfilling. All right. So we just let price action run. There we go. That's your perfect reaction. Probably at this point, depending on the entry, 1 to 6, something like that, right? And there you go. Magic manipulation minutes. What is going on here?
We are reacting to the smart money trap.
Yes. And when do they do it? Magic manipulation minutes. So it's called manipulation minutes for a reason, because guess what? They try to manipulate price in the wrong direction and fulfill some sort of tasks for themselves, right? But if you check now on the 1 minute, what is so beautiful about this scenario?
We're going to be setting up for another entry approach.
Where is it?
Say This is the push that led to the break of structure.
No, that would be that. First of all, it's not a break of structure. That's a new lower low, right?
Okay.
So a break
Okay.
of structure is
Okay.
here. That's your structure point that led to a new high. Break of structure. You understand the difference?
Yes,
For sure.
I do. Yes, sir.
Very, very important. Okay. So this is smart money trap for sure. And that's
Okay.
very, very dangerous as well. Very, 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 very dangerous. First of all, this entry is so low that you should not enter that low. Like you should enter in these levels in here and not like all the way down here, approaching a smart money trap, right? Because you're approaching a smart money trap and they could technically go higher, right? So that's a no entry for sure, because technically you're coming straight from the supply and demand area, right?
Okay.
So you wait, you react, and maybe my question gets clear if you let price action play a little bit. But that's that. No, just let price action play.
Okay.
That's the thing of being patient, okay?
Mm-hmm.
Okay, so what do you have here?
Have an EDM.
No. In terms of price, always price action first. What do you see in price action?
I see a build up.
Okay, to make your life easier, we're coming from the supply and demand area, which we know is a smart money trap, but we know it can give a reaction, right?
Yes. We have liquidity below it now.
So now they're forming a reaction. Right?
Yes.
So what's going on here? What do they do? So technically, we're just having this reaction point from here, which reacted. They give their false reaction. They come back, mitigate that false reaction, and now they're just moving away from it. Right? So we should not look for any sells here at all, right? Because
Okay.
they're just moving and making a little play, first building the channel, reacting from a supply demand area, leaving imbalances, magic manipulation to the minute, reacting from it, coming back, mitigating it, and then they're moving away from it. The only question is to where do they react from? And we don't know, because we technically don't have any imbalances left. No imbalance, no imbalance, no imbalance. And this one is already mitigated, but this was a smart money trap, right?
Okay.
So we cannot technically immediately look for a point of interest and limit orders. So we need to wait until the whole play is fulfilled.
Okay.
So the right answer to this question is to nothing. You just need to wait patiently and wait for the next possible entry opportunity, which are clean. And don't run into this danger of making up like EDMs or LEDs in these scenarios, okay?
Okay.
So if you just let price action play for a while, right? So it's a mini cycle again. So what is going on here? There's your mini cycle build up. That's your speed into like this all the way supply and demand area, which is your extreme at this point. Now you're getting interested because now you're having a cycle play. You're having a build up, inducement of speed. So guess what? What's our next potential target we could look for? Or like entry approach?
We're going to look for the break of structure and then possible let into mitigation again.
Something like this, right? But you see, we're just waiting until we see the next potential build up, proper speed with inducement into all these areas of supply demand. And then after break of structure, then we can look for mitigation. And then it makes sense again. But not in here and here and here, because that's just in the middle of the process. And again, they're building up new traps, and that's exactly what they're doing here, building up the channel, building up the range, building up the inducement of the speed. And if they give us a break of structure, leaving imbalances in the meantime, that's our trade. You just need to wait for it. Okay. So that's a potential, not even building up equal lows, or is it equal lows?
Mm-hmm.
There we go. So what do we have?
Build up.
Build up.
We have a vector going upward again out of the build up.
Possible.
And this is the last point of mitigation, but this is the extreme.
There we go. So we can have technically the same exact scenario we had earlier.
Yep.
With these pushes, right?
Yes.
Possible decisional level, possible extreme, right?
We've had a break of structure. Mini cycle.
There you go. So same scenario.
Same scenario, yes.
Risky approach, right? That's the risky approach, obviously a little bit higher, right? That's the risky approach, and that's the more safe approach, because technically this can be called as equal highs, and this you still a little imbalance left, and you can look for the extreme, right? Same
Correct.
scenario.
Let me pull this down just a little bit there. Okay. And we've got these equal highs here that we would induce above to grab liquidity.
Exactly. Okay, so now definitely break of structure. Okay, so that's a good example. So would you take this one, yes or no?
No, I would not, because you've got all that trillion touches up there, like you say.
There you go. So what is the perfect scenario after that?
Mitigation into this area, and in my mind, would be an extreme limit order.
Yes, and look at the beautiful. They're showing first the decisional area coming back. Awesome. If that plays out, awesome. They're coming back here. Definitely give you a break even here. But now they're forming also the quadruple top right under the extreme POY. Beautiful stuff, isn't it? So we can definitely expect a limit order here. Do you agree?
I do.
When should it happen? What's the best ideal scenario of when should it happen?
Oh, the next magic manipulation minute time frame.
What is it?
It should be 6:30 Eastern.
Yeah, so we still have some time, right?
Or what is that, 11:30 UK?
Yes, UK it is 11:30 UK. There you go. There's your inducement into the mitigation.
We're in.
You definitely could. But best case, not with a buy. So that could be 100% your limit order. But let's make it more confirmed for you. I don't want you to hit into limit order. So maybe you delete the limit order and wait for what?
We're going to wait for an entry confirmation with our entry helper.
Or if you look at price action first, keep that rule in mind, Daniel. Price action first.
Price action first. We want to go through a cycle again.
No. What is the next? Now we have the cycle completed. We're having equal highs, inducement, mitigation. Now we're looking for entries. What's the next valid confirmed entry?
Break of structure mitigation.
Where's your break of structure? Very good. Where's your mitigation?
I would say the break of structure would be here.
Very good. So you're just waiting for this. And then you find your mitigation zone, because now you don't have any imbalances because you're in this candle. You need to wait for now.
We have to wait and let it present itself.
So let's see if you can wait. Oh, do you have an imbalance now?
Yes, we do.
Where is it? Very good. Is there a break of structure?
Not yet.
Yeah. So what do you do?
Wait.
Very good.
Break
You
of
have a break of
structure.
There we go. Now you can place a limit order. Oh. Oh, wow. What a surprise. Magic Daniel strikes
No,
again.
You're amazing, man.
That doesn't
You
make
have-
sense though. Doesn't make sense though.
It absolutely does. And right to the minute. No,
Almost. Yeah, that's the point of with that one. I will call them tomorrow and say like, man, just do it like 11 minutes later tomorrow, please.
yes. Okay.
Yeah,
let's
but
do
that's 100% a very, very valid sell. But you
Yes.
see, if you look at it, maybe just on hindsight, even it can be a little bit confusing because, like, oh, there's so much going on. But if you pay attention to all these details and just follow the step-by-step guideline, it becomes
Yes.
very clean. There's the
Yes.
imbalance left. First, this was the decisional, 100%, right? Because, okay, you're the imbalance and you're extreme. And when it taps in here, yes, you can argue that you take this decisional level and even it goes lower. Perfect. You put it at break even because you make it a new low low, or arguably like break of structures after this one. So you're putting this position at break even. Okay, perfect. Then it comes back higher, takes you out of break even. It is what it is. You don't cry about it. The next thing that happens here is it actually creates a quadruple top. So you understand that there's your false reaction. You should not be, oh my God, FOMO kicks in. I got to break even. I will jump in again, because that's exactly what they're trying to do. Because then obviously they smoke you stop again, fulfilling their main purpose, which is extreme, smoking all the equal highs, closing the imbalance, tapping in there, and then obviously here's your inducement internally. Perfect. Now you're getting a break of structure. After that, imbalance still left. Here's your limit waiting. Hits magic manipulation minutes almost to the minute, and off you go. The only question is like, where's your target, Daniel?
Oh, my target's going to be below all these lows down here, and potentially below Asia's low.
There you go. So if you want to measure your risk reward ratio, if it's a good trade or not, you can tell me. But you see, the power comes in the patience and just
Yes.
waiting and don't pull the trigger too early. But when it's time to pull the trigger, but it comes all the way from waiting and following the rule set step by step with the timing, break of structure, price first, and then including all the entry helpers, all the confluences, and so on and so forth, right? So what is
1 to
it?
11.
1 to 11. Not bad at all. Not bad at all. That would be you're passing the FTMO right there.
Especially if you're still running this position.
Yeah, that probably, to be fair, would be a break even because of the spread. So if you didn't close it out, I mean, if you close it out here, then always.
If you partialed, you still may have some in it. Yeah.
Yes, I agree with that. We should not close it out here, but maybe take partials. What is it in this scenario? Maybe 1 to 6 or something?
1 to 6, yes.
1 to 6. Okay. So 1 to 6 partial, not bad. So maybe 3% if you close it out at 50%, right? Not even a bad idea because you'd only have so much left for each low, right? So technically more than 50% of the move already played out, and then we can re-enter technically risk-free here because we are 3% up for the day. But this one, most likely 99% sure, spread caught out break even here.
Okay. Gotcha.
Right. But then obviously here, this one, really, really great potential. We should definitely have now the strength to hold that through. And guess what? After they range so many hours and whatnot, at some point there has to be relief.
Mhm.
So the last position usually is the best position because that's just tubes.
Let me write that down. The last position is usually the best position.
Yes, it's obviously the most tricky position because guess what, Daniel? It's literally, if you think about it, and that's, I can guarantee happens to almost every trader. You're looking at the analysis, you're getting it right, whatever, you're executing it, you're getting a break even. Oh fuck. So then the next position happens. Okay, another entry, you get in again, maybe even a stop loss. Oh shit. Then another position. Okay, you entered again. Then maybe another break even. At some point, traders mentally don't execute anymore. That's why the last position always the most powerful one, because nobody's in the trade anymore. Because they all stopped out, break even like 3 times, maybe even getting L's and whatnot. At some point, that nobody executes anymore. And then the liquidity is gone, and then they can just chup it easily. And that's just the will breaker method. And they do it all the time. They do it all the time. They come back to you, get your break. Think about it. People are getting it here, the inducement right, even seeing the break of structure, awesome. And they're getting all stopped out of break even here. Maybe they're getting in here again. Guess what? Getting stopped out even in the worst case. And then always last position possible, and then they can chup. But they're getting up so many times they get stopped out. It's really ridiculous. Or even at least break evens. So yeah. Well, let's see how that worked out. Not bad at all. Not bad at all. There we go.
Choo choo.
So there's only one left, which is liquidity zones and potential re-entries to ending the day perfectly, right? So first we can look for hatches, because guess what? Now we're having an inducement low, right? Asia low, and maybe even something to the left, right? Well, not even yet. So we still have room to the downside, right? So that's the next thing. Technically, we obviously have room to the downside to at least lower lows than here. So that's your first target. That's your second target, because of course you're looking for the next liquidity sweep, which is down here, right? So maybe you close another 50% here, and the full target is down here, right?
Absolutely.
And then what's the next thing in line? Obviously the timings. What's the next timing zones we have?
London. Let's see. Where are we at now? New York trap.
Awesome.
Or New York open.
New York open and the New York trap, right?
Mm-hmm.
There you go. So we're just marking up New York open for the next orientation.
Okay, so I would be looking for a continuation, because the way the market is going, it's bearish. So maybe a reaction off of the demand area down here into a possible sell area, either here. Let's go to a minute. Or here.
Okay. Or if you zoom more out, let's actually zoom more out.
5 minute or 1?
5 minute. Okay, zoom out to see like more days, not only 2. Oh, you even marked out something anyways. Okay, so definitely we should take out this point. That's almost for certain.
Yep.
Okay, because we think about it. They spent all day long, all London session to build up this inducement here. Came back 3 times, finally smoked Asia session. They will not reverse here. They will not reverse here. They will come for this liquidity and do what, Daniel? Do what?
They're going to
After
induce
the
it.
inducement, there is what? This is the inducement here, low. What's after the inducement?
Normally, mitigation.
Yes,
After-
where's the mitigation? To the left.
Yeah.
Where is it?
I would say the last mitigation point that I can visibly see is right here.
There you go. So we have this zone in here for possible mitigations. Right? The last spot of imbalance is here or even here. Right? So we take this zone. Obviously, we don't want to put a limit here. We just understand what's going on here.
And that's Asia high too.
Yeah, Asia high, Asia mid. So we have these 2 zones, right? So we can mark out this zone, and maybe you adjust this gray box to here. There you go. So that we just, for understanding purposes, again, you're not in the stage to put limit orders here. You just know that this is a valid supply demand area, and we definitely can expect price to react there if what? Timing aligns plus structure aligns. Right?
Correct.
There you go. So what do we do at this stage?
We wait.
There you go. Correct answer. So let's see. We're having our sell position. Awesome. We partial out. Oh, and there we go. Final target hit. We're out of the position maybe, and we're just waiting for proper demand areas to be reached.
Mm.
Okay. What a surprise. All right, but we don't get too excited. We're waiting for
New York Open.
build-ups.
We're not in New York Open yet. We're still waiting.
Can wait. We do nothing at this stage. There we go. Taps even deeper into it. We don't get too excited. We do nothing. We just wait. Can even look at the 1 minute. What do we see on the entry helper side?
We said possible let into mitigation after a move up, but we really do not have a break of structure here. This would be a more risky entry.
Yeah, so that is completely not break of structure friendly because we just have a huge channel, and that is way too equal-lowy.
Right. So the only thing that I could say about an entry like this would be that we've got all this build up and you're basically entering off the reaction of the higher time frame demand zone. And so this is very difficult for me to understand where to get in this trade because, like you said, there's not a clear point here for us to break structure unless this becomes our structure point.
Yes, so guess what? We're just waiting for a clean break of structures. There's no good in forcing a trade. And as you said, if it's not clean, why would you even think about executing a trade? You 100% will make a mistake if it's not clean. And the only thing we have for confluence at this stage is New York Open price. And we are on the supply and demand area, which was not even clean too much. And that's it. So we will not execute a market and will not risk our money based on those two factors. We need way more than that, right?
Correct.
So now we understand just, okay, we are in the supply demand area. We're waiting for a clean break of structure. Maybe waiting for a build-up. Maybe this is already the build-up with the equal lows. Maybe this is the fake out. Maybe you're getting an inducement. Maybe you're getting a break of structure then. And maybe we can take a mitigation here. Maybe that's a let. Maybe that's also some other confluence. And then it makes sense again, right?
One thing that you do that I forget to do, and maybe this will help someone. A buddy of mine a long time ago, we were trading together. He said he has had to learn to look to the right of the chart instead of the left. Now, we look to the left for past history, but what you're showing me is we must look to the right of the chart and anticipate scenarios that could possibly play out so that we're prepared.
Yes, that's very, very true. It's not like that's the difference between predicting price or understanding what could happen next. So obviously we don't predict. Like obviously I could say like now, oh, I would predict that there's an inducement here, and then I predict I will take a buy in here because I know the inducement. No, it's the understanding of what could happen and not what you love to see happen, right? And that's the only difference. If you can predict it out, then you can react onto it. But you should not predict it and then trade on your prediction. You trade on your reaction of your prediction, if that makes sense. But first you understand your possibilities that could happen with the daily cycles, the timings, the build-ups, all that stuff. And then you line out what you want to see, multiple scenarios. And if one of those happen, then awesome. Then you can pull the trigger with confidence because that's even something you predicted before, and then you react on what price is showing you. And that's the only difference. Right? So at this point, there's nothing. We do nothing.
Right.
But we understand, okay, best case scenario, building equal lows. Oh, even does it. Oh, what is the price? So there we have our equal lows. So guess what? What's the next best scenario?
Inducement.
There we go. So we can even understand that this might be a possibility. So even we have equal lows. Oh my God, what a surprise. Here's your vector candle. Happens in our timing window. Even is type of a lat scenario. So the extreme becoming the lat scenario. Obviously, we don't put a random execution here.
Right.
but we at least can understand the price can reverse in these areas soon. But obviously that's some new level stuff we will probably not dig into because that will confuse the shit out of people. But obviously Josh will hear and write me a DM and spam me all day long. But that's something we maybe can dig into like way later, right? When the inducement ends and whatnot. But at this point, we just can understand we are on a valid supply demand area. We have our valid buildup. We have our timing. We're entering the inducement phase with some sort of entry out of confluences, but that's not enough. We want break of structure and then potential mitigation. And then we can look for potential trade idea. Okay?
Absolutely.
But you need to understand at this stage that yes, a reversal can, or even pullback can happen, right? That's the only thing you need to understand. The rest is work and understanding and practice. Okay? So like induce is even lower. Who gives a shit, right? At this stage. Awesome. So
Break of structure.
There's your break of structure. That's all we look for. We just need to mark out for us visually the equal lows and the break of structure. Yeah, and as you marked it here, decisional, extreme. Same shit all over again, is it? Is it, Daniel? It's the same shit all over again.
It is.
There we go. Maybe even also the equal low, so you can see that this is an inducement off of an inside and supply demand area. There you go. Perfect. Right.
Build up. Vector.
There you go. There's your vector.
Break of structure.
That's your decisional and you have your extreme. It just stays a little bit short of the decisional. Right, but can we understand what was going on here?
Absolutely.
Yes, we can. That's your let. Obviously, nothing we could take or should take of here. Right? But that's technically your first let after it was broken down. The inducement came here of the let. That's still like a supply demand area. That's your buildup in here. That's your liquidity. That's your imbalances. Right? That's your let. That's your let. When does it happen?
New York trap.
Trap time. There you go. So at least we have space until next liquidity zone, which you already marked up. So you see how we're connecting the dots.
Yes.
And we don't make any shit up. If we're doing the opposite, we're following our step-by-step guideline. Right? And we don't force any trade. For example, if you had this one, decisional, extreme, maybe 0.5 here, 0.5 here, or even this one not at all, and you're waiting for lets or other confluences if you execute this trade, and your limit sits in here or whatever. Right? Same thing as we did on the upside. Completely your scenario, but personally, like this, if it's a let 100%, or if it's no mitigation, just again have this possibility in mind. Smart money trap possible comes back to the extreme. Always the case. That's why we have the entry helper for scenarios like that to give you additional help. But in this sense, it missed anyway. So okay, fine enough. Now we have entry helper confluences, build up, imbalance, taps into it.
I almost took that trade right there.
There you go. Plus timing, right? Plus timing as well.
Yes. Yes.
But then the only thing we need to understand, the next daily, or not even daily, but logical target, we're having a US bank holiday. Liquidity is low. So should we expect like a woo?
No.
Of course not. We're expecting like a little thing and a potential reaction of that. So what's our next liquidity zones? Asia mid. Where's our next inducement and imbalance zone?
Well, these highs.
Right here. So if you mark out this one as well. There you go. And out of a sudden, we're having a Asia midline and these two scenarios. And guess what? we're playing this one, which makes the most sense and is most confirmed. If they just smoke through it and right here, I would be very careful of it. But let's guess what? If it's like a build up into an inducement plus an EDM or something, fuck yes, I take it.
Okay.
But we at least understand this Asia low, that's Asia mid. That's imbalance, that's imbalance. 2 liquidity zones and we just wait. But for now, we just in this buy. So if you want to mark up this one with the let, typical order flow, right? There you go. That's some position. Makes sense, right? We just taking the order flow based off on let plus almost to the minute. Of course, like a little bit more advanced setup, but even you said, if you almost took in, very good. Just need to mark up the little build up in here. Vector candle, imbalance, order flow, let, timing. Right? That's all the confluences we had. Plus, we're playing overall on a bigger picture inducement of a demand area. Right? You see how we're making everything sense into it?
Absolutely.
And we're coming off this huge sell trend. They build up all day long. And even this huge sell trends in here.
Yes.
Right? Awesome. So only thing we do next is we wait until one of these zones get hit.
It's 1 to 11.
Yeah, not too bad at all, is it?
No, not at all.
Yeah. So we're just switching to the 5. See if that makes sense as well. Yes, that's definitely a juicy supply area of the day of the Asia low, right? So what do we see already, Daniel? What is it
Target.
confirmed? Is it confirmed with something else? Maybe entry helper?
EDM.
It is. And huge ass EDM.
Oh, excuse me. Yep.
It is a huge ass EDM of the Asian low. Obviously nothing too crazy, but something we definitely can take. You just need to refine it maybe to the 1 minute. You already did. So can we take this sell in here, Daniel? Yes or no?
We can put a extreme limit there, but because we've got the EDM, but you might want to wait for confirmation on
100%.
On
So
the lower
just
time
for
frame.
argument's sake, yes, we could take this trade. Obviously, same scenario as always. We can wait for break of structures. Whatever, maybe here, maybe here. And then here, right?
Mm-hmm.
That's it. That's all you need to do. So you just wait. If you don't like the extreme order, completely fine. So let's wait. Okay. Okay, makes even new higher highs. So that's your structure point. Right?
Mm-hmm.
Awesome. Oh, okay. Break of structure. Okay, so what's the next thing we could look for? If we look at the entry helper again.
We could get a possible EDM.
No.
Sorry.
Let, there we go. Because why a let and not a mitigation? Because there's no imbalance.
Right.
So we're using our entry helper. Right?
Mm-hmm.
So, okay. What's going on here?
Got a let.
Oh, that was unexpected. you see how that works? And we just
Absolutely.
can execute it here. I mean, that's a really big stop to prefer. But what's our potential? Maybe here, these areas. So maybe it's a 1, 2, 3, depending of how we ended up the day. If it's greater than 1, 2, 3, we technically could take it. Or we just can wait a little bit. Maybe it gives us a better entry. or we find with a 1 to 3, 1 to 4, 1 to 5. I don't even know. But
Down to-
obviously the bank holiday, right?
1 to
Just make-
5 back to demand.
Something like that would definitely make sense,
Okay.
right? But you see, it's the same thing. We don't make shit up. We're just following the guideline. We're trading a 5-minute EDM of a valid zone and trading the M1 confirmed after break of structure, let entry. And as you said, we're aiming for the next supply demand for 1 to 5. That's it. That's it, Daniel. Is it too hard?
No, and a little mini cycle here.
Yeah. And see, out of a sudden, you can even detect like all these little details, right? It's all there. Oh, there you go. There you go.
1 to 5.
Almost, at least.
Almost within. Let's see how far we got. 1 to 4.8.
Yeah. It's a good trade. But should we? Yeah, there we go.
There we go.
And that's it. That's the day. Now it's
Wow.
London close, so there's
Wow.
nothing to do because bank holiday, and that's it, Daniel. You see? But as you see, it's a step-by-step guideline. It's just
Absolutely.
sometimes, of course, not as pretty as a Mona Lisa, but it's at least a picture we can look at and admire and take advantage of. Right? Because if you go to a museum, not every picture is a Mona Lisa. Of course, everyone wants the Mona Lisa, but I'm fine with a Van Gogh picture or whatever. From time to time.
Absolutely. Beautiful, beautiful. This is a work of art within itself.
There we go. And if you want, you can actually start with EU. I think you took some trades as well.
Yeah, I thought about taking this trade, right? Well, this is the 15-minute POI, and once price enter it, right? With all the liquidity built up to the upside, they hit this POI, and within this POI, there's a 5-minute POI, right? And that's exactly where price tapped into. And then I saw this this move down. I saw this run of like small liquidity up here, but they pushed to break internal structure, but we still have this liquidity built up to the upside. So as soon as they have internal BOS and with all the confirmation, the bigger picture is just intersection up and then down, right? And it's playing out just like that. So and then we move back up correctively, right? And then that's just something that I like, is build up into my mitigation, right?
Very good.
And then I would like to take this trade down, but GU is just more clear, so that's why I didn't take this one. Right?
Very true. EU was definitely nicer for the mitigation to the left, but GU was nice overall. I completely agree. But maybe we just dig into the 5-minute first, and you can just give an overall 5-minute view, so we see what's going on there. And could you do me a favor and switch quick to the German side here? It was just out of the head. I think Asia looked a little bit different. German, where is it? There we go. Yes. That's
it's because I switched it back to the time that.
Okay,
I'm
and here's a little trick again. You see this little gap in here, which is the day open technically. Right, and again, we want Asia to start here, and that should align with 11 o'clock. Okay. There we go. Okay. That looks better.
I will start using the session box like this for now. I've been
Awesome.
doing Tokyo, so.
Okay, but make sure to always line up your Asia box, because that is a
Yep.
huge difference. Because if it's just adjusting, you're looking for the wrong things, right?
Mhm.
And also I will show you why it's so important. So if you just put your replay mode in here,
Yep.
there you go. So maybe you give me an overall break if you zoom out a little bit, maybe even the previous day of what we have, what we're looking for, what we expect, just in a
Mhm.
nutshell.
Yep. So I guess my top-down analysis is like our main push is down here, right? So overall, my bias is still up, but trading into a complex pullback.
Mhm.
So as I see that, price induced high here, and then they break internal structure, but they also broke this this level just by like a little bit, right? And then they push even down more, and then they broke structure now. So my bias was like, okay, we either knowing that I'm trading into a complex pullback today in Asia session, my thought process was build liquidity to the upside
Mhm.
and look for a confirmation and comes down, right?
Mm.
So that
Very good thought process. I like that.
yeah. So whatever happened in Asia session, I already have that planned out, right? So and they did exactly that, right? So
Okay, yeah, just to confirm that, I had this
Mhm.
very similar. So I had just obviously this very visible equal highs in here, right? And of course, this is the some
Mhm.
sort of inducement. And technically, we're having this nice break of structures here, right? But obviously, as you said, they come back even in Asia session here and induce it one more time to the upside, right? Obviously, we don't like that, or we don't
Mhm.
expect that to be the case. But obviously, we're having the same channel type of thing, inducement creating the actual high in here right now. And then,
Mhm.
of course, we don't need an inducement in London Open again here, because the inducement just happened right when Asia closed, right? So, of course, we can look for sells in here. And of course, also, they grabbed so much liquidity in that sense. There's no sellers at all in this point. So that's why they easily can channel down like they want to, right? And perfectly creating this channel thing. So the next thing, as you said, we're of course expecting some sort of ranging scenarios, inducement high, and then potential coming lower to, as you marked up these areas for decisionals, right? Perfect.
Yep.
Okay, so if we analyze now the Asia session for this day, what do you see?
So okay. So I see that we of course is like built down, and then we took these liquidity, and then from here we start doing this build up, right? So not a clean trend line, but you can just tell that it's a build up. Price,
Mhm.
it's kind of like price doing internal structure to the upside, higher, low. So well, I expect for that to get taken out. And then this is a win. So as price exit out of the Asia box, I personally don't like to trade the Asian box. So I usually wait for the cup trade, unless it's a very, very clean inside the Asian box, right? It's kind of like you trade just to grab the, you trade the inducement, right? At least that's how I've been doing it, trading the inducement.
Yes, and if you just look at this scenario right here, obviously there's nothing we could trade, but just for understanding purposes. So as you marked up, we're having our next only possible imbalance zone here, but obviously our liquidity zones here with the low and the midline, right?
Yep.
But that's technically the next imbalance zone, which technically is not a decisional level. The only thing this was, and that's something you also need to put on your chart, other than you remember it, but always is London close time, right? Because that's also a liquidity zone. And if you check on the timing down here, it was London close time to the absolute minute, which creates also this last imbalances, right? So we know there's no imbalances here, no imbalances at all. The next liquidity time zone technically is London close, which was here, plus there was a imbalance zone exactly over these equal highs of Asia highs now as well, which could be a potential juicy mitigation target as well, right? But now, as we hear, what time is that?
This is German time, so right here it's about 7:55.
Yes. So what time is that?
Oh, should I switch it back to my time?
Whatever you want. But in terms of like session times, what happens right here?
Oh, this is Frankfurt, right?
Exactly. It's Frankfurt
Yeah.
Open. So the question
Yeah.
is, if you just use your mental checklist, do we have an inducement of Asia high or low yet?
No.
No. So what is a Frankfurt doing at this point right here?
They're just taking out these equal out, right? And then hitting the Asia midline.
Exactly. And plus building a little challenge to the downside, right? And as you said, perfectly reacting from the midline in here. There's nothing like in terms of like imbalance zones or supply demand we could take for a possible entry. That's fine though. We just need to understand what the bigger picture play is. As you said, taking out the equal lows, building the channel, Frankfurt opens, people obviously selling, Asia midline. So now they're preparing for the inducement, right? So just we understand, okay, there could be a potential push up, and we could definitely go into these zones when?
Oh, in London, either in Frankfurt or in London, we should be in.
Yes, what would be our, yes, there we go. Our perfect time would be London Open, right? And of course, if we tap in London Open here, as you marked out, what will be our ideal scenario?
Is getting the inducement into mitigation.
Exactly. And if we take it a step further with like maybe extreme orders, like limit orders, how would we do that?
For limit order, I usually like to wait, right?
Perfect. Perfectly fine. That's 100% fine.
Yeah.
Just for understanding purposes, could you refine this POI for me?
Yes. Yes. Yep. Let me go into right here. Just that was lacking here. Right. This.
There we go. That would be the 5-minute POI, right? Would you
Right,
refer if you would refine it for the 1 minute, just for understanding purposes? How would you do it?
For 1 minute, and then look for an imbalance IFC. Just grab the magnet. For me, it'll probably this one right here. But I usually like to cover the high too, right? Just to be on the safe side. But this is the 1 minute IFC.
Okay, so you would use this candle in here and not the top in here.
Oh no, I will. I'll cover this whole high, right?
So okay.
Yeah.
Okay,
like
fair enough. That's fair enough.
Yeah.
That's definitely the safe way to do it.
Yeah.
Just so if you want to refine even more, technically I would use this high in here. But of course, if you want to use this one, that's even safer, right?
Yeah, and it's just the way that I was taught through WWA is, if the candle is if the candle is like 1 pip or 1.5 pip, I want to look for something more, give it a little bit more room.
Yes.
To be on a safe side.
Plus the spread as well, obviously.
Exactly. Yeah.
There we go. Love it. Yeah, but that's definitely a very good refinement. I agree with that one. Okay, perfect. So if you go back to the 5.
Yep.
Okay, so what do we expect or what do we do is the question.
As for me, I will, what I would like to do is I usually, if I anticipate, right, for price to come up here, I will look for either a confirmation down here, or I'll look for order flow to the upside there with EDM. That's the only, with EDM confirmation, I will only take it. If not, then I'll let it go.
Very good. I love it. So that's the correct answer. So even if you understand, okay, it's Asia midline, it's Frankfurt Open, whatever, equal lows, inducement, perfect. We don't care. We don't randomly execute an order here. As you said, we wait for confirmation. So maybe internal break of structures here. If it comes back, then we can take it and then we're trading into the inducement, right? That's possible. Or as you said, maybe possible EDMs in here, whatever, and then trading into the inducement. Perfect. Okay. This and this point of price, we don't do anything, right?
Yeah, just wait.
Awesome.
So as price goes on and on, I remember there's nothing. Price just shoot to the moon, right? So nothing for us to do. And then of course they start doing a pullback into Asia high again.
Exactly. They love to do that.
Yeah. So
Not touched yet though.
So I was waiting for like.
There we go. Now it touched.
Yep. I like the 1 minute for some reason. I could see it better, right? For some reason.
Not sure.
So yeah. So as we break to the Asia high and start building down, I saw that they induced this, but there's really nothing. They just leave equal high, right? So I was like, there's just no way for this to go down, and we have not tapped into a significant POI.
Very good. Also, again, it's very important to understand exactly what you just said. The equal highs plus the actually tapping of the Asia high, right? And obviously that should go high at this point. Plus, we still have the imbalances on the high side, right, which never got mitigated. So of course, there's no reason for us to look for any sells in this scenario right here. If anything, buy is a better thing to do. Right, there we go. Enters into a zone. Lovely, right? So that's our refined zone already. If you're limit order guy, which you said you're not, but just for argument's sake, what's the scenario here?
Oh, so as price comes into this area, nothing yet, right? I want to see a eternal break of structure, which is too far down, or I want to see price move 2 to 3 times of the IFC for me to, like a reaction, and come back and now take the trade.
Love it. Okay, but technically for the overview, if you can just a bit on the overview of the bigger picture play, is this cycle done to the upside? Yes or no?
Yes, as in it tap into the POI. Yes.
Okay, can you walk me from here to here, all the confluences we have, and why this is technically done, and we can look for sells?
Okay, so as price build up, right? As price build up, and then we got this inducement. Price built down. We actually take it out. Build up again. We actually
what happens
built
here?
Down again. They tap into, but they almost tap into the Asia midline, right?
And when do they do it?
In Frankfurt.
There we go.
So I was thinking of the Frankfurt Fast and Furious. I don't know.
There you go. Yeah, you have some fancy names.
So I was like, okay, it's probably gonna fly up and then shoot up, right? So I was like, okay, great, So I will wait for EDM or something, which they didn't give anything. So they just do this build up again and then shoot right back into our point of interest. And then from here, I'm like, okay, we built so much liquidity. We have Asia low, but we also have these liquidity, right, that has not been taken out. We we broke out of Asia high, so I'm looking for a confirmation to take the trade back to the Asia low.
Perfect.
Okay.
Yes, definitely a good one. So what's the next thing we do if you don't have a limit order already triggered? What is the next thing we do, and what's the next thing we wait for?
Yep. So as price shows here, I wait for one more push, right? One more push to grab to induce the high one more time, or there's 2 scenarios for me as I sit here. Well, the first one is either price comes down, right? Give a reaction, or like what they show here, induce the high one more time, break an internal structure, and then come back up.
Love it.
Something like
yes.
That. Yeah.
So we have 2 scenarios. So first thing, as you mentioned, is a break of structure, which is, again, this push led to new higher high. Obviously, that would be an internal break of structure, as you said, right? Or what's the next thing in terms of maybe entry helper?
Right. So it'll come down and then internal break of structure, come back up. I would like to see either a let, if I'm saying it correctly,
yes.
A let. And then with a let, it's like it's like a freaking game changer.
Yeah, it helps a lot. It makes things very, very easy if price
Yeah.
action a little bit confusing, plus the mitigations, lots of fucking powerful, plus the timing,
Yeah.
plus you coming off of supply demand area, not a decisional, just a supply demand area of the day, of London close. So this was the London close liquidity time with the imbalance left, right? Plus the timing perfectly. We have London session, right? Open time, we coming off the bounce pretty much of Asia high, right? We're having Frank and Francturious trades, right? We're entering our demand supply zone, not a build up. Finally, internal break of structures, almost at least, right? And if then we could technically trade the extreme mitigation, right?
Absolutely.
Awesome. So back to you. There we go. There's your internal break of structure, right?
Yep. Internal break of structure.
Can you mark it up for me, please?
Yeah. Let me grab my start. Let me just minimize this. Here. I usually like to go here.
There we go.
Yeah, something like that. Doesn't need to look pretty.
So, fair enough. Looks good.
So, yep, internal break of structure, and then now we had a perfect IFC above here, right?
Yes.
So it's like okay, So it's like you wait for price to, and this is even better that price move away like this to me at least, because we have not. There is no what is it? No. We'll expect for efficiency of the pullback, right, to go down, because we have not tapped into any demand yet. So that makes it like very valid.
Yes. Plus that's another confluence. Exactly.
And then as price comes back up.
Okay. Can you mark me up the extreme imbalance?
Yep.
There we go.
That would be the 1 minute extreme. And we wait for price to come back up. And then there.
Voila.
And then with black.
There we go. There you have the perfect mitigation of a valid supply demand area of the break of structure. Now filling the imbalance of the extreme, if you call it IFC, whatever supply demand area, plus the LED timing is also very juicy. Cycle is completely anyway, so that's a perfect juicy entry opportunity. You agree?
Yeah, and I really like this pullback, right? Because it's not it's a buildup, right? That's why I always look for buildup. Slowly going up, so they have something they can just grab. So I really like
lovely channel. I 100% agree. Even they show the channel, as you said, perfectly. Plus the whole uptrend before that, right? The whole thing is just a channel, and then they're building a channel in the channel. Obviously, everyone looking for continuation higher. There we go. Perfect stuff.
Absolutely. Then they go down.
Yeah, that's the only challenge, that they come a little bit back, but obviously that's completely fine.
Yeah.
And now we just made a new low, so now we can technically pull that position to break even. If you're not liking risk, if you wait for more confirmed ones, wait for this break of structure, right? That's the better place to pull break even. But at this stage, it should already be like a 1-4 or something. So that's definitely not bad.
And sometimes I just be mindful when I move stop loss to break even, due to the fact that there is an IFC here and price created a lower low. Sometimes they do come back, right? And then hit this IFC and then stop the other break even and they go down again.
Yes,
so
that can happen too. Very good.
Yeah. So I pick and choose. Pick and choose which one you want. So and then perfect, So now that they create like some sort of relatively equal low, it's even better now. And then they took it. Right.
Yes. So what is the push that this is the break of structure point, right? This is the valid break of structure point in here. And what's the push that led to it?
This push. Let me mark. I'll just mark it right this one. Oh, this one.
Exactly. So as you marked it up already, that's definitely a point we look for possible mitigations later, right?
Yep. Absolutely. So
I think that's even the trade you took, right? Is it?
Yeah, it is. It's the trade I took. And then price comes down, right? And then they set these equal low, and I was like, oh shit, this is come back up, come back up. And they did, right? They did.
Yes, what a surprise, right? What a surprise.
It's like you could read the book now, you know. So I took this trade here, and stop loss goes above it. Well, of course, I add in the spread, right, just to be on the safe side.
Yes, that's a very good trade, though.
Yeah, and with EDM, you know, of course, it extended a little bit, but it is what it is, you know. So like this, so I got my EDM, it extended a little bit, you know, but I'm like, first and foremost is, yes, I like it, but they also leave equal high, right? So I was like, if they do induce it, then I'll take it again then, right? So as price goes,
it's very juicy until this point, right?
Yep, exactly.
But then this one makes it not so nice again, because they come even up again and building like these triple top type of things, which is not nice. Yeah, that was confusing me a little bit. Not confusing me, but I didn't like it at all, because like that's not good. If the EDM becomes equal highs, that just means, oh shit, they come back, probably induce the equal highs, and then stop your EDM at break even, best case, right?
And I hate it how once I enter the trade and price plays around and it comes in double equal high, it's like, oh shit.
Yes, that's very true.
You know? So as soon as I saw this, I'm like, okay, it is what it is, you know. And then I was able to get a break even on this one. And then of course later on, price tapped into this, and I was like, man, this is too good. This got to be smart money trap.
Yeah, that's some very obvious smart money trap.
Yeah. So and then I waited and so now they tap into this POI, right? And then right, I think was it up here? Yeah. So now that they tap into this POI, time was this. Let me move this back to Chicago. Okay, it's about 4, and now right around this time I don't do anything, you know, because there's really nothing to do, just waiting for like order flow to the downside.
Yes, just to maybe the ping ponging type of style, right? If you know you have equal highs now here, right? Obviously this is a valid POI for sure, but the only scary part is right above that is still huge imbalances, right? So I definitely would not be interested in, again, to sell it in here right away, right? Because we're just looking for an inducement of this point. What we have though right now, as you said, I think this is the day open price or something, which also landed with this POI, right? Plus, as you marked it up here, we're having internal breakout structures now to the opposite side, building obviously the imbalances here, right? So if they come back in here, you technically could place the ping pong hedge trade if you're like not sure about this EDM. Here's your hedge trade for buys, right? Or at least you make some money and not like getting a break even and walk away with a break even and nothing, right?
Exactly. Absolutely.
Oh, okay. Yeah, that would be actually yes.
If I were to take this trade, of course my stop loss would go down at the lowest point. That's just so.
Yes, and a quick tip for hedging. Like, I'm not sure if you hedge or not.
I am starting to learn about hedging. Yes.
Okay, so what I love to do at the beginning when I learn to hedge is, let's say I opened this position here with a limit EDM, or even market execution EDM, and stop goes above here, right? If you're placing a hedge trade here, and the easiest thing to do, I mean, technically that's not hedging at that way, but if you open it with the same exact lot size as you did in here, and you just put immediately not your stop loss at break even this, but one risk in profit, then this trade technically is a break even trade already. The worst case is if you lose it, right? If let's say this stops you out, your stop loss is already one in profit, and if it comes back all the way, right? Worst case is you lose nothing because you're making money with this sell here, but you lost money with this buy, if that makes sense.
Yeah. Yep. Your sell covers for your buy.
Yes. So just if you want to learn hedging, that's how you do it.
Okay. Yeah. You know, for this one, I didn't want the pullback because I just want them to fly up, right? So if I just see the pullback here, I just wanted to fly up, tap into this, and go down again. But I guess they didn't want to do that. So.
No, they definitely will take out the equal highs here. That's for sure.
Yeah. So I was like, now they do this. I was like, oh, no. So
yeah. So the only question is like, until when are they ready for like stopping that? Because that's your equal highs. That's technically your valid POI. But again, do they stop here and be still in the supply demand area? You don't know, and you still have this up here. So I would wait for additional confluences. Plus, you technically have your hedge opportunity here coming from supply demand after break of structure, right? Filling the imbalance. Awesome, right? So we just target now the equal highs, and that's that one, right? Or best case, if you really understanding that, you're closing your sell here, whatever, and opening your buy here. But I would not recommend that, because again, let's say this sell is valid and it goes down, then again, you're missing your overall direction. 100% is short, 100%, right? So technically, if you ride with that one, it would not be good if you just close it with a 1, 2, whatever, 5 or whatever it is.
Yeah, I actually took this trade. I remember, right? This one right here, because as price comes, right, and it starts playing around, right. But as soon as I see this, where they broke these internal structure, and they come back and we still have this imbalance here, I was like, I'm still in the trade. So I took the trade, and of course I aimed for this POI, right. I didn't want to aim down here. Originally, I wanted to aim down here, but just look how price are creating like this. They're creating a channel just to get grabbed. So as soon as I saw this, I was like, nope, I took profits.
Okay, that's fair enough. I mean, that's definitely not the best, and I hope at least you put your stop above here then.
Yes.
Okay, then it's fine. But you should not put your stop above here. Even if technically it worked, but it's now you need to put it above the POI.
Yeah, because spreads will take you out. So
yes, exactly.
And then so on, and they go up. They tap into it again, and then I was like, they tap into this POI, but we still have equal higher here. So preferably, I want this level to get induced, and then give me a confirmation so I can trade to the downside. Right?
Yes, but that's definitely not a trade you should take ever. This one.
Okay.
This one isn't. This is a no, because you're trading into POI, which is a triple top at this stage. Right? So this is a no. Never trade. If anything, you wait for the inducement here until this is grabbed, and then you wait for re-entries here. Then you can do it. But never ever place like a pending order on like a triple top scenario. Never.
Yeah. It's just So
see, because there's your inducement. And now if you check also like the timing to understand the logic behind it, what's the next timing? Like after London Open, what's the next 2 timings you look for?
The magic manipulation minute.
Exactly. So what is it?
5:30.
Yes. So what is the time right now?
Right now it's 5:23.
Okay. Close enough. So that's the inducement will happen at magic manipulation minutes. And if that creates an imbalance, which it does, we're trading the inducement. And if that happens at magic manipulation minutes, like the mitigation, that's your inducement trade off the equal highs, still technically from this supply demand area, even if it took it up by 1 pip, you bring the overall picture, like short is the cycle play here. Timing confirms. You have your liquidity grab, you have your channel buildup, you have your mini cycle with the tapping inducement into the supply demand area, mini break of structure, filling the imbalance here, channel building, another inducement of equal highs, reaction, mitigation area, imbalance, timing, perfect, right? Overall picture is sell. Then it makes sense, right? There you go. That's your mitigation right here of the inducement. And if you check the time, it's
2
almost to the minute.
Yeah.
Almost to the minute. So that's close enough. And coming from this imbalance play of the IFC of the inducement, right? And that's technically your re-entry if you took this trade.
right? And you got out here, even a break even, right? Now you're having, again, your inducement, mitigation, reaction to the minute, and then your overall direction can play out. Make sense?
Absolutely. Yep. Yeah, this one is beautiful.
Yeah, it is definitely good. It's a little bit tricky because it's like very squished together in all this little build up in here, or whatever you want to call it. But definitely the intentions behind this is pretty clear. That obviously the Mona Lisa scenario would be the inducement a little bit higher into this POI, right?
Yes.
And then obviously break of structure, and then into mitigation, and then lower. That would be the Mona Lisa play. But obviously it didn't happen. It just happened equal highs, or even triple tops in here, inducement of that, a little reaction, imbalances in the meantime, magic manipulation minutes almost to the minute gives the mitigation, and you're trading away from the inducement into new lows, right?
Yep.
Lovely. Makes sense?
Absolutely.
Okay. So what's the next thing we look for?
So now that price took these liquidity out, right, and it hit the Asian midline, when price is moving this impulse, I usually wait, right, see if we can get a correction to the upside again, and look for a short, like a continuation. And this is about...
Okay, just for clarification, so this is obviously the most easy small money trap ever, right?
Yes.
So we can definitely mock it out as a small money trap. Plus, again, the supply turns into demand type of scenarios for the later on can become definitely interesting, right? So if you switch to the 5, right? So we had our Fast and Frank Furious setup, which never gave a trading opportunity. We have our reaction. We bounced off the highs. Obviously, breakout traders getting excited about this one, getting a break even immediately. Too bad for them. They're missing the quick move up. Everyone's getting excited about this huge buy trend in here, right? Now tapping into a valid supply demand area with the imbalances to timing, London session, perfect. We're having internal break of structures, coming back, having a 1 minute let of the imbalances, perfect trade. Now we're having break of structures, valid ones, right, to confirm the sell side, definitely. Then we had this tricky equal highs into the inducement from the magic manipulation minutes in here, right? And the next swinging line now is what?
Right now, as price took these liquidity, I'm expecting for like a retracement.
Yes, so that definitely acts more like a break of structure, right?
Yes.
So, and also what we have in here.
Imbalance IFC.
Yes, or technically the other zone is obviously the supply turns into the demand type scenario in here, which could definitely maybe be your decisional areas, right? Okay, perfect. But what's the next thing in line which definitely would confirm it more in terms of like our rule set with the lets, the timings, the EDMs? What is the next thing in line?
For what is going to happen next?
Yeah, so obviously at this point we aiming where?
Right here I'm aiming, for me at least, I was aiming for Asia low. Right?
Yes, 100%. Yeah. That's correct. 100%. Definitely. We have a perfect cycle to the upside. Of course, the next target is at least Asia low. There we go.
Yeah. And of course, my goal was to partial out here and let the rest run. Because
that's totally fine. And in case we look for more sells, where's our next potential opportunity in terms of like rule sets? Is there anything left in terms of the 5 minute? We're having our extreme. We're having not our let yet. I mean, always if that would be a let on a 5 also, that would be Mona Lisa's. But do we have any EDMs on a 5 minute yet?
Let's see. No.
Exactly.
No EDM.
We don't. So we look for 5 minute EDMs. On the 5 minute, Josh, if you rewatch this video, because I think he looked for EDMs on a 1 minute or something like that. So yeah, we look for EDMs on a 5 minute. Just if he watches.
Yeah.
All right, so, perfect. But first, first things first, our target, as you said, 100% Asia low.
Yeah, absolutely. Yep. And then, oh, beautiful.
Yeah, just a
And
little
then,
pullback, nothing to be worried about. That's
yeah.
even more juicy because what does this create? If that is our smart money trap, even gives the messing around to give a potential supply to demand play later, right? So now we're having our extreme here. Oops, what is that even for an S? I don't even know. But this is technically the inducement push. First one, pull back decisional. If it goes lower, decisional play extreme one, right?
Yep. So like for me, I think I consider this as the push to break this structure. So it's kind of like this.
Okay, that would work as well.
Oh, well, at least on this time, right? For 5 minutes. So every time I treat it as independent in a way.
Yes, that definitely would make sense also.
And as soon as they created equal low here, I was like, oh, juicy.
Did you still no, you didn't catch this move, did you?
Not this one.
You went
not
this one,
because
right?
not this one because usually right around 5, I don't trade, you know, and I was already on GU on the short, so I was letting GU run, so I didn't want to deal with EU.
Love it.
Because yeah, GU is my main pair, and then EU is just like my side pair.
Oh, okay. Side chick. Okay. Fair enough.
Yeah. So, yeah. So as price do their thing, you know, and I was like, oh shit, they're going down because EU is dropping hard, and GU is like, they're just playing around.
Yeah.
I was like, damn it, this could have been a better trade, but both trades still play out. So I was pretty happy. Yeah. So as soon as they took the Asia low, you know, and I'm like, we didn't just take Asia low, but we also like created like a like a lower high, you know, because we also took this, but we also had like a low here, and
Yes.
And not just that, but we also take this liquidity, right? So I was like, okay, so we took so much liquidity here already. I'm expecting, but we still have so much imbalance in IFC.
Yeah, at this point, I think it's even nicer because I think it's even equal lows if my old eyes see that correctly. Oh, look at that perfect line. Yeah, it should be equal lows actually,
Yeah,
which
almost,
is even nicer. Yeah. So yeah.
Yeah. So yeah, right.
There you go. That's nice.
Right when they took it, and I was like, now we can look for a trade to the upside.
Yes, it makes sense though. It definitely makes sense. Plus the timing, what should it be? Next time in line, what is it?
It's New York trap, but here's is like New York Open. Right?
Yes, it's New York Open. Perfect. So that's definitely can be again
so
a time where they mess around.
Yep. So I was so my theory behind this is, well, is here's New York, and then I will like New York to go up here and build this New York trap so we can trade it to the downside.
Lovely, lovely. Yeah. So the only thing is again, depending on how you read the market structure here, I would read it like as this is obviously the high of the day in here, but the cycle is definitely completed at this stage, right? We just have an internal or intraday inducement here, which, as you said, breaks the structure here, right? And then we have a pullback plus this breaks the day low, right? So for me and this daily scenario, technically that's the extreme, which I actually don't like if they come all the way from here, or you're taking the decision level coming from the supply to demand structure, right? Plus this was the smart money trap, right? Plus the day open price in here. We obviously wait for additional confluences like EDMs or something, which is the last thing in our checklist, which still is missing. And then we technically could look for a possible continuation trade lower, right?
And so for this one, the daily cycle, right? As we take the high and then we take the low and then we're moving back, and due to freaking, I don't know, US holiday or whatever it is, I was expecting for, you know, price to pull back, and then we died, right? London close is when I don't trade, so that's what I was expecting. So grab the high, grab the low back, and then we end the day at the day open.
Yes, would make definitely a lot of sense in terms of the bank holiday. Definitely.
Yeah. So let's move up.
They grab the equal lows, obviously move higher, right? So faking now the continuation trades, of course. Now smart money trades have a lot of reasons to whatever short here and whatnot, continuation trades because new lower lows and whatnot. Yeah, that's traps, because guess what? We took some liquidity, right? Move higher.
Yeah, let me go right here because this is what I saw, right? So this is smart money trap, and then I saw this, right? I'm just gonna mark this. Let me turn this into a gray. And then I saw this when they moved, and then they moved. They saw this strong black candle. I bet you everybody was probably selling.
Ooh, I did not even see that on the edge. Yeah, but that's definitely a really nice buy entry.
Yeah.
Wow, I didn't even. Wow, now that you mention it.
Yeah.
Yeah, that would be actually a juicy buy. Yes.
And then boom, they just move up. Like
wow, did you see that on the edge?
yeah, I did. But I'm still on GU, so I didn't really care to trade this. I'm still on GU. So.
Oh, I wonder if someone caught that. Yeah, that's a juicy one to prefer. Yeah, taking the equal lows of the New York Open price, leaving the imbalances, coming back to fill it. Yeah, wow. Yeah, that's nice. That's nice.
Yeah.
Props to you for seeing that one.
Yep. And then move up. And then
there we go. There's what is it? So now we're having the EDM. So can you draw me the EDM?
Let me just this my chart's so cluttered, right? So I have a hard time seeing.
It looks very clean though. It looks very clean. I like you to see. Yeah, I love it. It looks, I mean, you should see my messy chart sometimes.
Yep. So from here, right? I usually just you could use from here or from here, but I just go from here, right? And then go straight from here.
No, you need to go from here. You need to go from here.
Yeah. Yep. So I like to use the highest point from these.
Yes.
From here and then from here.
Perfect.
Right?
Yeah. So sometimes a little bit tricky because sometimes people like maybe see this one as well, like it's not EDM. Yeah, that's correct. But obviously we're looking at this push and it's sometimes a little bit hidden, if that makes sense.
Yes. Yep. And yeah. So
yeah, so they open price. Technically, this is the decisional that led to obviously the day low break, right? So that's definitely a potential zone. Plus, you have your smart money trap, supply turns into the mon scenario, and of course, we can look for some pullbacks at least, or continuations more. Right?
Yeah. So for like for this one, it's an EDM trade, so I usually just sell, right? There's no due to the fact that the zone is like 3 pip to wait for a confirmation. Sometimes you don't get it because the supply into demand is like so small already, so they just tap and go.
Very true.
Right?
Very true.
So in this scenario, it will be a tap and go. They just
yes, and then I think they just ended somewhere around there.
Yeah. So as soon as I saw that, I was like, all right, I'm done.
I like that.
Yeah. So
yeah, but that's some good walk up. That's some good walkthrough for sure. So is there anything which is this one clear? Because I think that's the one which was the most challenged today, and you caught exactly that one.
Yeah.
So is that clear?
Yeah. Yeah. So I caught this one, and no, I caught this one. I got stopped out at break even here, and I saw this inducement, and then I got right back in here. That was the idea.
Fuck! I just dropped my wine glass. Oh shit! Not I'm drinking wine, just drinking water out of a wine glass, but I just dropped it. Fuck! Ah! Give me a second.
Yep. Take your time.
Good that it was almost empty. Josh will make fun out of that one. Fuck. Okay. Anyways, I will clean up later.
So yeah, this
some good refresher here for myself. Refresh with some water. Okay, but yeah, that's lovely. If you saw this one, the only tricky one was where does this inducement end? Does it come all the way back on here on the 1 minute imbalance, or does it just stay in this zone in here? And it was pretty clear that it takes out the equal highs at this stage, even triple tops in this stage, right?
Yep.
Yeah, lovely, lovely eyes.
Yeah.
Plus,
I actually,
congrats
yeah.
for passing your what was it? What prop firm did you choose?
The funded trader.
Fund
Yeah.
trader.
Yeah, it was.
Yeah.
It was
Congrats for that. Like you will get a lot of morph of those.
definitely. Yeah. I don't know what the fuss about, but if you put in hard work and dedication into lit, it's I wouldn't say easy, but it's easy if you put in the work, right?
Yeah, definitely. It's
So,
beginning of your journey at this stage, but I hope
yes,
you walked through the whole Litiverse at this stage also, just to get a even
absolutely.
more structured way, right?
Yes.
But yeah, that
Yes.
should help you a lot. And even part two, it's even with way more examples, we even walk through a whole week of price action.
Mm-hmm. Mm-hmm.
So yeah, I hope you made a lot of notes to that one as well.
Mm-hmm. Yes.
But yeah, that was EU. Awesome, love it. I hope that's clear. The only thing I love to do is just like put like a line in here just to see from 5 miles away that it was an EDM trade.
Oh,
But,
yeah. I don't trade EU much, so I didn't really care for EU.
oh, okay.
Yeah,
So you're
it's
more
like
like
it's
GU.
just it's just my side chick. So yeah, so I focus mainly on GU because I've been trading ever since I take lit. I've been trading GU beginning of this year. Yeah, so the beginning of this year I take every pretty much there. I don't think there's a day that goes by that I don't have one trade. It's been
Yeah,
17
GU
days.
is really nice lately. Really.
Yeah.
So you're trading Frankfurt and London?
I trade Frankfurt, London, and then the New York trap, right? New York trap is a little bit tricky because
Yes.
New York trap can be a continuation or a reversal, right?
Yes, I think the most mistake people do is they think New York will always be a reversal, but it's not.
Right. And that's a bad that's like saying, oh, we grab the Asia high and we're gonna grab the Asia low today. No, they don't have to do that.
Yeah,
they'll come
London is
tomorrow.
definitely clearer to trade, but to be fair, sometimes New York is actually easier if it's continuation trades.
Yes,
Right?
I
But
think.
if you,
Go ahead. Sorry.
if you just want to switch to GU, just
Yep,
for the
I'm on-
Mona Lisas, did you which one was it you caught? Was it this one?
Yeah, this one. This one was just very clean. I'm just taking this because I got stopped out of my first position at break even and I re-entered over here. With this one, knowing that, should I just start from the top again and down? Or
if you want, yeah, because the only thing which I know a lot of people got confused of was this piece of shit in here.
Oh my
Obviously,
God.
it's just
Yes.
liquidity for later on, but of course, I 100% agree. If this London takes it out here, that's Mona Lisa shit, but it did not, which made it a little bit more tricky to trade. And in that sense, again, it's normal lit material, smart money trap, perfect. And then we're taking the higher imbalance area for the London one. I know we had triple tops above here, which makes it completely not nice, but technically the same stuff. Smart money trap, normal mitigation, London open to the minute, and then we go. Right, but I know a lot of people didn't take it because of this triple top, which I 100% can understand. I'm not sure you get it the same way.
I think the funny thing is, I think I took it.
Took it?
Yeah, I think the funny thing is I took it somewhere around here.
Yeah, that's
because
beautiful.
because my theory is if they induce this and they hit this POI, if they're gonna break it, they'll just break it, and then they're like moving some sort of like really slow to the upside, building this trend to get taken out, right? So it's kind of like
even this was really nice. Like if you just look at the extreme mitigation from the huge EDM off of Asia midline, beautiful shit. And again, this one was actually really, really nice. But yeah, that's just a fast and frank straight into it, and then obviously coming from a smart money trap area, what's your extreme mitigation? This sense your last imbalance left, smart money trap, extreme mitigation, perfectly on time. And then of course there's your very good trade. Again, I know the only thing which is not nice about it is the triple top. Yes, 100%.
Yes. Yeah, I was very when I took this trade over here, I was very mindful of like this, like, but the risk to reward potential is a lot more. So if I risk, I gain more than just my 1%.
Yes.
So it's worth the risk.
Yeah, but everyone who didn't take it, I 100% can understand why.
Yeah, I was scared too.
But guess what? Like if you just go on this one, because I remember this one also. If you go, I think the 1 minute.
Yeah.
Like what a surprise! What a surprise that was, huh? So again, what is it? Same shit as always. You have this as the high, right? Technically intraday internal break of structures. That's your imbalance. And what is this point in here? What is it on the entry helper?
Oh, let.
It's a perfect let also.
It's like, yeah.
So it's the same shit as today, is it?
Yeah.
It's the same exact shit. Like it's at some point it's so beautiful. Again, that's why sometimes it's not good to let yourself confused with like, should I take it or not? If everything aligns, timing, the cycle coming from a fast and curious trade, internal breaker structures, imbalances, this technically is the inducement of the intraday cycle, right? Then you're having imbalances, it's on let entry. It's really, really nice. It's really, really nice. Yeah, and as you marked it, here's your I'm not sure if it's that
I took this let's see if I grab so I saw as price creating lower low, and we're creating lower low during this trend line, and then I saw this like right here, right, and I took this trade also right here.
Wow, that's a good one. I wondered if
here,
someone took it because it was also let on the 5. Wow.
Yeah.
My hats off to you, man. That's a good one. That's a good catch.
Yeah, and I think what is this? 14, right? I think it was the 14th of Friday. Yeah, this one was like, I don't know, for some reason Friday is like one of my biggest trades. It's either they're gonna move super strong or they're gonna like die. So yeah, so Fridays are one of my biggest trades.
Love it.
Yeah.
So, yeah, I really like this trade. I'm not sure what about you, but this one was man, this was so nice to me. Like this trade in here on the 1 minute. Like, oh my God, because like we never took out Asia low. We're building like these quadrillion million bottom, right? It builds the imbalances and then it just comes back, and it was such a good trade.
Yeah, I saw this in my thought process, like, okay, so we built liquidity with the Asia low, and we built like a range, right? We pushed to grab the high, we pushed to grab the low. So I was like, we induce both ways. So I was a little confused. I was like, okay, so I will wait for what price is gonna do, because this is just a wick. So nothing for me to get into a mitigation from here. So with this trade, I'm not that advanced, so I let it go. Right?
That's completely fine. I'm very glad actually that you say that and you're admitting that even. That is super, super important. If you actually say yes and you're not that advanced yet, that's 1 million times better to stay away than get an unnecessary loss, if that makes sense.
Yeah.
Yeah, that's a very good mindset, my man.
Yeah. Yeah. And plus, I already had 2 trade running here, so it is what it is.
oh, okay. Did you held it until Asia low?
Yeah, I took I partial out both position here, and then I think I took the 3rd position down here. With this EDM,
there you go.
Right here. The 3rd position down here. So as the day go and then London is here, I just closed, right? I, of course, shoulda, coulda, woulda. It dropped even more. But
wow,
hey,
that's some good risk rewards, was it? That's some 20 pluses, huh?
Oh, hell yeah. Oh shoot. I have the mark though, but yeah, I took partial here, and then this one I let it go. In the day, in the week, in like very good. Sometimes I post like damn, I'm up 40 RR just today.
I love it.
So, yeah.
But that was some good plays for sure.
Yeah, this one was like I said, in New York Trap, it's in my theory, it's either a continuation or a reversal. And this to me looks like no reversal to me, right? It's just like we grab this liquidity, we come back up, and I see a clean EDM from I think I took it from here. Oh no, think it was on the 5-minute time.
Yeah, and that's the same
But, yeah.
scenario with like the EDM. Yes, it's technically the EDM scenario, but you have like all this like highs and stuff. So you take it
Yes.
from here, but you stop, as you said, goes above here. Technically, it's the
Mhm.
same one as we had today type of scenario. Where
Yeah.
it's like not nice if you take it, but you can, but you just need to be careful. But
Yes, and I like it because like I see it, like I said, it'll play out like 7 to 8 times out of 10 times. So even if I take a loss, I'll still come on top either way. So that's why I'm comfortable
yeah,
taking.
and
these
plus
type
you're
of
trading off
Yeah.
the Asia low, right? Which makes it even more
Yes.
juicy. And plus you are literally messing around so much and you broke it. So it's whatever this basic supply turns into Mon type scenario again, off an EDM. So yeah, that's pretty good.
Yep, yep. And then hold on. And then yeah, so that's Friday. Friday was freaking awesome. And then we have we move into today, right?
Yes.
So we have this, and then knowing that we did all this and we moved down, and then here we are. I'm expecting for due to the fact that we did not touch, we have a huge imbalance here, and we still have
Mhm.
point of interest here that has not been mitigated.
Mhm.
So I was like, okay, if we can get, if we go low first, then I'll look for a buy. But if we go high first, then I'll look for a sell.
Very good. Very, very good. Don't limit yourself on any situation. Have both
Right.
options available. Very good.
Mhm.
And then just
Right.
react. Love it.
Yep. So as price comes and we had this this build up, right, and then it shoot to the upside.
Maybe just a quick one before that, even to even figure
Oh.
out what they're doing. Like obviously you have this huge
Oh.
push, right? So what is this?
Right.
What is this in here?
Right.
Right.
So yep. So we got some sort of equal low, and then we have this inducement that grabs these, but we also leave equal high, right?
Yes.
So as this grabs the low, then we grab the high, we built this trend line to the upside. We also, I don't like to use this, but it is what it is.
Yeah, definitely
also-
equal highs
yeah.
in here. Definitely.
Yeah. Yeah. So we also built high, we built low, and then we grabbed the Asia high, right? We grabbed the Asia high. This one,
It's already
I'm
done.
not so worse. Yeah, it's already done, so I'm not so worried about this one. But I
Yeah.
do keep in mind of like I think on the 1 minute there was some sort of equal high. And then that's why I marked red here. And then today we blast through Asia high, right?
And first, what do we have as always? Just a quick one.
Mhm.
Like I hope that is clean, like very, very clean, like equal lows, inducement, and again maybe internal break of structures coming back to mitigate it, running up, building another equal highs, building the channel, right? Now what they do, another equal lows, inducement of Asia midline, right? Filling
Mhm.
whatever. This last imbalance for what? What is coming in this scenario?
To move price up.
Yes, and when do they do it?
Oh, Frankfurt.
Yeah, to the minute as always. It's the same shit as always. So that's your
So-
first buy for the day of the equal high, equal lows into the inducement and to the mitigation to the minute for the buys, right? legends. So today with a funny episode, probably like it was an unexpected episode to be fair. I didn't really plan to do this, but Mike, shout out to you. You brought me this to this idea. So you meant like it would be fun to just jump into a random pair at a random time, and I wrote it, and I thought like, oh wow, that actually could be fun. I did it, and that turned out to be one of the most funny breakdowns I probably ever did. So that's interesting for sure. Let's call it like that, and we'll just call it, as you know, how bizarre. So have fun and enjoy probably the most interesting breakdown we did to this point. So have fun and enjoy.
Some viewers may find the following video disturbing. Viewer discretion is advised.
Alrighty, so let's give this little challenge a try. I actually like it to be fair, and I know you guys, you cheeky guys, want to see me fuck up anyways a little bit. So that would be fun. So what we will do, let's just dig to the most random spell I could get out of my head, whatever. Let's chap5. No, let's actually make n set d. Oh, no, n set d. Yeah, why not chap5 or something? Okay. And what we will do, okay, first let's remove the entry helper. Let's remove this. And whatever, go to maybe not days, maybe 15. Okay, so and let's see if you can find something random that looks really messy. Like maybe in trending shit like this. Why not? Okay. Okay, what we will do now, let's see if we can play some Russian roulette and see if we can figure some good trading setups out of that mess. Okay, what we already can see, which is actually really, really nice, is that we had there's some sort of liquidity there. Also grab this one, build up equal lows in here, gives a little push, takes it out and mitigate something in here. That is really nice actually. And we also have some sort of momentum switch here, or directional switch. So we're having our break of structure to the upside now after we taking this major inducement to the downside in here, and we slowly forming a directional shift, right, which is nice. So we're turning from bearish to bullish slowly. And what do we see here? We also see this juicy equal lows liquidity grab, and look at this. Oh my god. That's actually really nice. So tapped into there for mitigation. So that's actually really, really nice. So let's dig into the 15, a time from low, to see what's going on in here. And wow, yeah, that's actually really nice. So what you see, this is the push that led to the inducement that's already got broken. So we're having a break of structure here. So really, really nice actually. And we, yeah, let's actually bring some light into the, okay, Asia building up in here. So let's go to the 5 minute to see what we had. Okay, so we're seeing this messy price action here. Okay, not bad at all. We had this equal highs also in here, which is getting slowly taken out in Asia right now. And what do we have? NCT chap5. So, okay, we can expect definitely some movements in Asia. Let me just see what's going on. Actually, not that bad as I expected it would be. Okay, that's interesting. Not as bad in Asia as I thought, because it's technically New Zealand dollar and Japanese yen. So, shouldn't move more in Asia, but it looks actually good. Look at this London inducement push, and then nice cycle actually. Okay, anyway, so we're having now slowly our momentum shift upwards, so we can actually look for buys already. That's nice. We're trading away from the 1 hour directional shift, as we can see again. We're having our equal lows being
taken out of this beautiful, beautiful London inducement. Cup trade almost, if you take it on the extreme. Perfect mitigation here to the minute, like what a surprise. Now we're having break of structure upwards. And also this equal highs being slowly taken out. So we definitely for this day got it pretty good actually, right in Asia. If the entry, if you can see that. Yes, there we go. So now we're actually looking in Asia, and that's interesting. So what can we already see in this play here? Now we're looking for buys technically, right, for the whole day. Otherwise, we're having an inducement high first, then obviously can look for short and then highs. But buys is definitely the better opportunity in line with the trend. But obviously, as you see, there's so much imbalance going on. The next proper zone for mitigations would be something like this, but that is way too far out, right? So we don't really expect that to shoot up in this in one day right there. So we technically can look for both. So if you have an inducement in the middle, maybe 50% of it, let's actually see, because if there's any valid zones here. But the only thing we have in this scenario is this. Yeah, actually not much. So let's just see. 50% of the imbalance like this, kind of. Even that is kind of shitty. Let's look at the 5. Nothing we would look for mitigation anyways, just for orientation purposes. So then we can expect like an intraday 50% fill. And no, there's nothing actually. Okay, the only thing we had obviously is this. The supply turns into demand nonsense type of thing, which lines up also here. So yeah, whatever. This could technically be a potential next target. But again, we're expecting this to be the next valid demand supply thing. You know what I mean? So always switch that shit around. Nobody cares anyways. So we can expect some reaction here, and obviously maybe pull back and then go higher to the zones, or even inducement low first. So if you induce low first, there would be a potential zones. Obvious smart money trap in here, right? So we can label that out as a smart money trap. We can't obviously have smart money traps to the high side because there's nothing. Like, what is a smart money trap? Like this? No, like we don't know. Like this is our next valid supply demand area with the huge imbalances. So we don't really have a smart money trap upside, but we don't want to run limit orders anyways, and if price action goes in here, so. Smart money trap in here. So what's our potential next mitigation area? Let me actually see what we have. We would have two, I would say, two type of extremes. Maybe the 5, yes. We're having our extreme here, which is really nice also because that also is an inducement, right? And technically, we are not really mitigated something nicely, but fair enough. For intraday purpose, makes a lot of sense because that is the inducement extreme, like taking out the structure points in here, and that's the push. Obviously, now taking out these structure points, like the extreme of it, right? But we also can make, if we say this is the smart money trap, we also could technically take this zone in here. Right, but maybe not like this. Maybe let's refine it a little bit different. Hopefully we can. Come on. Did it work? Did it work? I think it. Oh, I think we crushed it. Ah, shit. We should not have gone to the 1. Oh, there you go. Okay, that's good. We can go to the 1 minute. So that would be the decisional point, like this, and that would be our extreme point. Okay, so let's actually leave that for now like this. Maybe we can refine it later if we wanted to, but now we don't want to refine too much. So we're having smart money, so a smart money trap zone. All right, again, we don't need to refine it too much anyways because we just expect in best case reaction out of it. And yeah, so that's how we technically can refine the zones before the day even begins. So we made Asia range. We just looked at the higher time frames. We know that this is a major inducement down there. We're having our structure points, and now we're looking to the left for potential mitigation areas, right? So cycle play, smart money traps, and potential decisional or extreme, depending obviously on the timing also. And we don't really interested in this scenarios right here for this intraday play. Okay, so that obviously would be something for later, but this is a point I would be very interested even for the future. Okay, because that's the push now, the valid break of structures even for the higher time frames, and that also builds equal highs, and that's the extreme of that push. So that's really nice. Okay, so let's see what we have though. If we made shit up or no. Okay, so let's play Asia out as all. Oh, okay. That's interesting. Okay. So what we have now is just there's our build-up. So technically, I would consider not really anything here build-up other than, yeah, there's like a little range play, but we're just having a new high formed. But you already can see what they're doing here. So they wanted to go higher. Now they're building up the buy channel slowly, but not really, just a little push upwards. So we can actually trade in line with this inducement high first to potentially these areas, or like technically that. But if you're building up the liquidity high or long side already, we can already expect like a cycle play, maybe short, and maybe like in New York trap or whatever, like some sort of reaction extreme or here, and then aiming for the next supply demand areas. That's what we already see in this play, what they do in Asia range if they're building up the buy scenarios. Okay, but let's see obviously our first Litiverse guidelines. So first thing we would be interested in obviously is, of course, Frankfurt session. So now we're entering Frankfurt. Okay. Oh wow. Okay, that's fairly interesting. Whoopa. What the hell was that? That's also fairly interesting. I don't know how I just did that or how I can reverse that. JP, help. Fuck, what did I do? Oh. Shit. How did I do that? Ah. That's crazy. Happened to me lately also. JP, can we code something in that we don't have that issue ever again? Come on, give me 100%. There you go, that's better. Okay, anyway, so that's already like a potential opportunity. Because having this long run, so now expecting a pullback, and for London Open, we can expect some sort of continuation, as we still have a shitload of room to the upside. So we're not even expecting a reversal until now. Until obviously we have some sort of cycle play continuation. What's the first things first? So first, Frankfurt Open induces the liquidity high side. So now we can expect people jumping in longs as crazy. So let's see on the 1 minute where we would have potential liquidity buildups. We already see it right here. All right, so let's see what we got. Show me what you got. Okay, that's the pullback, which was expected. So that is a small money trap, obviously. Easy stuff. So now we're entering the liquidity areas to be taken out. And again, that's also why we say the first step process is always identify liquidity and not like just randomly open a position here. Like, why would you do that? That's, again, you see the mini reaction here with the liquidity is on there because that's the build up. That's what you also say. Identify liquidity first, the build up, and then a lineup would make sense. So what's our next timing for orientation purposes is there we go, London Open. So we're a little bit far off that one, but not a big deal, is it? So let's see if they grab the liquidity. There's no possible mitigation other than this to the low side. All right, so that would technically be our mitigation zone, but also can be in this candle in here. So let's just see. Oh, okay, faking the reaction. So how do we call this? You already know, smart money trap. So that's the false reaction. Okay. Okay, again, don't get trapped into that one. Easy stuff at this point, isn't it? So let's see. Okay, perfect. That's nice. That is really nice. So Let's see. Okay, stops here. See if it goes to our point of interest. No, it does not. Okay, so let's see what we can do. So now we technically having, depending if you take this push and say this is the break of structure point, then no, we don't have a break of structure. If you take this one, for argument's sake, which we could, let's just check the 5 minutes. Entry helper, give us some clarity. Okay, that would be a nice EDM to be fair. That would be a really nice EDM. Not a lot, not a really clean EDM, barely EDM. Let's see if you can trade on a 1 minute for continuation trades long side. So that would be our potential inducement candle, right? So that's your first smart money trap, and then obviously builds up equal lows, reaction of smart money trap. So that's your inducement. That's technically your intraday break of structure or internal break of structure. So let's see if we can get an entry at London Open to the minute. Like that would be a huge surprise, wouldn't it be? Okay, no. Oh, woo. Almost to the minute. Okay, so what could we aim for though? Let's go to the 5. Let's go to the 5 minute. Okay, so we technically still have room, but we don't know where to aim it. Like I would not randomly aim here, because think about the step-by-step process now. So now we're building up buy. Look at the trend traders, like, oh my god, look at this trend being formed, look at the breakout, oh my god, this will go to the Mars. So that's Elon Musk 2.0 imitation right here. But surprisingly enough, it will not go to Mars. If anything, oh my god, why does it happen to me again? Come on, 100%. There we go. So if anything, we will get higher, one push higher, to make more people excited with speed best case, because guess what? Now we're in London Open time, and then we expect an inducement low. The only question is of how low and to go higher. So as we mocked up earlier, potential smart money trap. I mean, we definitely should go lower than Asia. Then if we do, smart money trap reaction, positional point or extreme point. Okay, we don't know yet, can do both technically. But first, we expect London to push price even 1 point higher to fulfill the proper cycle and get everyone excited about that. Okay, we don't look for random reversal trades in here. No, we look for still buy. Okay, glad that, whoopa, that came actually very close, didn't it? See in the 1 minute. Oh no, it did not. My old eyes telling you, getting old. So yeah, that's good. That's good. So I would just aim a little bit higher, because again, destination unknown for the cycle play. We don't really know. Again, Josh would freak out and kick his cup against the wall when he hear me say that. But for now, we don't really interested in know where the inducement stops, because we don't know at this point, right? So what we do is we trade safe and just make it very easy. So we're just aiming safely for one higher. That's, wow, only a 1 to 5. Oh my god, we suck hard, don't we? So okay, so technically that played out pretty well. And now slowly but surely, obviously, London comes to an end. So let's say whatever, you close this trade here, 1 to 5, 4 even. Oh my god, let's say what's the potential in here? Only 1 to 6 also, so not a big deal anyways. So let's just see if price action can show us when the cycle will be done though. Okay, because again, we don't know. Like, we only could know at this point if we get a valid mitigation stage. There's no valid mitigation stage in here, so we don't pull something out of all. So we need to see price action to show us when it could potentially be done. So the only thing we see, cycle potentially done to the upside. We're having our build up liquidity, we're having our minor inducement, and then again, one push higher, still internal, so no medium inducement inside. Right, because again, medium inducement would be something like this in here, and obviously we probably will not get that right away. So now the intraday cycle is just done in here, and we can look for potential shorts. The only question is where. So now we just can go to the 1 minute to see what they do. Oh, let's say you stay in the 5 minute. Let's see what the price action will show us. Okay, where's my Asia range, by the way? There it is. Come on, come on, come here. Come here, like a dog. Come here, age range. Ah, see, it works. It always works. That's how my dogs come to me all the time. So that's really nice. That's easy shit. Actually, I'm actually very very surprised by NZD chap5. So what we got is build up. That's obviously not the cycle done. So what can we expect already? If that happens to me one more time, I will jump out of the window. Give me 100%. There you go. What we can expect, inducement here. We don't know where it will stop, Josh. Maybe we know, but maybe we don't teach it at this point because again, it will confuse the shit out of everyone. So that's how we don't do it. That's how we show you stuff which is easy to trade. Anyways, we can expect something like this already. Okay, but again, we will not place like a limit order in here because where would you be a stop loss? Will it be all the way up here, aiming for 1-to-1 risk reward ratio? No. So wait for confirmations, confluences, and whoa. I love that shit. Okay, so now we're having the inducement. Let's see the one actually. Yeah, that's really nice. So the only thing we do, Josh, we wait for break of structure. And we have our break of structure. Now we go to the 5-minute and see. Can I make that more pretty? Like this. And we see imbalances from here to here, but that's way too big, isn't it? So that's why we go to the 1, now our entry point, potentially here. All right, that's the 5-minute imbalance fill. And for argument's sake, we can take this one. I would not place it here. If anything, I would take these blocks in here. My order block nonsense type of thing, whatever you want to call it, but that actually is a valid thing to trade, believe it or not. But that's again the supply demand candles that chooped the price higher, so they held the market here with liquidity until they choop it, grab the liquidity, and then they push, break lower. So the liquidity was in this 2 blocks in here. So that's why it's likely this price will go into the zone and then goes lower. We have no imbalances here, so that's technically my personal preference of getting into this trade in here. After, guess what? Break of structure after the cycle is perfectly done. So we can remove that nonsense now, so we don't need that anymore. Also that 50% thing, nobody needs that shit. And now we're just trading the cycle. Okay, we don't have an extreme limit order here, so not a big deal. We just wait for valid mitigations here and place stop loss like this after break of structure. Okay, so technically that's the push that led to the break of structure. That's the push or the price point that held market like for 2 candles and then chooped it up. So they held it for 2 minutes, faking again the quadruple top, but then inducement, break of structure, mitigation. Did you hear that before? I think so. Normal cycle play. And when should it happen? If we get entry, what a surprise. Let's call it the magic manipulation minutes. I think you heard it also. And where should we aim for? In this scenario, I actually would aim low because we have 1 full cycle perfectly done. Break of structure, cycle completed. Everyone is induced long side. And now we're looking for potential entries in here. Let's just, oh, okay. Should we jump in here now? Because, oh my God, momentum. No, we wait. Limit order sets in here. If we miss it, we miss it. If not, then not. So that's obviously where the support turns into resistance. People go into the trade like, oh my God, yes. And let's just see. Yeah. I would say we teach stuff to the minute, but I don't need it. I don't think I need to. Man, we should actually charge like 50K for our service. Like, oh my God, if that plays out now, yeah, anyway, so that's nice. and very unexpected also. So how could we know that? What's the entry helper saying? Oh, let. Yeah, what a surprise. What a surprise even that one would be. That also, if again we wanted to trade the extreme, we could have done that because that extreme was actually a let. And again, I know a few of you guys do that, but again, I will not recommend anyone to do that. But if you have the inducement, you technically can take it, try it in here, put your stop loss right above the inducement. I know a few of you guys doing that already. Don't make a habit out of that. Again, sometimes it works pretty good, but as you already can see, that's a 1 to 10 if you do it like this, and that would be a 1 to 13. But this is like 10 times more safe. So why would you take this trade? Obviously, it looks more fancy and everything, and you can technically do it because that's also let extreme entry, but you're just trading it the next candle and put your stop loss above it. But again, I would not make a habit out of that if it's you, right? Just go for the safe entry right here after the break of structure, and that's also let. So that's perfectly fine, right? And again, this would have actually been an extreme entry in here also, but obviously now we into that one. Okay. So the only thing which is missing, it would be what would be still missing? What could it be, ladies and gentlemen? An almost. Okay, semi EDM in here. So okay, if you technically not just for rule based, let's call it a semi trade opportunity in here if you really wanted to, but it's not really an EDM. But the rule based confirmed would be EDM. It's only almost one, so we just don't call it a not EDM, but just for argument's sake. Okay, so what we have now? Okay, so now technically we're having also 5 minute break of structure. If we check, because this should be the 5 minute point. Yes, it is. So now we're having a 5 minute break of structure in here. Yes, perfectly fine. Okay, so are we interested in taking a sell in here? No. Because that's the typical smart money trap type of thing, because now you're having a very smooth up run. That's a little bit too obvious in my opinion if that would play out. So I would personally just mark this out as a smart money trap now. That would also make sense because technically that wasn't an EDM, it was a semi-EDM. So it even nicer if they induce high and then go low, but that could be just me making shit up here, right? So for me personally, I would be way more interested in this point. Let's see if you can refine that on the one. But we're digging a little bit into advanced shit here, though. I don't know if I make shit up. Okay, so technically that's nice. So I would, again, if it works out, it works out. But my personal preference would be smart money trap in here. So let's just fast forward this shit. Okay. Yeah, smart money trap. I'm not sure. Okay, reaction. Yes, okay, yet now it will definitely getting fucked up. Having build up. What did I just do again? Okay. So now we're having build up. If it comes one more time in there, then get the fuck out of this trade. If you take this one, because now it will definitely turn into smart money trap. Just predict that shit, like Conor McGregor would say. Yeah, now, yeah, 100% it will get fucked up now. Yeah, and the only question is like, where would it stop? The only really nice one would be this one in here. Because again, this is already mitigated. This technically is just, again, mitigated with the next candle, but obviously just if it's getting mitigated with the next candle into this one, doesn't mean they're taking out all the liquidity, not properly, how to call it, market delivered, right? So it can potentially come back in here. I think also Alex talked about it a few times. They can come back to these zones like multiple times and still continue the valid cycle also, right? So let's just see, faking, okay. Yeah, that's nice now, actually. I really like that. I would personally take a trade in here, but that's just me. If I take an L, I take an L, it is what it is. So let's see. Okay. What's the timing? Okay. Okay. Yeah, should work out actually. Yeah. Okay. Not bad. What's a better trade though? Of course, now we're having this internal break of structures. Technically, this 5-minute mitigation zone, will it come all the way up high here? We don't know. Let's see if you can refine that. I'm not sure if I like this one though. Okay, let's see price action. Okay. Okay, now we think we can actually. Let's see. Because now, yes, yes, that's so cool. I really like that now because again we're having build up, and if it then is taken out, I will kick my dog. Okay, fuck. Could be potential again, faking the continuation, people getting excited about it. So if you get now an inducement, that's oh yes, yeah. Oh my god, that's so nice actually. I'm right. NZD JPY, my new favorite pair. My new favorite pair. Calling it out, man. Come on. Come on. Come on. Oh! Ooh! 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 Oh shit! No! Okay. Ooh! Oh! Whoa! Ooh! Okay, yeah, that yeah, that's pretty nice. I actually like that. That's pretty crazy. Oh my god! I've ever said that I love this shit. I think I did. Oh my god. Yeah, that's nice. That's really nice. So now we're having Asia low inducement. That I'm telling you guys, I've just called it out now because this price action here is so nice that this will be to the minute. Josh, I will bet you Rolex. No, maybe not. I will bet you a cup. No, maybe a Rolex. I don't know. But to the minute bets with a Rolex is a little, I don't know. No, let's bet about you pay my next gas bill. But that man, that will be to the minute. Like I can see it. I can see it, like no joke. Oh no. Oh no, I'm fucking stupid. I'm actually fucking stupid. That's the smart money trap. That's the mitigation in here. So good that I still bet you, Josh. I will not back down my bets. So that's the smart money trap. That would be tricky though, like it has to be though, because the cycle is so nice in here. Let's see. No, I'm taking the bet, Josh. I'm taking it. What do I have? I have 11 minutes to get the smart money induced, smart money trap induced, and get to the fucking. But that's so nice. That has to be like it. Look at this, equal lows right above the smart money trap, and then that would be the structure point that obviously led to the higher time frame break of structures. Decisional one, that's the 1 minute refined one, that's the extreme, but it will definitely not come to the extreme here, but maybe later. So maybe obviously not with this day, because now we're having trap time. That would fulfill the cycle to the absolute perfection. So let's just see. Tap smart money trap. That's my marking.
Oh. Okay, reaction. Fuck, that will be. Okay, probably lost that bet anyways. Okay, telling you guys. Josh, that doesn't count. Let's see if you can even refine it. No, it is refined. Okay. Oh my god. I don't think if I can even post that, man. The cheat codes. Like, I mean, that's actually insane. I'm crying here. Anyways. So, okay, there's no proper mitigation zone. So let's see if you can get a let. No, we can't. Okay. Oh my god, man. Oh, don't fuck me up now. Whew. Come on. Come back to this one now. Okay. Okay, I don't. Oh, maybe. Maybe. Come on. Come on. Oh my god, man. Whew. I would actually mark it like this. A little build up in here. So we need like some sort of inducement low soon. There you go. Is that it? 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 What's our next time? Oh no, close. Let's actually go to the 5. Okay. Okay, alrighty. Oh, there we go. That's what I wanted to see. Yes, yes. Oh my god. To the minute, but not something we would take. Man, I'm telling you guys, we're giving you the fucking cheat code. Like, it's not even funny anymore. Like, I don't even know what to say. That's ridiculous. So now we can trade the what is it called? London close. Come on, don't give me an L here, please. Well, anyways, it would be not matter if I would get, but that's something you can take. Because you're having the trend build up, that's your technical inducement. London close should mitigate something. There's no fucking anything to mitigate. Now you're having internal break of structures. If it comes back, no, it does not. Okay, it is what it is. I would target still higher here. On our intraday, maybe like this. Oh, you know, maybe we even can higher. Because if you had a good day, and I had a good day, but everyone knows this song. Unfortunately, we know. Okay, that is what it is. No trade here then. Fine. It is what it is. So let's check the 5. No EDMs or nothing. Okay. Alrighty. Come on, hit the target. Hit the road, Jet.
Mm, 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 mm. Oh. Yeah, okay. Partials here. Target the next supply demand area for juicy 1 to 25. 24. Apology, my incorrectness. Come on, do it. You can do it. Maybe not. I believe in you, though. Come on. Yes. Okay, guys. I'm happy about this one. I'm not even sure if I can post that, though. It's a little bit too insane. Anyways. Yeah, that's it for me. But just for argument's sake, if you're an Asia range trader, because we have another fulfilled cycle, we wanted to take the short like this, you could. I shouldn't have said that. Oh my, yeah. NZD JPY. My new favorite pair. I hope I recorded actually. I'm not even sure if I did. Hopefully I did. If not, I'm with jump out the window. If yes, have fun. I'm watching the recording. That's it from me. Have a good one. Good night and cheers.
Hello, Lit family. I hope everyone is doing well. And of course, I'm back again. It's been a while. I did mention I will take April off. Unfortunately, the unnecessary mess happened, and yeah, going into May, we didn't have a vault, although it was in progress. So yeah, we now have a vault, hence why you're watching this. But yeah, it's been nice to take a little break. At the same time, I hope you guys were watching them. I know it was tricky without the vault, of course, but yeah, now it's like a million times better. So yeah, I can't wait to start uploading again. And yeah, today we will be covering Thursday. I did mention on the slaughter call that I will be recording my part as the beauty of the day, just because of time constraints. We don't want to take up too much time on your Sundays, especially if you have families and other commitments. At least you can like watch the recordings and yeah, so yeah, we just shortened it down. I will have my part recorded, of course. And yeah, this is essentially what I was going to teach anyways, but yeah, it's the beauty of the day, I guess. So yeah, so if we get straight into it, I, of course, am on the 15M time frame. And I went on this overview just so we can see a bit of a bigger picture. So if you remember last week's call, I did cover Friday, and we had our clean inducement low from the major inducement to the left. And then, of course, price continues bullish, and that makes sense. So if we look at that, what we can see essentially is, okay, we've had a really nice strong reaction. However, we have left liquidity here. And at the same time, of course, we have a pullback. So it's the question of, oh, are we done? Or are we going to continue lower for a deeper pullback, you could say? Or are we going to continue at this point? And that's the question I think a lot of us have is, where exactly are we kind of thing? We have Asia at this point. We, of course, don't have our price action yet to trade from. But what we have to do is understand the price action we have and how that can help us understand, have we induced enough liquidity low at this point that maybe price continues, or have we not? Now, my bias here is we have, and I'll tell you why, is because if we look at these 2 points from, you could say there and there, the main bullish run, you could say, price, of course, forms these crazy vectors. Then we start trending, we get liquidity. Then, of course, we get trendline liquidity. Price induces low, we get these nice vectors. We have a continuation in New York because price did not have enough satisfaction to now continue bullish. So now we've had our continuation of the inducement, but it's a matter of, okay, so we've technically induced this low there, if you can see, the main bullish low. So we've had an inducement essentially. And the reason I like that is because it's a smart money trap. Everyone will be taking it from there. All of your retail traders that trade smart money concepts see that as your extreme mitigation from those 2 points. Of course, we get multiple traps in between, like such. Right, so we have a few traps, but this is of course our main trap, you could say the extreme one that gave us the reaction of, you could say the final movement, because now we have our inducement low. Have our inducement low. Asia then trends bullish. But this is where it gets a little bit tricky of where is our liquidity in Asia. Now you can probably tell we have equal lows essentially. Just going on the 5M now to tweak things up. Okay, so we have pretty nice equal lows there. Now, this is where it gets quite important of the fact of spread and day open, where you get reactions like that, these wicks that may not be very much the same for every broker. So when it comes to that, I would cancel that out and take the next valid low, which would be essentially here kind of, but then it's still a bit tricky. So essentially all of that is wrong, but this will be my new Asia low that's valid in our analysis. We also have equal lows. So this is why I wouldn't necessarily expect Asia low in the technical sense here to be induced or mitigate maybe. Even if it did, that would be very risky to take an extreme like that. But more so, let's wait for an inducement of relative liquidity. We even have this trend line forming right there. Okay, so we have really good liquidity. That's really nice. Now it's just a matter of, okay, what do? We wait. We don't make up things from a midline which doesn't present anything. I know people see that as, what is it, your supply to demand, whatever. That I'm not familiar too much with that stuff. Probably mention it as the direction, but that doesn't make sense with how big that zone is, probably 30M. So we're not going to make up stuff. So for a fast and Francturious, you could say, it's not really in play, so we can cancel that one off the table. And more so, we want to see an inducement as opposed to a mitigation. So in this case, we want to wait for our mitigation low, inducement low, and then, of course, identify opportunities. So we're going to speed things up. We are quite high of Asia, high there, but going out of Asia, we are going bearish, getting a reaction. We already are in Frankfurt. Again, it doesn't matter because we're not really at any target. We're in the middle of price action, so timing doesn't matter in that aspect. It has to line up with everything. Okay, London Open. Could this work? Potentially. We're almost at the Asia low here. We're quite low of the liquidity. Oh, so we technically have induced our lows. Maybe not necessarily Asia low. However, liquidity has been taken in this case. Now, of course, it's been taken. Let's go on 1M. That doesn't necessarily mean we see an opportunity because I can't see anything there. We do have a nice fractal 1M build-up at the same time. So that's really, really nice. Just a matter of the mitigation. So we're just going to wait and see if we get a mitigation. Should we get our London Open inducement? Could that technically be our mitigation? Yes. Why? Because it also was a let. Now, what I mean by that is not taking that initially. I mean, you can actually take that. That's just a little bit more, I guess, advanced if you're finding it hard to understand the end of an inducement, or if you prefer to take different entry approaches using the entry helper. So technically, you can take that as your initial mitigation. But of course, for the beauty of today aspect, I will focus on a bit more cleaner setups, or the ones that are very clear that you should definitely not miss. So you have your initial mitigation, of course, which was a let, only 1M. And I've mentioned this before, taking the mitigation after the let. So we can take that, trade if it comes back. Of course, that's your smart money trap reaction right there. Should tag in, okay. Okay, so we get our mitigation, getting consecutive mitigations. That's really nice too, if you missed the trade. Okay, so we're getting our nice reaction. So we've had our London open inducement, we have our mitigation, we have our trade essentially to go bullish. So now it's just a matter of course, waiting. Are we going to get pullbacks? If we are they timing based? What's happening essentially? So now we are outside of London open. Okay, so we're getting interesting liquidity right there. Oopsies. So we get these equal lows. Of course, we're just gearing up for potential pullback trade. So we're marking up liquidity as it appears. Almost like magic manipulation minutes that could present something. Okay, so we've induced Asia high. That's really good. Asia high has been induced. Perfect. Getting that reaction. Ooh, we have magic manipulation minutes 1. If it gives a nice pullback, we can potentially take a pullback trade. Of course, we would prefer entry helper confirmation such as a let or EDM. We have got a target. That's also the most important thing. We need a target. And risk to reward wise, it's justified with, of course, how far it is. It's not just like a 1 to 2 type of thing. So we have got some sort of justification. And we've induced Asia high, so we can potentially get a pullback. Now that's where it's important also to understand that that doesn't mean we now go bearish. It's really important to understand that. It just means we get a pullback to then continue the inducement on a bigger scale. So we have, of course, a nice pullback. Could take the mitigation as our opportunity. Okay, so so that is essentially a let if it sustains. What I really liked is this little build up right there, the fractal build up, essentially your let. Okay, so you have 1M let. Perfect. Then perfect, we have a perfect reaction. Target, of course, that low right there. That's a very justifiable trade. We get a smart money trap reaction. Not interested. We have to wait. Now, perfect. We get those nice vector candles if you watch them form. So now, of course, you want to close your trade. Again, that's a really nice trade in that sense, but you want to close because you induced the target. So what I would do here, though, is potentially take an inducement trade. So to continue our inducement trade, we will take the inducement. Now, stop loss is where it usually can get funny, but what I like about this is we essentially have a stop loss based on price action, which would be here. So I would take it under there just in case if it continues to mitigate here. But essentially, at this point, it has induced just from that point right there. So I will take that trade. Then, of course, take that as my next continuation. I mean, at this point, actually, should have done this. The risk to reward of our buys. Of course, you technically have both. So I guess, yeah, we can take the initial mitigation as well as the mitigation of the let. So you have 2 entries that are clean. Okay. Then you have your entry here. Target wise, I would aim at least above those highs. Oh, it looks a bit funny from that point. And yeah, that's pretty sure that's pretty decent risk to reward. So I'll aim above the highs, just slightly maybe. Depends on the time of the day as well. So those factors play a role when it comes to volatility. So we can take those all the way up there. We also had our sell from the 1M-led pullback at magic manipulation minutes. Kind of almost to the minute, wasn't it? Can't even see properly. Oh, to the minute. Just by 2 minutes maybe off, but nevertheless, we had our targets right there. Why does that line look weird? We should bring it to the front. Perfect. So that's pretty decent risk to reward. It's a 7-1. This is why I say if you're taking a pullback trade, make sure it's justified and not just whatever 1 to 2, 1 to 3 kind of thing. It has to be justified. But we have a really nice liquidity target there. Magic manipulation minutes pullback after Asia high inducement, as well as the lead. So that's a perfect pullback trade. Of course, important to close as well. Now we can take the inducement trade. And if we get an initial mitigation, let me look at price action a bit better here. Let's see our reaction first. Does it continue? I mean, essentially, mitigation. Oh, that came ever so slightly close. But this is why I would prefer to take the inducement trade. Put my S-hole below this point there. And yeah, you have your mitigation. I would, of course, put your SR a little bit lower than that anyways. But ideally, you would essentially kind of have to go like that. That's it. That's, yeah, not the nicest. Nevertheless, it's your initial mitigation. As we go bullish, of course, we have our trendline liquidity now, which was our pullback. So that's important when you understand the continuations and stuff. And then when they get, you could say, converted into liquidity. So now, of course, it serves as liquidity because our target is now reached. So now we, of course, have a liquidity target forming our continuation on a higher time frame scale, you could say. So let's see. Of course, the high will be broken. Sometimes the risk to reward tool messes with my eyes. It gets too much color. So I'll just move that a little bit out of the way. Okay. So you can monitor potential continuation opportunities as well. That would be really nice. So we've broken the high, nice vector candles, possibly a pullback. POI, not really keen. Okay, you have that zone there. Not so keen on it though. And the M2, again, doesn't really say anything. Okay, so we get bullish again. So yeah, essentially that did play out, the mitigation of this. Not keen though, just saying. Okay, so we get, ooh, is that equal highs? Nope, essentially we've had our inducement off this structure to the left. I'll go on 5M just so it's a bit better on the overview if you find it tricky to see. You can see a clear inducement of that structure point. We're not going to really classify these ones here, but of course the main one of that high. So that's induced. Could potentially get a pullback. It is reacting, so let's see. Let's just mark that up as inducement. And just remember, if it's an inducement, it doesn't mean we are now going in the opposite direction when it comes to a bigger scale, and especially in the retail heavens. A good example is this, the MM1. What am I saying? MM1, didn't mark it up. MM1 reaction, what happened was we induced Asia high. So technically it's the same thing. We had an inducement. Doesn't mean it's a continuation. We now need to continue the inducement. It's not a complete inducement, but you take those fractal trades, fractal trades to play the smaller cycles in line with the bigger picture. Inducement high doesn't mean we're continuing. Not really anything there. Timing based as well. We're almost 2 hours from New York Open anyways. So at this point, we shall see what price presents us. So I want to see a POI essentially formed. Not keen on anything at the moment in this leg, so I'm just simply going to wait. See what price presents. Possibly upon this pullback, we get a reaction, and I'll consider mitigation or something. Because I'm not keen on that, to be completely honest with you. As the, you could say, consecutive mitigation. But if it reacts there, perfect. Take the mitigation after. Oh. Okay, so we've had an ever so baby cycle of this. Inducement low, just missed that zone anyways, that's fine. Okay, that could serve as our POI, essentially build up inducement, mitigation for the continuation. Is it a reasonable target, or sorry, risk to reward and target in the sense risk looks pretty decent. What is it even? We have a 4-to-1. Oh no, what am I saying? Wait, 4-to-1? No, 4.1 pip stop loss. I don't know what's wrong with me today. It's been a while. I'm a bit rusty on this. So yeah, of course, even just like targeting a high, just for argument's sake, still a 6-to-1. That's pretty decent. But we have our main target just above Asia high to the left, if you remember. That really nice liquidity there. We know that's the SMT. Should we mark it up? You know what? Let's just mark it up. So that's like your extreme SMT at the top of the leg. Not interested in that. Let's see what price shows though. Just going to move it to the right. We can see it like that. Oops. So we have our mitigation ready. Now it's just a matter of waiting for the pullback. And let's see what price shows. Ooh, it just missed. Okay, so that could just shoot from there, to be completely honest. So maybe it's a mistrade. We'll see what price does. Ooh, okay, we're getting a pullback. Also, equal highs. Nice. If we could get into our mitigation and continue, that would be really nice, because now we have a fractal liquidity target to the upside, which is, of course, the equal highs. Perfecto. So, oh, nice liquidity buildup to both sides, but on the fractal basis to the downside too. That would be really nice. We've of course induced it. Oh, so at this point already we're just short of it anyways, but we can already identify a EDM because it's already pointing lower. If you can see that, maybe pull that up a bit higher. So that was our POI. Mitigation, already we formed the EDM, so we can already mark that as an EDM because it's already formed technically. It's just a matter of now if we tag in, so tag into our trade or not. Oops, hesitating. Okay, interesting. Nice. So we have tapped in, now we just wait. Does it continue? Nice. Would be at break even at this point. Oh, lovely. Lovely. So we get really nice liquidity. It's just the same cycle again and again. And of course, our target's up there. Almost at New York Open, what can we potentially expect? Of course, continuation. Now we are, how long? Well, to be exact, 13 minutes away. It really depends. Like, are we going to instantly choop that New York Open gives us a reversal? The chances are we will continue in New York Open towards our target there. Now, let me just mark that up. That was not smart of me to. Let's just take that line there, and it's Asia high. Has to be capitals. So our Asia high target. So the chances are we may continue. Maybe we get a reversal in London close. Just depends. Or continuation. We need to see price action too. So let's see. Okay, New York's already started. Oh, triple top. Nice. So triple top. That's crazy how many people would sell. And now they get chooped. Can we get a potential entry? The chances are probably not. And is it really justified at this point to take, say, a mitigation? Again, probably not. Of course, we can mark up zones like such here and wait, but again, it's already chipped a bit high and we're close to target. So yeah, probably not smart. And we have some really nice entries here. We already got 3 entries, all bullish, retail heaven forming, gave really clear entries. We had 1 really nice pullback trade. If you're a bit advanced, possibly that as an inducement trade, still get the mitigation. It's just your risk to reward type of thing. It's not really nice. And it just missed short of this mitigation. But generally speaking, really nice London mitigation after the inducement. And the only thing is of course, the price action isn't very nice. You have to cancel out those candles. But of course, you do that beforehand anyways. So yeah, some really nice entries. 3 stacked entries, 1 pullback trade. And now we can potentially continue. So at this point, New York Open may not necessarily present something really nice, but we had a really nice trade that did present, just not in New York, I guess. But yeah, now we're close to target. Oh, is that the smart money trap? Ooh, smart money trap reaction. Lovely. How many people would take that as a mitigation? Let's see how much that sustains. Oh, not much. Okay, that didn't last long. But yeah, that was a smart money trap, I guess. So yeah. Interesting. So we've technically reached target. Of course, I just placed the target just above the high because we don't want triple tops, obviously. So yeah, at this point, could we get something in London close, maybe? Let's just see. We might get a reaction a bit bearish. It just depends what price action we get. Could also get mitigation of that, potentially. As your continuation. Oh, that's nice. So that is liquidity. Yeah, so I do like that for continuation still. I tag into the mitigation. It's kind of, I mean, that's pretty nice EDM. Don't know if you want to classify it with the price action in between, not price action, this liquidity line thing in between. But nevertheless, it has got the characteristic. Of course, that's liquidity, hence why it looks a bit weird. But yeah, that's a really nice cycle actually, with liquidity to the downside, get the mitigation, EDM, and of course we still have a target to the high. Now the only thing here is again that matter of the justifiable thing, where not thing, risk reward, where if we just create a new high, it's pretty shit. So you probably don't want to do that. Maybe our mitigation of that is a bit better, but nevertheless, it's just for understanding purposes. We will almost be heading into London close 2 in half an hour. So let's see. Oh, it missed. My bad. Okay. Okay, yeah, that's not clean. Nevertheless, you could take a loss there, but again, it wasn't the clearest, to be fair. But yeah, nevertheless, cycle-wise, you get your vectors. Shame it missed there, though. That's fine. Maybe take a loss, maybe not. At that point, it's probably a bit much anyways to take more buys. You reach target, but this is just end of day price action inspection. I would take that initial mitigation anyways. That's not a nice risk to reward that we did. It was like a 2 to 1. That's really bad. Just to create a new high. So yeah, nevertheless, it wasn't crazy. Just a zone. Wait for the zone. Wait for the mitigation. Didn't provide the mitigation. That's fine. Maybe now we get a mitigation, but again, I don't think risk to reward wise, it's still going to be any better. So yeah, you can see. Let's see a bit more price action. Okay, so that is London close. Let's check different time frames, see what price action looks like. Okay, it reacts from there. You trap essentially. Okay, so we do get a let. That's nice. What am I doing? Putting a risk reward tool there. So a let. So essentially that is really nice to take a mitigation. The only mitigation really is that. Just not the biggest fan of the inducement low for what it induces. Again, this is us, whatever, for argument's sake. So we have our 5M let reaction. Oops. 5M let. Take a mitigation. You could call it the London close, I guess, mitigation. It's just a few minutes after. Nevertheless, maybe it creates a new high. Probably a bit better justified, but yeah, you're kind of stretching it when you trade a London close trade anyways, especially once you've reached target. So yeah, form a new high. It's okay. Not amazing, but it's okay. Of course, you would be break even like right there. I would be based on that price action, because the likelihood is we come back down and induce again. Ooh, what is that? Oh, almost a triple top type of thing. Okay, yeah. So new highs taken. Again, that's your London close trade. That one failed essentially, but again, didn't have the characteristic that we got here of a mitigation zone afterwards. You know what I mean? After the initial mitigation. So yeah, basically every trade is a continuation. So I hope that made sense to everyone, and I hope you guys did enjoy all of the bullish trades, how they presented very clearly. They were all very nice and different though. I really like that. We had the let here, we had the magic manipulation minutes and the let. We had the inducement trade here. That's tricky, I'll be honest. Yeah, a bit more advanced, and you don't get the re-entry mitigation, unfortunately. However, that's you missed that. That's fine. You can take the EDM over here, where we get another fractal play there of that liquidity, inducement low, 1M EDM, target to the high side. We had the equal highs built up, and then yeah, continuation. Possibly take the London close. It's a bit stretched though at that point. We've already reached target. The only reason why we would take that is we had that trend line type of formation of liquidity. But yeah, hope that made sense. I mean, it's pretty nice actually. Not clear, I guess, in the sense if you expect up and down movements all the time in the market. In this case, we have our continuation. Everything presented was continuation other than that reversal, which was also really nice. But yeah, it's important to understand retail heaven and not to force reversal trades by choosing random POIs to the left. Like, it doesn't make sense to choose these POIs when we have a really nice liquidity to the high side, also in Asia, Asia high to be specific. And at the same time, we had all the confluences presenting to us to take the continuations, and like 3 or 4 times it presented. So yeah, I hope you guys enjoyed that. If you have questions, of course, let me know. Still have the beauty of the day chat available, of course. And yeah, I hope you guys enjoyed the session. It's a nice one to come back to. Yeah, retail heavens. I'll try to cover more of them, of course. I think it's quite important too. And yeah, hope you guys enjoyed, and I'll catch you up for another beauty of the day soon.
Alright, let's get it. So, let's see on the 1 hour. I've had a nice little inducement. Yeah, so it's been induced. And then we have obviously this build up to the side. Well, actually, inducement to downside. Okay. Let's get this. Okay. Okay, so this is like the inducement we're trading away from, and I think this is the target for this week, to be honest. Okay, so we've got MM1 in 15 minutes. Okay, next up is EG. Okay, so I think this has come into... Yeah. Ugh, annoying. Annoying that I'm not in. Okay. Anyway, we had this like build up over here. There's a few, so some type of age of whip source, we expect the load to get taken again. 1, 2, 3, 4. Okay. Not gonna look into it too much apart from that. Why? Okay, so this one's quite easy, I think. It's gonna likely come for these. Let's just put an alert up here. Perfect. Okay, so that's a nice equal load. Let's just look on this one. Okay. Yeah, so I basically just really want to look for continuations here. Okay. EU, so I'd still be classing these as equal loads slash liquidity, especially now that it's been showing for a while. Okay, so potential for this to be high of the week, especially with the way that it induced, right? Like, nice vector candles. So where did we actually come in? Okay, so not really anything there. Okay, obviously we have the build up either side. Still got this M5 right here. That's obviously not a limit. And then this is likely SMT. Then yeah, we can really come down, but first target would likely just be something like this. Okay, GF. Okay, GF. We're not even touching GF today. Wait, maybe on an intraday. No, we're not even touching GF today. DJ. Okay, so DJ is a little bit thirsty. Oh. So, obviously we've got this liquidity level here. So okay, that's gone. Take the high. This is obviously inducement low. Right here. There we go. Okay. Last but not least, GU. Okay, so now we may go into a bit of a build up. You can see we've whipped high, sorry, whipped low, whipped high, whipped low again. I'm going to put an alert here, and we're actually going to look to sell this back down. So this would be the zone that I'd be interested in. And then if we're selling it back down, just to see what's here, obviously not going to take it straight off of that, because that would be pretty stupid. Perfect. Okay, perfect. So, AU we want to look for cells. We've got this. Got this point up here. Boom. And then we've got this point right here. Boom. Okay, so let's begin to work out. I think this one here is better, but I'm going to put alerts both on this and this. Okay. Okay, so we're just going to, we've got a limit on this, and we're going to look to, sorry, my mind's blank. We're going to look to mark execute if like the limit is not good, so it doesn't get tagged in. GU is coming for the high. The RR is not. The RR difference isn't huge, I don't think. It is, but. Just want this little hole on the left to be induced. There we go. Now, are we gonna come straight in? Okay. Right place, and I'm deleting my limit. Okay. Right, there we go, we're in. Okay, now I need to decide. Oh. Where's my entry? 613. 613. Okay, would attack my limit anyway. Could have got a bit of a better entry, but I won. Nice. Alright, so where do we want to break even? We'll monitor this right here. And then have an alert here. Final one down here. There. Alright, be right back. mean, to be honest, could stack in another entry, I think. But let's leave it for now. Actually, I think I might. No, we'll go with it like this. Eight. Nice. Okay, so we're going to break even on that top position very soon, because as you see, we're just building liquidity here. Not building liquidity, but there's no reason for us to come back up. So once we give like, probably take out this point, we'll go break even. Okay, so this is going to be break even on the top trade. Break even. Okay. No. Very nice. Alright, so with that, I'm probably going to go break even on this other one. Break even. So if we look at this, let me just bring this back to trading view. Oh, sorry, let me show you break even. So break even on those two anyway. Right, so now let's look at this. So can it come back? Obviously it can come back, fill this M5 and then continue to drop. But the only thing I get a little bit worried about is how many times we've come back. So if you go up into this, just a little bit worried about the possible like liquidity build here. So if it does come back, it would likely just tap this entry out and not this one. But this has moved away enough, and maybe it will give me enough confluences to take another sell here, but if not, it's not the end of the world. Yeah, so that is I don't want to say it for today, but we'll see what else presents. We shall see what else presents. Because honestly, AU could come all the way down to here. Let me just put some alerts. Alright, nice. I'll catch you when we partial, because I will be partialing this, I'm pretty sure. I just need to decide exactly where. Alright, but nice one. Catch you all in a bit. Okay, so here we may look for a entry. I think what we're going to look for is possibly like, so let's say that's like the M5 candle. Next M5 candle goes like this, leaves imbalance, and then we come up and we fill this M5 candle like that. That makes sense. And then again, selling to down here. That's probably what we'll look for. Since I'm in twice up here, I'm not gonna like force an entry or look for like a really refined one. I'm happy getting like a little bit of a nice safe one. But yeah, that's it for AU. EG, I honestly expect EG to go lower and take this low. EJ, again, we're still just waiting for these highs to get taken. I'm pretty sure they will today. EU, I am waiting for this low to get taken here. GF, we're not touching. GJ has just taken out this high. Okay. Okay. GU, I am expecting. GG is a bit interesting actually, because initially, like I said, I was expecting an Asia whipsaw and possibly us to take the highs. So until we take high or low, I'm not going to do anything with GU. I'm just going to let it be. Yeah, that's pretty much it. Okay, so let's seeing exactly what happened. I'm going to limit this right here. So let's go on to M5. M5 limit. Boom. And then 1, 2, 3. 3. Go. So. Boom. Okay, let me show you the limit. Limit is on. Honestly, this might not come back and tag us in. Once we come to like this low or this low, I'll take it off. Okay. So now let's go back onto trading view and let us see. Again, I think at least here is the target. I think this will be like the first zone that we get interested in. I'm gonna put it down here though, as this is like the, I think this is like the overall target. Edit, boom, apply. Okay, very nice. And then, yeah. Pretty much exactly what we wanted. Okay, nice one. Yeah, EG's coming up. What a surprise. Wait, where is my actual entry? 514. 14. Is that green? No. No. Okay. 514. Okay, honestly, we may not get tagged into this, but it's not really the end of the world. Perfect. I don't really see anything else that I want to trade at the moment. GJ is going to be interesting, just not yet. I don't think it'll be interesting yet, but maybe like today, later today, maybe, possibly tomorrow. We'll see. We'll see. Perfect. Okay, so I am. Oh, I'm in on AU. Nice. Alright, so we're just gonna go break even once this low gets taken out, likely, and target is gonna be down. Maybe on time 15. Yeah. So which one's the one with the wrong target then? This one is, okay. Alright, perfect. There we go. Nice. Alright, so where did I get tagged in? The 1-5. 1-5, there we go. Alright, catch you all in a bit. Alright, so we have just gone break even here. So if I just show you on trading view, so the reason why is now everything's filled up here, and likely there's a chance we come back to this, but it's not really something that I personally want to like play if we do come back. So break even there, entry is obviously right here, here and here, and then yeah, I'm gonna possibly look to partial here, depends what we do, but yeah, that is pretty much everything. Also, just to update, EG has taken out this. Not sure if this is actually the inducement. We may come higher. I think it's quite likely that we do come a bit higher, but yeah, it could possibly be. So we may play something like that, maybe around New York Open, New York trap time. EU should come and collect this low. GF we're not touching. GJ looks nice but not yet, and then GU has taken this low, but I think we may be trading away from this inducement right here. So possibly this is all we need to do, come and collect these equal lows, but we may come lower. So for that one, what I'd personally do is I will wait. I'll wait, let it play out a little bit. There's no rush to get into anything. Yes, that is pretty much it. So AU sell here, here and here. Possible partial here. Overall target is, well actually overall target is like down here, right? But I don't think we're gonna get there today. So like we'll see where we get within like New York Open, New York Trap, but either like here or here. I do expect this to get taken out, but just because I expect it to get taken out doesn't mean it will. And yeah, that is it. This is going to be an example of just playing away from like a very clean trap. When you've got a very clean trap, you can just play away from it. And yeah, that's it, you know, just stacking these cells. All right, perfect. We'll be back in a bit. Close. Oh, sorry, I'm closing these positions. Okay, so closed. Alright, there we go. So we've partialed 50% on all of these positions. So let's see what that was. So first position was this. Boom, add 0.3. Boom, boom. Okay. Next position was this one right here. Add 0.3. Boom, boom. Okay, and final position was this one right here. 0.3. Okay. So what's that? 4, 5, 13, 20. So just closed 10R. Gonna let the rest run. Perfect. Alright, so I think we're actually just going to TP at Asia low. So I'm just gonna move all of them since it's quite late in the day. And yeah, same, edit, boom, apply. Edit, boom, apply. Okay, so we can sit and watch this. Hit TV. Should all be clear. Perfect. I know this is a little bit delayed, but they hit TP. Okay, that's it for today. We'll catch you all in a bit. Alright, so that's obviously the episode of The Edge. Let me know which one you guys prefer, because I think the last one was like a little bit more raw, and this one's obviously been like cut up a little bit, but obviously the truth of trading is closer to the last one, where, you know, it's a lot of waiting, it's a lot of sitting around, but obviously I'm not sure if that's what you guys want to sit and listen to, but that is obviously closer to like the truth of trading. So just give me a bit of feedback, let me know which one you prefer, and yeah, I'll catch you all in the next one.
Hello, everyone, and welcome back to another episode on the Beauty of the Day series. So today we have got GBP CHF, as you can see on the screen. I don't believe I actually covered this in the August series just yet. I do believe I actually covered a variety of different pairs at this point. However, we are back with GBP CHF, and you probably know, if you've watched the previous episode, this was a reoccurring beauty of the day, and it's back again. And yeah, as always, we shall get straight into it. So starting off, we always have Asia box ready, and we will be looking to the left to identify some potential movement, what happened, mainly to do with the inducements. What kind of inducements did we have the previous day or the previous days that can help us understand direction as well as potential cycle plays. So looking at the price action, we can already see the previous day had a pretty nice inducement. Just gonna go 30M. Okay. Okay, 30M. Okay, so looking at this, we can already see price has taken out quite a lot of liquidity here to the left. So the inducement is to the right upwards, took out all of this liquidity that was being built to the left. So we can already see that this is some sort of major inducement or medium inducement, relevant liquidity. Asia was taken out in the same day over here, and it took out this previous high. So yeah, some sort of major inducement as it took out every bit of liquidity here to the high side. So let's just mark that up as major. Ooh, what am I doing? Major inducement. Okay, can't spell. Don't know what's going on there. Okay, major inducement. So as we've had a major inducement, price has already taken out some levels of liquidity here. We do have more bits remaining. Just go down to 15M and see. Well, let's see what we see. Okay. So this point here in the previous day did mitigate or whatever something in here. So I can already see that's my one target is taking out this low to the left. Okay. So, okay, so in terms of this rest of this liquidity, that is also some sort of target. The only thing I'm concerned about, let's check. This low did take out this liquidity. So we have to understand this Asia liquidity was taken out here in Frankfurt the previous day. Maybe the little arrows help a little bit better. So we may not necessarily induce as low, but we may play around within these two zones right here in this gap. So I will just mark that up anyways, but I'm going to write yesterday's low. Maybe within that there is also a smart money trap of some sort. So let's go on 5M to see. Yes, so 5M does present a smart money trap. We're not going to refine it to 1M because if it's a trap, we shouldn't really care. So yeah, smart money trap to the downside. So that's level of liquidity. Whether it's an FFS or smart money trap at this point doesn't matter. But we've got our liquidity targets based on smart money, yesterday's low, and we can, of course, see Asia. So Asia has this build-up type of liquidity, lows, these highs. So possibly trading above only to go lower. You even get really nice liquidity levels here. I'm just going to mark it up as one average line. Okay, so in terms of this, I'm not too keen of it as a POI if we trade. So let me just start from what I'm expecting is price to then continue bearish, as remember, we had the major inducement here to the left. So I'm expecting price to go bearish. Liquidity-wise, there's only really liquidity in this zone around here, which is yesterday's New York post-London close and Asia liquidity. There's nothing really going on. There's no POI or nothing. So what I would really expect is just for the entire liquidity levels here to be taken out, which is all of these reactions, and a trap. If there's not a trap, that's also fine. Like, I'm not going to take the initial reaction anyways. So whatever it is, I'm just going to wait. I will mark it up as smart money trap, as I'm not keen on a reaction purely because it didn't really do anything. It's just whatever, mitigation is doesn't really have significance. I know you could say, well, if we induce liquidity into POI and then whatever, reversal, but I'm more keen on, I want to see an inducement. I'm not really caring too much about where it occurs. Then I want to see the reversal kind of characteristics to then take a mitigation. And that's the more cleaner ways of entering rather than guessing POIs. It's better to take a mitigation after an initial inducement in the moment, not like the previous day. So that's like a little tip, I guess. So currently we're trading quite high in the Asia range as well. So likelihood is we will continue potentially. We have our target there to the high side. Again, it could play around anywhere in this zone. So from the line down to this trap zone, I just want to see a reaction of some sort to take sells. So let's speed up a little bit on the 5M. And just another thing in terms of can we trade into the inducement, which is your fast and furious trades? Potentially, yes, we can. So that's another cycle type of play, because that way you've got a build up. Step number 1, inducement, which is inducing the build-up. Number 2. Number 3, remember, this is not number 3 in this cycle. Number 3 would be after this inducement that we have is a mitigation after. This is just taking a POI with relevant liquidity and, of course, the characteristics of the fast and furious trade. So I'm just going to write F and F. That should make sense. And F. So your fast and furious play. And if we do get that, we will trade into there. I just want to see if price does react. Okay, it's doing like triple top type of stuff. Currently, Frankfurt is still have potential. Still, okay, we don't have potential. Okay, so that's crossed off. So as you can see, the F and F for fast and furious is not going to be in play anymore. And this is why you have to use the momentum mitigation aspects, which is what happened first kind of thing. So because we didn't react in here, that means upon reversal, this is no longer valid. So yeah, we need to scratch that one off now. Let's get a nice fancy X. Just to make it clear to you, we don't want this. So now it's an X. And yes, it is indeed actually a FFS over here, not a smart money trap. It's very annoyed people. We're getting Vex Candle, so I like the characteristics it did to actually take out this liquidity with speed. At the same time, we're still building up more, whatever, trendline liquidity. I know it looks like a bit of a zigzag pattern, but yeah, I could have drawn it maybe a bit nicer, but I'm just drawing up fractal elements too. Now is the matter of if we reverse here, what does London give us? Maybe London induces this point, or maybe it's a cue for London to then reverse, as opposed to taking out that last little point. So, okay, so London open has induced high. I'm going to go on 1M because I want to see a bit more of what's going on. Okay, so from what it looks like, yes, that is indeed lovely. I didn't see this, but if you're marking up on the 1M, that would have been a smart money trap. But as I mentioned, this to me was absolutely nothing anyways. But it makes sense for understanding purposes that that's your smart money trap for retail traders, hence why this little element over here gets formed, which ultimately becomes liquidity for buyers too, that take out whatever breakout trader type of things. So that is actually lovely as well. Smart money trap. For me, it was target anyways. Now, London is not showing any reversal signs. As you can see, it's not giving anything. So let's just wait and see. Okay, I'll be honest, that's not a very nice reaction at all. Okay, so this might be a tricky one. So in this case, where we don't even have an extreme mitigation, if price was to reverse, I'm not going to take some sort of random, like, extreme. Let's get a pen to show you what I mean. So I'm not going to, like, aim for something like this and assume it's an extreme, because it's actually not an extreme off the inducement. Technically, this candle here was your last bit of an inducement. So I'd rather wait for price action to give me a nice POI, and we take our continuation trades like this or something, an EDM, and let characteristics, which, where are they, by the way? So I should probably get my entry helper out, but it's not relevant right now. I haven't found anything anyways. So yeah, this is where I would use the entry helper to my advantage because there's no extreme. So it's going to have to be an entry helper based entry. So let's see. Okay, so we're getting a really nice reaction actually. I'm just going to move that line. It's a bit annoying. Okay, so not seeing anything clear. Let's switch to 5M to see what we have. Nothing on the 5M. So let's see again. Okay, so nothing's clear. We're just going to wait. Targets haven't been reached yet. Fractal one here has, as you can see, that's induced. Now it's probably just going to mess around a bit, create some build up before we actually find a nice POI. Okay, so that's a lovely reaction. And it's pretty evident what that's going to be. It's a smart money trap, of course. Why is it a smart money trap? Because price has completed its target to the high side. So this no longer makes sense to take a buy. What is your target really? There's no like confluences or anything. So yeah, we want to trade away and look for sells. The only thing here, I like that what price has done here. It had a nice movement, bearish. So it gave the intention. Only thing is, when it comes to a POI, is we kind of have two areas. So we have this one and we have this one. So possibly what you may do is combine the two and yeah, wait for whichever one it does mitigate. I want to see on 5M if there's also something. Just going to have to clear the chart because I can't actually see. Okay, so 5M is nice because you can see it's a POI there as well. So 5M and 1M does give us the multiple time frame analysis we need. So that's lovely. Let's check the SL of what that could be. 4.3. Okay, it's not too bad. It's not bad. Is the entry helper showing us? Okay, the entry helper looks really interesting at this point because it's going very strongly bearish. Makes sense with the candles. Okay, so there is possibility for a let. I just kind of, yeah, it kind of looks very interesting at this point, but it has crossed over from this point. Maybe upon a pullback of some sort, it taps into the equilibrium line. So I'm keen on seeing a let or let characteristics as we approach. So maybe let's just wait and see. Okay, that's an FFS. What is that? That's arguable because you could say it's a smart money trap. It did give a reaction. It just gave a very a 1 minute reaction, you could say. So a very bad reaction. Okay, so at this point, looking at the entry helper now, you can already see it's given a much nicer reaction where it looks a bit nicer that it is potentially approaching the line. So that does make sense. We are outside of London at this point. Maybe, where are we in MMM? Let's mark up the magic manipulation minutes line. Oh, and I did actually take off some of them. So let's put them back just so we can see an overview afterwards in hindsight. Okay, so MMM looks pretty decent. Either way, if it does reverse around this timing, it's going to be around MMM1 anyways. So that's lovely. It's a mitigation of London, the only mitigation we have. It is a combined zone, but nevertheless, it's still pretty decent. So let's see what price does. So you can see it's almost a lead. It's just a little bit off. So let's see, zoomed in. Ooh. Okay, that's an interesting one because it was a let. It just skipped a little bit and it came back up. So now it looks like it's actually mitigated. Nevertheless, I still consider it a let. It's still a let. So it's a 1M let. And wait, timing. If we look at timing right now, I just had my line up. We're basically at magic manipulation minutes. So regardless, it's going to be an almost magic manipulation minutes. MMM1. Lovely. So I'm going to remove this line. So we've got so many confluences here of the entry helper, timing, the only POI remaining, smart money trap liquidity, alongside our target. We still have targets to the downside. So this is actually a lovely trade. And this is why you don't need to always stress on taking some sort of extreme entry. The risk to reward, let's just actually get that marked up. Even just to Asia is a 7-1, and that's your minimum target. If we scoop lower at the smart money trap, that's a 10-1. So I don't think you could go wrong there. Yeah, it's pretty nice as a continuation trade. So let's see how price does react there. Okay, so MMM has approached. That's lovely. Now it's potentially going to form our continuation. See, this is not even a smart money trap's just blown through as a FFS, but it was only relevant to trade into the inducement, which occurred already. So let's just wait and see what happens. Ooh, so we're getting vector candles as we go into Asia low. Try to get more chart space on the screen. Okay, so first target, which was, I believe, a 7-1, that's already reached. So it's pretty lovely. Timing is, yeah, nothing relevant, but that's a pretty quick reaction. About half an hour, maybe, or 40 minutes. Now it's the moment of truth of this smart money trap zone we had in yesterday's low. Let's see what price does. Okay, that's definitely a smart money trap. It's giving a reaction. And now it's broken through yesterday's low, not Asia low, sorry. Okay. So at this point, your target's reached anyways. At minimum, I did have some the line here, which was quite far back off that low to also be induced, as the cycle was now complete and we're trending bearish. I'm just gonna go 5M because I'm not really interested in anything technically your beauty of the day was there, but let's just give a very quick overview analysis when it comes to direction. And let's see if there is anything that we can play around with. Okay, so that target has reached. Maybe we mess around a bit, create a build up at this stage. MMM2, so maybe this is a catalyst for some sort of pullback. Let's see. MMM2. Okay, that's definitely pullback. Let's see if there was a mitigation. Okay, so that was an initial kind of mitigation it missed. Takes out the build-up that we mentioned. This build-up over here. Maybe plays around in this area. Mitigate something. Let's check 5M. Okay, so it could potentially reverse within this zone. Just going to mark it up as an overview very roughly. So 5M zone. Okay, so induced a zone instead. That's fine. Not interested. It created liquidity anyways. Let's check 1. Okay, so that does make sense because upon the reaction, it gave liquidity. And how do I draw this liquidity? Like such. Perfect highs over here. Then price induces high. So timing, it's pre-New York or lit New York trades. Induced a zone. So this does make sense in that aspect of things. This is why you don't take these mitigations to the left randomly. You'd rather wait. And even if when you waited for this reaction, there was nothing to enter off anyways. You get perfect liquidity that you can see, so you should expect price to induce high one last time, and only then you execute. In this case, there's quite literally nothing to execute if there. That's fine. We can't like choose how price action works. What does this mean? What is timing? 10 minutes till New York trap, so of course, this will be a smart money trap or FFS zone. Okay, smart money trap. Because now it takes out this pullback, which took out these fractal bits of liquidity and created in order for price to then move. So, okay, let's give a reaction. So that's a smart money trap. And it's tubed. Check 1M. Is there anything potentially worthy of entry? Okay, so at this point, whatever, chips around, possibly takes out this level of liquidity, because that's horrible. There's nothing there. But yeah, let's just speed it up a little bit, just for an overview. London close. Okay, looks like it's starting to induce high. What is the 1M doing? Creating liquidity. So the chances are, of course, we're going to induce the high at minimum. And then we can call it a day. So yeah, that's pretty amazing. So I hope you guys enjoyed that. Your beauty of the day, as mentioned, was the MMM1 trade, which was the one I'm let. Mitigation of the London open price action after we had our inducement to the left, coming outside of Asia, as well as these trap zones, liquidity, get our reversal characteristics. And then what we get, which is lovely, is timing-based reactions. So just look at this. The pullback was MMM2. I mean, this actual move to then take out New York was not a timing-based reaction, but inevitably it makes sense it's going to reverse. Would be very nice if it also was New York. But New York actually then took out this reaction of a pullback. So New York open, or New York trap. Let me just write trap in case you get confused. New York trap. And then London close gives the catalyst to take out this structural level of liquidity, which didn't serve too much, but a fractal pullback. This was the MMM2 reaction. So yeah, it couldn't be more lovely. Your London open reaction, MMM1 mitigation, MMM2 pullback, New York trap, real move, London close just chops around and takes out this high, building liquidity as we potentially now enter Asia. So I hope that was very clear for you guys to understand, and I hope you enjoyed that as well, and how sometimes the days may not look clear when you're looking for an extreme all the time. Don't always aim for extremes. Aim for the combination of everything. So I hope you guys enjoyed, and I will catch you up tomorrow with another Beauty of the Day episode.